Good morning, everybody. I will give it another maybe 5 minutes to give people a chance to get in the room, and we'll get started. Can everybody hear me? If anyone want to just give me a little chat or come off mute, I just want to make sure I'm heard. Thank you, Joseph. Thank you, Rashonda. Thank you, Nafisa. I'm gonna get started at 9:05, just giving people a chance to get in here. We're supposed to have a full class of about 30. And we only have about 8 people in here thus far. For those that are coming in, I just letting you know I'll get started at around 1:05. I'm giving a chance for everybody to get in on the Zoom. I will get started at 1:05. Okay, it's it. It's 9:05. I'm ready to get started. Welcome to today's VITA training. We will have Advanced 1 and Advanced 2 today. Advanced 1 is basically basic law. Well, I wouldn't say basic law, but it's law stuff like advanced laws. We're talking about more theory and practice. Advanced number two is more software. We'll work on a software and talk about how to utilize TaxSlayer. My name is Desmond Hudson. I'm an enrolled agent, which is a fancy name for a tax nerd. I took a test to learn how to do taxes and be able to represent people all over America. Uh, I am your instructor for today, and I'm happy for you guys to, get on camera. So if you can, if it, so I don't look at a blank screen the whole time, at least I can see if people are understanding. That would be nice for me for as your instructor. I'm not forcing no one to, but it's helpful. So I can just get a sense of people are understanding and that there's someone there. I'm not just talking to a blank screen for 8 hours. So I will have some breaks in here as much as we can. I know sitting in a Zoom for a full day can be tough, so I will provide some breaks. Feel free to take yourself off mute if you have a question. Feel free to drop it in the chat. I'll try to catch it in the chat. Sometimes it's hard when you're presenting to make sure you see something in the chat. So if you have a question and I don't address it that you put in the chat, just come off mute and stop me before I go into the next topic. I do have a question I have for everyone. I want to know how many people have completed um, basic certification. I mean, you know what? Let me ask you it a different way. Who has not done basic certification? If you have not done the basic certification, just say something in the chat. And I'm asking it so I can determine how much I need to go over in advance. Some of the stuff in advance is a review of what may have happened in basic. And if I do not have to review that, I won't. So I'm curious of who did not have a basic certification. So we're hoping that most people are doing basic and then come to an advanced class, but it is possible for some people to just jump right into advanced. So that's why I am asking this question. So I have not seen anyone say anything that they have that they're jumping right into advanced and didn't take basic, and that's good for me to know. Oh, I got somebody. Hi Desmond, do not take basic. I've been certified at advanced since day one. Okay. Someone said I did a basic training. I just haven't taken the exam yet. Okay. I have not. All right. So thank you. So now I know that there's things that I need to make sure I go over that we would have went over in basic and not in advance. So I want to split. All right, cool. So it seems like I have enough response to know that I should do a little review on what we did in basic. All right. So let's get started. We're going to do today is really about advanced scenarios 1 through 6. And like I said, the advanced scenario 7 through 9, which we're going to do in the afternoon, is where we do the TaxSlayer. And I'll make sure you guys can get into that. If anything, while you're online on Zoom, make sure you have access to the link Learn certification. If you whether you took the exam or didn't take the exam, I would highly advise you to be able to get into the system. We're going to be going over some of the questions today. If you follow along, you can probably input some of your answers as we go along. I'm not giving out answers, but I am talking about the scenarios, so it may behoove you to kind of like follow along as you take the exam. If you have the book, you can do the same way. You can pull it up on the IRS website, the 6744. I'll get to that in a second if you wanted to follow along. In addition to that, you're going to have to get into TaxSlayer. And like I said, we'll do that in the afternoon. All right, so let's get started. I'm going to go a little bit over the volunteer standard of conduct because that's why I was asking about how much have you done. Talk about the 1040 in the Schedule 1. There's a intake sheet that we should be aware of. And yes, we're doing it together, the advanced scenarios. And we're doing all the scenarios together. I'm not, like I said, I'm not giving out answers, but I'm reviewing everything together. If you pay attention and follow along with me, you should be fine. For the scenarios that are in the computer, I can't.
Why is that what you want to do?
Say that again. Tresca, were you talking to me or you just was off mute? You might have just been off mute. I'm going to, I forgot where I was at, but I'm going to review some of the common tax forms, go through scenarios 1 through 6, and then do TaxSlayer. All right. Let's see here. So this is a PowerPoint. Some of the stuff, ways that you can go about this class. We're going to do a couple polls to just make sure that we're all understanding. There is some in-class version. So this is a full day virtual, but there's also a full day in class. This is the advanced. So if you want to take it again, or you just want to get some more practice, I would advise you to go to an in class. You get a little bit more hands-on. So, check that out. The resources, the 4012 is like the Bible for our space, for the clientele that we service. It has like a lot of good scenarios in there to help you understand, like worksheets and decision trees to help you come to the best answer. The 6744 is the test booklet. That's what I was saying earlier. You want to have that ready. You can actually pull this stuff off the IRS website. If you type in Pub 4012 or Pub 6744, you can get an Adobe document so you can follow along. And then a 4491 is like a student training guide, which goes even more detailed than a 4012 and talks a little bit more about what's new and how some gives you examples of how some of the different tax law works. So I think that's a really good book if you want to nerd out on some of this tax stuff. Um, some of the tips that I was saying earlier, make sure you take some notes and just make sure you're paying attention because while I don't give out the answers, I come pretty close to it. So just make sure you're paying attention to what's going on and you should get a good sense of what's going what you need to understand and know. Record all your answers. If you're not able to get into Link Learn certification, you can at least go back in later and put your answers in. So if you use the 6744, you can record what you think the answer is and put it in later in the software as you get certified. Ask questions. I do not be shy about asking questions to make sure I know your understanding because I don't want to gloss over a topic that you just did not pick up, and I can explain it different ways to make sure that you comprehend what's going on. All right. Any questions? Because I'm about to jump right into volunteer standard mechanic. Any questions? Any questions that anyone may have before we really get started?
Desmond, this is Karen. How are you? Happy New Year.
Hey, Karen. Happy New Year's.
Good to see you again. How do we get a hard copy of the publication? I joined a little late, so I don't know if you had covered that or
Nope, nope,
not.
nope. So you can get it online. So I'll jump over to just a web browser. Now to get the, if you're actually talking about the hard copy, that's something you probably have to go down to the main office and ask for. But
Okay.
on Google, if you put in Pub 4012, right, you'll get it, right? So one of these are like a Pub 4012. Here it is. Well, that's 2021. I can change this to probably say 24, maybe. Don't want to say that. Let's go back. Let me go back to the Google. Let's see what the first one was. Oh, there you go. So the first, I'm sorry, I should have clicked the first link. So this is your 2024, and this is your 4012. So you can use this. I think you can click on it and go to the section. So if you was in your context, it's kind of smart where if I want to go straight to dependents, I click on dependents, it takes me to my dependent section. So that's the 4012. The other tab I would say have open up is a 6744, which is your test booklet. So today, if I scroll down, if I were to say I am doing advanced scenarios, right? So I want to go to page 75. So scroll down. Actually, I can just change it up here to 75. And now let's go down a little bit more. 73, 74. Here it is, 75. So here's the questions. So if I was, what I would do is probably download this into my own personal Adobe so I can make note of whatever we determine the answers are, what you think the answers are. But this is the hard copy that you'll be able to get. You can do the same thing for that 40, 44, 91 booklet that I mentioned. So yeah, I would say if anything, have the two tabs up, 6744 and 4012, or like I said, download them on Adobe and just have them up and ready to rock and roll, and you can refer to them.
All right. Thank you.
Yep. Um, okay, so then let's get right into this. So the volunteer standard of conduct, this is just a basic understanding that every volunteer has to have what it means to be a volunteer. You're protected underneath the Volunteer Protection Act. All of this is saying is follow the instructions. Don't do things you shouldn't be doing. Do not take any cash payments. Don't solicit somebody's business. Make sure you're not preparing false tax returns. Um, don't engage in anything that's just dishonest, disgraceful. Be a good volunteer. Treat all taxpayers with professional courtesy and respectful manner. If you don't do this, you can get kicked out. That's the bottom line. So that's the key. This be, we can't take cash. Once you take cash, you become a paid preparer. And when you're a paid preparer, you're underneath different rules. You're no longer a volunteer and you're no longer protected under the Volunteer Protection Act. So do not take any payments. When you're protected under the Volunteer Protection Act, you can make mistakes. And I'm not encouraging or want anyone to make mistakes, but if you make a mistake, you can't get sued. If you start taking payments, a paid preparer can get sued for the mistakes that they made. So be mindful of that, because once you start doing that, you open yourself up for a lawsuit. So not only can you like lose your status to be able to volunteer and get removed, you can also hurt the whole campaign for working family. Like they can take away some of our resources and deactivate some of the things that we have that we need to be a good site, right? So just be extremely mindful of your behavior because it doesn't only hurt you; it can hurt the whole program. So that's really what the volunteer standard of conduct is. Just is there's a standard of conduct that everyone must uphold, and this is a test that everyone has to take, and everyone has to pass. I think you get two chances to pass all of these tests. If you fail twice, you have to start all over, meaning you need to come up with a new email address, a new login, because you can't use that same login. So just be very mindful of if you do fail once, you don't want to fail twice. All right. Any questions on the volunteer standard of conduct? All right. So the next piece here is more about the 1040. This is what we're here for, right? The 1040 is the output of all the work that we're putting in. So the understanding of the law, the understanding of how to use TaxSlayer, this is the key output. I have this up here because I want you guys to understand the basics of the 1040. And I'll just use my highlighter as I walk through this to make sure that everyone is understanding. So up top is where your basic information comes in. So that's where I get my name, my address, phone numbers. Like this is the stuff that comes off the intake. The phone number is not on here, but when you see the intake, that top part is that basic demographics of this person, right? And that's what lives up here. So security number, birthday, do they want to give money to the presidential election campaign fund? That's that first section. The next section is how do I want to file? And in basic, we talked a lot about filing status. We'll do a little bit about that in advance. But determine your filing status. That's extremely important because once I know my filing status, I can determine what type of benefits I may be eligible for. After filing status, you kind of get down to your dependents. Do I have any kids? And I determine what type of dependent do I have? What type of credits I might get from that dependent? So it's important I know the date of births. Are they in school? I know what I need to know about this kid to make sure I get the right benefit. After the dependents, there's income. So this is where all the income goes in. So there's wages and retirement and interest and dividends and pension and social security. All of this stuff lives in the income section. So I only put an example of just somebody had 47,500 in wages and they had like $9,000 of IRA distributions. And in here, 3,600, this means they had what's called some additional income. And I'll show you the schedule one later. There's a whole list of all these additional incomes you can have. I can be self-employed. I can have jury duty. I can have unemployment. There's all these other types of incomes I can have, and it flows onto the first page of my 1040. When you add up all of your income, you get to what's called your total income. And they say, hey, this is my total income that I've made this year. Once I know my total income, I can start now trying to reduce my income to have a smaller amount that's going to get taxed on. So I want to figure out what my taxable income, and I have the opportunity to reduce my total income by things that are called adjustments and things that are called deductions. And we'll talk about that during the class, but I want you to understand how they affect the 1040. So an adjustment is on line 10. So right here, I have $1,000 of adjustment. An example of adjustment that you may be aware of is a student loan interest. Remember, if you remember, it's up to $2,500. So let's say there's $1,000 of student loan interest that this person paid. They were able to reduce their total income by $1,000, and now they have what's called their adjusted gross income of $59,100. Now, adjusted gross income is the kind of a number that people go off, and it's your income after your adjustments. My total income minus my adjustments. And sometimes people say, well, what's the AGI? Based off the AGI, you can get XYZ. That's that AGI number. So from there, I can reduce my income by a standard deduction. A standard deduction is based off of your filing status. So over here, I'm not sure how well you can see this. Every filing status has a certain kind of deduction. So single would be 14,000, married, filing jointly, or qualifying surviving spouse would be 29,200. Head of household is 21,900. So you get a sense of how much your standard deduction is. And there's another type of deduction called itemized, and we'll talk about that today in this class. Itemized means I can come up with more than what the standard deduction is giving me based off of my filing status. For example, if I'm single, my standard deduction is 14,600. If I can itemize, and we'll talk about what you could itemize, if I can come up with more than 14,600, then that's more advantageous for me to use that as my deduction. For this example, we're saying that this person is a qualified surviving spouse because there's only one person up here, and they would have probably had this one checked off saying that they're a qualified surviving spouse. And we'll talk about what that means later. And with that, I can reduce my AGI by the deduction based off of my filing status. I'm a qualified surviving spouse. I get a deduction that's a standard amount from the IRS of 29,200. So I subtract that from my AGI, and what I am left with is 29,200, which is going to be considered my taxable income. Remember, I started out with $60,000 of total income, had some adjustments, had a deduction. Now I'm only being taxed on $29,000. All right. So the tax on that $29,000, we're just gonna, this is the numbers are just probably made up, but to say the tax is $3,127. This is the second page of the 1040. This is how much I owe the IRS now. So I owe the IRS $3,127 of taxes, and now I get the opportunity to try to reduce what I owe the IRS based off of credits that I'm eligible for or what I would have already paid in. So because this person has a child under a certain age, they get a $2,000 credit. Because this person probably has dependent care, they got a younger child that they're having dependent care, they get a $600 credit. So they get a total of $2,600 in credits. I get to reduce what I owe the IRS of $3,127 by the credits that I was eligible for. Now I owe the IRS $527. That's what credit does. Credit reduces your tax liability dollar by dollar, and that's a good thing. Now, before I figure out what my total tax is, it's possible that there's other taxes that I got to pay that is outside of federal taxes. This $900 could be self-employment tax. This $900 could be a tax on if I took money out my retirement early and they charged me a penalty. That's the kind of stuff that may live on line 23. So if I have that tax, I have to add it to what my federal tax is, and then I get what my total tax is. So let's assume this person took $9,000 out of his retirement early and got a $900 penalty because they took money out their retirement early because it's 10% of what you take out. So here's your $900 penalty plus the $527 you owe the IRS. Now you owe, Oh, in federal, now you owe a total tax of 1427. So that's how much I owe the IRS now. So then they say, well, how much have you already paid into the system? So I paid $3,200 on my W-2 on my federal wages. I may have paid $1,800 on that $9,000 that I took out. And maybe there was another, I had Social Security and I paid $600 on my Social Security. I paid into the system a total of $5,600. I paid in more than what the IRS wants me to pay them, the 1427. Because of that, I'm getting a refund. I'm getting a refund because I overpaid what they want me to, what they say is owed. So now they're refunding me the difference because I already paid it to them. Also, earn income credit lives down here. That's treated like a payment. So if I get an earn income credit, it's treated as I paid something into the system. Same thing for like additional child tax credit. Same thing for a portion of the American Opportunity Credit. So some credits become what they call refundable, where I can treat it as if I paid it into the system already. And if it's treated like that, I can get it refunded to me, just like I would when I truly pay into the system on my W-2, on my Social Security, on my retirement. So that's how a refund is created. There's also times where all this information that's in this area is blank. So if I didn't pay anything in, then I still owe the IRS a dollar amount. So what would come down is saying, hey, you still owe me 1427 because you never paid in anything or you didn't get any refundable credits that would reduce it. So when people owe and people say, hey, you might want to change your W-4 because maybe there's not enough withholdings coming off of the money that you're making that you need to be paying to the IRS. You don't owe just because they didn't like you. You didn't owe because you didn't pay enough during the year um, to carry whatever the total tax would have been based off of your income, based off of your dependents and credits and all that other stuff. So this is the how the 1040 works. I wanted to just walk through this so people can understand um, the basics of how this works. I think if you get a better understanding of the 1040, you'll get a better understanding of why it's important to know filing status and give somebody a credit and put all this information in the system right so you can get the right output at the end of the day. Any questions just on this 1040? Feel free to come off mute if you want. But does anyone have any question on just the flow of the 1040? No questions at all?
Question.
Sure.
So where you have the earned income credit and additional child tax credit, is that where we have the refundable portion of the credit?
You said what? Where I have it? So down here, this is the refund. Anything that's down here is a refundable credit.
Okay.
Yep. Yep. Earned income credit will be a refundable credit. The additional child tax credit is refundable, and a portion of the American Opportunity Credit is refundable because another portion of it is non-refundable, and it usually is up here. Okay. Another portion of it. Yep.
Okay, got you. Thanks.
Same thing for the child tax credit. The child tax credit is normally a non-refundable credit. So let's say, for example, instead of this person owing $3,000, let's say they owed $1,000. The child tax credit is a $2,000 for a child is under a certain age, and we'll talk about that later. So they would have got a $2,000 credit. So if I only owed 1,000 and I got a $2,000 credit, what happens to that other 1,000? Well, the child tax credit is a unique one where now I can get a refund of the other $1,000. That's called the additional child tax credit. They'll refund it to me because I only used 1,000 up here to wipe away my total tax, and I got 1,000 left over. They'll refund me $1,000, and they'll refund you up to $1,700 of whatever you didn't use up here. So I would get a refund of that. While, let's say, child dependent care, let's say that up here I owed $200 and I got a child dependent care credit of $600. That $600 will wipe away that 200, but that $400 is left over. I can't do nothing with it because it's non-refundable. It goes away. It doesn't come down here where I can get it as a refund. So some credits are non-refundable, while some credits are refundable. And the refundable ones are mostly down here: the EIC, the additional portion of a child tax credit, and American Opportunity Credit are some of the refundable ones. All right. Any other questions? All right, hearing none. Here's the schedule one. This is what I was talking about earlier. As you can see, there's like business income. There's all these different types of additional income. So you'll see what I was referring to earlier: unemployment, gambling, cancellation of debt, jury duty. This is all a bunch of different types of income that all winds up on line 8 here. If I have additional income, it'll all come over here. But they just got a whole new schedule to list them out. But this bottom line number goes over on line 8 on your 1040, and this goes right here. That's where lines ends. Schedule 1 also has a part 2 of it. These are adjustments. Educator expense. This is where like student loan interest, all of that stuff. Again, this is how you determine your AGI. It all goes on line 10 of your 1040, as I was showing you earlier. This is line 10, all your adjustments. This is where all my, it's getting noisy. This is where all of my adjustments will show up on line 10. All right, so that's what it is just other schedules that has the information and it pulls it to the front.
Question?
So, say it again.
Question?
Sure.
Jury duty is mentioned as additional income in Schedule 1 and also as adjustment. So what's the difference?
That's a great question. So when you get paid for jury duty, let's say you go to jury duty and you get paid $10, you need to report that $10 as income. But sometimes it's rare that the employer may say, if you go to jury duty, you need to give me the money that you got from jury duty, because that's just their policy. You didn't take a PTO. They may have given you a PTO and they say, you know what? We want the money that you made that you were out on jury duty. So if I have to return that money to my employer, I can then put it on my taxes as an adjustment, because I'm not going to be taxed on something that I didn't get to keep. So I would go in here and say I received jury duty of $10, but I turned it over to my employer, and I'm going to now make it as an adjustment by reducing that $10. So I'm not paying taxes on something I didn't get to keep. Does that help?
Yes. In my job, we have to just submit that I served in the jury to the job, and I don't hear anything after that. That means the job people are paying my salary.
Right.
So that can go anywhere here, right?
Yeah, so you get to keep your jury duty paid, and they're not taking your jury duty paid back from you. Just tell them that you went to jury duty, correct?
Yeah, but I don't get any money from jury duty. I'm a city employee. Maybe that's the reason.
Oh, maybe that is the reason. Yeah, most time people that go to jury duty get it's like $7. I haven't been in so long, okay. but it's a small amount that you get for just showing up. In your situation, if you're not receiving nothing, yeah, then I don't think you have to do anything.
Okay, sure. Thank you.
Yeah. Unless, I don't think unless they take it. Yeah, I don't think they take it out your pay. I would assume that you had a PTO day, kind of like they paid you for that day to go to jury duty. Yeah.
Exactly. Yes.
Yeah. There's really nothing that you would need to do on your taxes in that mindset.
Okay. Thank you.
Yep. Any other questions?
Desmond and everybody.
Sure.
That jury duty. So you saying on line 24A, you had to put that $9 plus it would have
$9. That's what it is. Yeah.
And then it would have to go on the previous page.
Yep. This is the $9 that I receive.
Right.
It's $9 that I turned into my employer.
So you put it in both places.
Yep.
Okay.
Yep.
Thank you.
Does that only apply if you did pay it to your employer?
Only if some employers require you to pay them the money A payment could be them taking it out your pay stub. Like, hey, you had jury duty. I'm taking whatever you received that jury duty out of your pay. Same concept, and you can just put it here. Now, if they let you keep it, you just put it here as income. Meaning they didn't take it out your pay. They didn't tell you to return it in. You got jury duty pay. But if they take that money back from you, then you need to put it in here as an adjustment because I don't want you paying the IRS don't want you paying taxes on something you didn't get to keep. I would say all the employees I ever had just let you keep the jury duty pay. They didn't really sweat you about it, and you would put it on your tax return as extra income. All right. There's other schedules that live out there. I don't have pictures of all of them, but Schedule 2 has like the additional taxes. That's where you would see like the self-employment tax, the IRA penalty that I was talking about earlier that showed up on 1040, like up in here. That's where some of those additional taxes show up. So there's a whole list of all the additional taxes. And down here are additional credits and payments. And that's where you would find like some education credits, some dependent care credits, retirement savings credits, and that stuff all shows up here on this line. This is all the different kind of credits that might show up. But there's a list of credits, just like the Schedule 1 had a list. There's a Schedule 2, there's a Schedule 3 for different things as well. All of this stuff happens automatically within the system. I'm just giving you more information of like where the stuff lives before it shows up on a 1040. This is your intake, interview and quality review sheet. This is, as they call it, the intake sheet. This is pretty standard. They made a few changes to this year. This is where you get the demographics of your clientele, your name and address and phone numbers, and where they lived, and are you a citizen. They ask you about, these are the new questions for those that are familiar with this. I do want to point out some of the new questions. They do have something here about, did you live and work in 2 or more states? They highlighted that, which is something they didn't do before. If you recall, they asked a question about, would you want to do the $3 to the presidential election campaign fund? This used to be on like the back page. They brought that to the front. If you have a balance due, or if you do a refund, that used to be on the back page. They brought that to the front as well. So they want to ask about, do you want to get your refund directly deposit or by mail, or how do you want to pay? This is kind of new. They brought it to the front. Well, not new as in not having it, but new as in where it is. So they also added like pronouns. That would be something new that they didn't have before. Issued an IP pin. They kind of moved where it was. So they just kind of like, I like it as a little bit more up in your face. You don't have to go to the second or third page to find an answer to something that probably should have been right in your face anyway. So they kind of moved everything to the front page. So I like the changes that they made. But this is really important, but this is where you get a lot of the information from the client. They fill this out, and this is what you put into TaxSlayer.
Desmond, this is Karen. I have a silly question. I just want to make sure I'm understanding where it says, do you live or work in 2 or more states?
Mm-hmm.
So if I live in New Jersey, but if I work in Glen Mills, Pennsylvania, I would answer yes to that question.
Yep, I would think that would be a check yes, because now I need to figure out, do I need to do 2 state tax returns? Because if I live in Pennsylvania and I work in New Jersey
and work in Pennsylvania,
if my W-2 says New Jersey, Pennsylvania still wants to see a tax return, right? So I need to do another tax return. That means I got to do 2 tax returns, no matter what.
Okay, but the answer to that question is yes.
That would be yes. That's why it says live or work.
Okay.
Yeah. Yep.
Okay. Thank you.
Yep. It's a great question. Now, there's a reciprocity agreement with New Jersey and Pennsylvania. So if they did it right, you should only have to do 1 state, but that doesn't always happen. But if it's a Delaware and Pennsylvania, I got to do a Delaware tax return and a Pennsylvania tax return. Let's see, what else? Let's go to the next slide. So this is the there's not a lot change here. This is about the dependent. I think some of the stuff they might have added. I think the widow spouse was always there. No, this is not. There's not much new here. This is the kid information. They want to know how long they lived in your house. I think the biggest new thing they want to talk about. There is a pen that you can get for your dependent. In 2024, there's something you can go to the IRS, get an IP pen, and protect your kid. If they were claimed by somebody else. So say your kid was claimed from that side to somebody else, and for those who have been doing this for a while, if I went in and did their taxes, it would reject. Well, now I could actually go to the IRS, get this IP pin for this kid that I'm saying is truly mine, although somebody else already claimed them, and I can file it without it rejecting, which is a really cool thing. It's something new for this tax season, but I can get an IP pin for my kid that has already been claimed and avoid the rejection for myself. So be mindful of that. If you get a rejection for somebody who had their kid claimed, tell them, hey, go to the IRS and get an IP pin for that child. And I think they ask them questions to just verify that that's their kid, and then they can come back to the site with that pin and get past that rejection.
I got a question. So was this just created for like a lot of like the fraud of like people's kids being claimed and then people not really being able to claim their kids after
I
the
believe so. I think what was happening, it was probably so rampant because you know those people had to all mail in their stuff, and all they did was create more work for the IRS to get this stuff and get paper returns. And not only does it create more work because now the IRS got to do a paper return, but now that person gotta wait a good 3 months to get their refund versus it being e-file and I'm getting it in 3 weeks. So I think they changed it to kind of and this is like a lot of times it's low income people that are being hurt by this. So instead of making them wait all this time because they got to do a paper return, why not we put the systems in place where they can still file electronically and they'll deal with the audit later. They'll still probably send out letters and make sure that they hit the people that claim the kids. But I think getting this IP pin, that person that probably goes through that steps has to verify some things that you do have a dependent and doing some of that due diligence right then. So yeah, I think it is a response to a lot of the rejects that were happening.
I like that too, Desmond.
I love it. I love it. I think it's great. I think it's great.
I'm not either the man or the woman can jump in, hurry up and do their taxes, claim that child, and then when the other person comes in, and now it rejects because sometimes they don't even know who claimed it.
They don't even know they don't have no clue who did it, and it's frustrating and it's pretty sad.
I'm glad they came up with this.
Yep. So what else? So yeah, this really has nothing new. Just remember, as a volunteer, you just verifying stuff out here. And can someone else claim the taxpayer or a spouse on their tax return? They ask that question to make sure we're verifying. Sure.
So what would happen to the first person who claimed the kid? What would happen to their taxes?
So at the end of the day, just like it would if they would have did it by paper, an audit's going to come out and say, hey, there's 2 people that claim this kid. Both of y'all need to prove it at the end of the day. That's what they're going to still get audited. It just doesn't hurt that second person where they have to wait to do a paper return because of a reject. They just get to do it faster because they got an IP pin. At the end of the day, they're all going to get audited. And I think hopefully the person that did the IP pin actually has the information needed to prove that that child was there. This is my thinking. Cool. All right. So then they did this a little bit different. So this is the intake sheet. They used to just have it all like in like the white area where it asks you about wages and whatever you had, and you would check off. When you see B and A, B's for basic, A's for advanced. You'll see an M every once in a while. That's for military, which we don't do any of those, so you don't have to worry about it. But if you're certified as B, you can do basic. If you're certified as A, you can do advanced. What they want you to do is just over in this gray area is just verify stuff. If somebody said they had W-2s, double check that. They said they had 2 W-2s. How many W-2s did I count? I don't know if anybody has taken my class, I tell them to do this. So like go through each line, verify how many W-2s they have, and and go back and check it. I got a W2. They said I got a W2. I see the W2. I like this because now they're making you do it. They're making you confirm that I got one W2 or two W2s. I got one 1099R or two 1099Rs. I like this because things get lost between when they come in this office until they get in front of you. Somehow things get lost and you just want to verify all the stuff that I received. So this is what now what the volunteer is going to have to do is on this side, they're verifying that whatever the client checked off was actually there. So, oh, you said you had wages and you had two jobs. How many W-2s I got? I should have two W-2s. You want to verify that stuff. And that's what this gray section is, and make any notes or comments that are needed. All right, so that's happening now throughout this is your verification and notes and comments section. If they said I had mortgage interest, yep, I got a 1099A. I got one 1099A. Yep. Just verifying it. And if they had enough stuff, you know what? They're going to itemize because they have enough to itemize. Or they didn't have enough, and I'm just going to use a standard deduction. They gave me something about real estate taxes. I can say real estate document or something. Like you can make your notes on what did I get? Charitable contribution, give me a church statement. I can make a comment of what did I receive. This is you. This is them just making sure that you're checking the stuff that they give you. But then this is the last page. This is really, they stripped a lot of the stuff off of this and put it in that front page. We don't really worry about these questions down here because we have our own questions at the site. And I would say arguably we don't have to worry about most of the stuff that's on here. This is kind of optional information. We have a whole other CWF checklist that we want people to check off. So this is probably nothing that anybody would really need to fill out. Then the last page is about comments. This is where you put like someone want to do direct deposit and they know their direct deposit information, but they don't have a check on them. I have them write it down and check next to it and put their initials or whatever and say, I gave you this ABA, this routing number and account number, and I'm verifying it. So that's what the additional notes are. Any questions? So that's your intake sheet. Any questions on your intake sheet? Any questions on the intake sheet? A little bit new. I think the improvements are nicer to create less errors. All right, so we're going to jump into some forms that you're going to see at the sites. I want to change it actually while I'm walking through this because this is an advanced class and these forms are more advanced. All right, so examples of taxable income. I have the slide on here. This is in your 4012 I was talking about earlier. You can look at your 4012 to see where this stuff is, page D3. I would familiarize yourself with this because people come in and they say, I didn't know this was taxable, or asking you, is my royalties taxable? I can actually go to this document and say, oh yeah, royalties are taxable. Your cash income is taxable. Your back pay is taxable. Your interest is taxable, right? Your IRA distribution is taxed. So I can come to this form and kind of show them in my 4012, and they say, oh, I thought my notary fees were not taxable. Well, according to the IRS, your notary fees are taxable. Like, so this is a unemployment. I didn't know unemployment was taxable. Yes, unemployment is taxable. You can come to this document and list off a ton of things that are taxable. In that same breath, there's a ton of things that are not taxable, right? So in D4, somebody may come in and say, I paid child support. Is that taxable? Let me double check. Oh yeah, child support is not taxable. I inherited something. Is that taxable? Nope, not taxable. Don't worry about it. I got a gift. Nope, not taxable. Don't worry about it. I have a reverse mortgage. Nope, not taxable. So you can use these as a tools when people are coming in and they're asking you whether something is taxable or not. Use page D3 and D4 if you're not sure. I think this is a great, I use it all the time because sometimes I'm not sure about something. I'm like, let me double check because I don't think that's taxable. But they give you a whole list of stuff that could be or could not be.
Question?
All right. Sure.
Alimony is taxable?
Say it again.
Alimony is taxable?
Other money?
No, I'm sorry. Alimony.
Oh, alimony, it could be. So alimony is one of those things where it depends. So alimony is taxable if you had it before 2019. They changed it after 2019 where it's not taxable, but before 2019 it was. Meaning the divorce was finalized before 2019, and if somebody's paying alimony, then it's taxable. It's also an adjustment for the person who's paying it, but that would be before 2019.
Thank you.
Yep. Wade, this is your W-2. This is nothing new. Pay attention to this box. It tells you how much money they put in their retirement. Just make sure you fill out everything, right? So this box is not the same as that box, and that happens every once in a while. So pay attention to when you're filling some of this stuff out. Another one, W-2, has a box W in there. That means that somebody has HSA. We'll talk about HSA today. So if I see a W, I'm going to be dealing with HSA. So make sure you pay attention to that. These are your interest documents. I have this broken down to show that an interest can be on, somebody can have an investment portfolio, and this could be how the interest looks. So make sure you look at the 1099-B is usually called, or it's called a consolidated statement, and there can be interest income on there. Traditionally, this is how the interest income will look, a 1099 INT, but sometimes it's built within somebody's portfolio. So make sure you're paying attention when you're going through somebody's portfolio and see if they have an interest line in there as well. Same thing for dividends. Dividends is sitting up here inside of this person's investment portfolio, but sometimes we just get a 1099 DIV and it looks like this. But if they have a portfolio, it's going to be built within their portfolio and it looks like that. So just pay attention whenever you're looking at somebody that has investments, and we're not missing the dividends and interest that's embedded in those documents. That happens for people that have investments. I just wanted to make sure. I've seen people do taxes, and what they would do is the stocks and bonds that they probably sold, but they missed that there was some dividends or interest also listed in that 1099-B consolidated document. So just pay attention to that, because it doesn't always come into something as pretty as this. All right. This is the 1099 NEC. When we see this, this is our cue to think about, oh, somebody has a business and we need to do a Schedule C, and we'll talk a bit about this in the afternoon. And it just tells you how much they were paid for their business, and we want to link this to a Schedule C and start doing it that way. 1099K is when someone is working for like Uber or GoPuff or DoorDash, Uber Eats. They're basically getting paid from a third party. So meaning Uber Eats is paying them, but it kind of filters through where they go out and do whatever the work is, and a third party person is actually making sure that they get paid at the end of the day. And all that money comes in on what's called a 1099K. PayPal, Stripe, all the different third party people that you collect the money. Like if you order an Uber, you're not paying your person who's driving, you're paying Uber, right? So then Uber winds up paying the person. That's how that third party, how that works. Because I'm not, they're not getting it from you. So when they get it, they'll get a 1099K. What you need to know is if I see that 1099K for actual work that's being performed, it's treated as cash. And I'll show you how to put it on the Schedule C when we get there. But it's not like you put in a 1099K on TaxSlayer. You put it in as cash on your Schedule C, like you would cash income. You would put just 1099K income. And this is the number you would put in there, the gross amount.
I have a question real quick. So
sure.
1099K and 1099 NEC are fairly similar. Only difference is one is from a third party and one is from you yourself.
That is absolutely correct.
Okay, so but when you're, for tax reasons, either or, is going to be understood as cash payment?
Well, not true. This one is treated as not cash. And they have a checks and balances where they want to see you put this 1099 NEC in. For the 1099K, it's they don't have as strong as a check and balance as they should, and you can put it in as cash. They don't have, like, for example, when I put in this 1099 NEC, I need to enter this, and then that's going to cross-reference to a 1099 NEC that was created by Fast Eats. When this 1099K is created, it's really not another one sitting somewhere waiting for it to get hit, for whatever reason, as it is right now, as it's structured right now. So they say put this in as cash. I think at some point you can treat this just like a 1099 NEC, and once you put it in, you start your Schedule C because they want to see this 1099K. But right now, it's just not the case. Like, you don't got to put in the TIN number. You don't got to put in the name of who paid you, but you do got to do that for NEC. You need to put in the TIN number. You need to put in who paid it.
But you can't itemize the 1099K though, right? But you can't itemize the NEC, or you can still file claims for like.
You can still put expenses against all of this stuff.
Oh, wow.
This is just cash. Just treat it like it's cash. Just like if I made cash, it's just income that I made that the IRS may not be aware of, right? It's just, this is income that you made that the IRS may not be aware of, quite honestly, is how to look at it.
Okay. I only ask because I get not really paid through a third party, but I'm like self-employment, but I'm not self-employment because there's like an agency. So would people have situations like that? Because I did, like, as an intake specialist, I've seen some people's situation like that. Now we're putting it in as, like, it don't even matter if it's like $45,000. If they get paid via 1099K by a third party, you're gonna put that there.
Yep, $45,000, and when you get to the Schedule C, you put it in like you put in cash.
Okay.
I'll show you that when we get into the system. Will make a little bit more sense. But I say this is that you don't put in a 1099K directly and try to create the business, because it won't work in TaxSlayer. So I'll show you what I mean when we get in TaxSlayer. It might make a little bit more sense. You put in a 1099 NEC to create the business, not the 1099K. Sure.
This is this NEC and K. I just want to clear myself of the doubt I had. A person can get both. What is the difference? I mean, I didn't know about the K thingy before.
The only difference is who's paying it. In 1099 NEC is a direct payment from someone who's you're working for. The 1099K is a third party person that's paying it. That's the only difference. For an Uber driver, if I order an Uber driver and it costs $12, that $12 is not paid to that Uber driver from me. The $12 is paid to a third party, and that third party then pays that person.
That will be K.
That's all K, right? Now, let's say I hired someone to take me somewhere and I paid them directly. That's an NEC.
Okay. Yeah.
That's the difference. And if I paid somebody $2,000 to come pick up me and my family and take me to the airport, and I paid them directly, I would issue them a 1099 NEC because they worked for me. Uber, they're not working for me. They're working for Uber. An Uber driver is working for Uber driver. That's the third party that's paying them.
Okay. Another question when we're on the topic of Uber. There's a lot of electric cars floating around, and a lot of Ubers owned by Uber driver own electric car. Where is the electric car refund from the government sit? Is it adjustment? Is it refund? Or where is it? What is the rule on electric cars?
I will not talk anything about it because it's outside of the scope. It's outside of the scope for VITA.
Oh, okay. Because some of the people who come for the tax, for us to do taxes may own an electric car, right? So
which is fine, and they can get the mileage that they drove on it, but they can't. The credit of the electric car is outside of the scope of VITA.
Okay.
there's a credit that some people can get depending on the type of electric car that they buy. That's beyond the scope of IRS. If they want that credit, they should go to a paid professional. But
Okay,
if they want the mileage of what they drove, that's fine. We can handle that. But we can't handle the credits because it's not taught and it's beyond the scope of VITA.
thank you.
Yep.
So I'm sorry. I thought it would
Sure.
fall under the same scope of like if people bought like energy efficient items.
No, not a car. No, that's the 5329. That's for you can do that. That's fine for the energy. That's a home energy credit stuff, but not the electric car. That's a whole different credit.
Okay.
The electric car, it does not fall underneath the same space. I think it's 5695, if I'm not mistaken, but it's not in the same space of energy, home energy improvement credits. Nope, not the same. Any other questions?
Desmond, check the chat. I think people are putting things in chat.
So are we putting on tax layer the 1099K's gross amount? Yeah, and I'll show you guys how to do that when we get into 1099K. When we get into the system, I'll show you. Just a little bit more about the 1099K. You may hear about, oh, there's $5,000. I heard that you only got to report if you make more than $5,000 on a 1099K. They're not talking to you. They're not talking to the client. They're talking to the third party. They're saying, hey, third party reporters, report 1099Ks for people that you paid above $5,000 and above. If you pay less than $5,000 above, you are not required to issue a 1099K to that person. If it was more than $5,000 that you paid out, you're required to issue the 1099K to that person. Whether it was issued or not, that person has to report the income. So if Stephanie had $3,000 of income from Uber, Uber by law is not required to issue Stephanie a 1099K because it's under $5,000. Stephanie, on the other hand, by law is required to report the $3,000 as if it was cash. You still got to report it. Does that make sense? Stephanie has to still report it. The third party, Uber, doesn't have to report it to the IRS. They don't have to do a 1099K. There's a threshold that they're making these third party people say, if after you pay out a certain amount, I need you to issue a 1099K to that person. What people are confusing it with is saying, well, I made less than $5,000. I don't have to report it. That's not true. This is a reporting requirement for the third party organization, not for the person receiving it. Cool beans? Any question?
So I have a question because
Sure.
I got a question. So I usually do like vocational training during the summertime with the youths and stuff.
Mm-hmm.
And we were paid under a certain amount.
Okay.
And my employer said that she wasn't gonna like really bother us with it because it was so little. But then as a tax specialist, I'm just there like, well, girl, I still gotta report it. So
You do.
So thank
So
you.
they're making decisions on not reporting it because there is a threshold. Just like for the 1099 NEC, this threshold is like around, I think it's $600. If you made less than $600, you don't have to do a 1099 NEC. I still got to report it, but that I'm not required to do a non-employee compensation 1099 NEC if I paid someone less than $600 in total.
Okay, I think that's
that
what
doesn't mean
coming from because
Yeah.
a lot of people were thinking if you weren't paid, if it was 600 and under, you don't have to report it. But it's like no, the business.
Yeah, and that's the same confusion with 1099K. People think, oh, I heard under $5,000. They're not talking to you; they're talking to the business, not the taxpayer. All right. Any other questions on that? All right. So something new. 1099K conversation continues. So let's say I get a 1099K from Cash App. And that 1099K is for like $300-400, but it really is because I got a 1099K because I go out to dinner all the time and I usually pay the bill and people send me their portion of their income. And I do this all the time and I get $5,000-6,000 of it because I like to go out and eat and I don't mind picking up the bill and people cash at me all the time. Well, if I get a whole bunch of that, and let's say I get $5,000-6,000 of it, that Cash App may issue me a 1099K, say you got a whole bunch of money that came into your account, and it looks like you have a business, but you really don't. You just like to go out to eat a lot and pay for the bill and have people Cash App for you because you got the nice credit card and you want your points or whatever. Well, you're going to get a 1099K for that, but when you get it, you're like, well, I didn't make no money. I'm not in business to go out to eat in dinners, or people are just giving me their portion of their meal. And this is where you would put that money. They were saying if you get a 1099K issued to you that it was an error, I can put that document here, and I'm telling the IRS, you may see a 1099K reported for me, and if you do, I ain't put it on my taxes because it was an error. So you may see somebody may come in and say, I got a 1099K for this, but I don't have a business. I eat out a lot. That's where you would put that as an error. And that's just, you don't have to, you're just communicating to the IRS that someone got a 1099K in error. So you can ask your question.
So would this also be like for parents who send their kids money in college?
That too.
For any type of thing that
if they get one.
Okay.
If they issue a 1099K, if you get one in the mail, you're like, wait, what's this for? I was sending my kid money all year. This ain't got nothing to do with no business. Because that could happen. That could happen.
What about the receiving end?
What do you mean?
Okay, so we're talking about the person who received the money, not the person who sent it, right?
Is the person who received it. The 1099K will always get issued to who received it.
Oh, wow.
For example, Venmo, right?
Venmo is another example. Yes.
So your Venmo will issue a 1099K if it's more than a certain amount.
That's correct.
What about Zelle?
I don't think Zelle does. Zelle is kind of bank to bank.
Bank to bank, okay.
Treska, did you have another question or your hand just still up? I'm going to lower your hand. Okay. But this is just for errors. All right. This is also, you might get a 1099K. Let's say I bought a TV and the TV cost me $1,000 when I bought it. 5 years later, I'm like, I want to get a new TV. I'm going to sell this TV on eBay. I sell the TV on eBay for $500, meaning I took a loss, right? I bought it for $1,000, sold it for $500. I took a loss on it. eBay might send me a 1099K for that $500 that I just sold this TV for. I don't have to report that as income. I can put it here as a personal item that I sold at a loss. That's an example of how that would go. That makes sense? Someone's asking if you sold a car, if they issue a 1099K, same exact concept. Yep.
No, if I sold my own personal car, like how would you report your personal belongings you sold and received money for? But it was
so if it's
bought.
So it's the same space. So if I have a car and I sold my car for a loss, then it's not income that I need to report. If I bought a car for $20,000 and I wind up selling it for $1,000 and I get a 1099K for that, then that's really not something that I need to have to report.
I think the question was like, if it's a cash transaction or check from a personal to personal, there's no 1099K produced because it is from one person to another person. The car was sold. So If I
So
sold it.
that sounds to me like it would be a Schedule D. So Schedule D, we're starting to talk about capital gains and loss. So I bought something, I bought an asset for this, I sold it for that, and this is the loss. That's a we're in a different world there. This is really for like small things where I had a mistake. Well, not a mistake. Well, the error is for one, like somebody's cash app me money for dinners or whatever. And like the personal items, sometimes people are selling stuff on eBay, stuff, pocketbooks and stuff that they bought. And they're really not in the business of like selling stuff on eBay. They're just trying to get rid of stuff they got. They're saying when you have items that you sold for a loss, let's put it here. I think the car is a different animal and it would be more of a Schedule D. And I bought the asset for a certain amount, I sold it for a certain amount, and I may have taken a loss on it. And that's how I would report it on my taxes.
Okay, I'm gonna need to do that for my taxes.
So yeah, this is new for 2024. Last year they had it on. Last year it was just different. It was treated different. I like it this way. It's just like, hey, I mean, there's a mistake out there. I'm reporting it, so you know that if you see the 1099-K IRS, I put it on my tax return. It was an error, so just don't bother me about it. This is your Schedule 1099-B. This is what you would put on a Schedule D when I acquired something, I sold it. This is how I think the car would be treated. I bought a car, I sold it this is what I sold it for, this is what I paid it for. Do I got a gain or a loss on it? But these are just stocks. We're talking about stocks here. Of course, you got your date acquired, date sold, what I sold it for, and how much I paid it for, and whether I got a gain or a loss. This up here is short term. This down here is long term, and it tells you whether the basis is reported or if it's not reported. And in the side of the system, it asks us whether something is reported or not reported. 1099-R, this is nothing new. You retired, took money out my retirement on time. When I reach a certain age, it's just a normal distribution, paying taxes on it. This is a code 1. If I took money out my retirement early, and I would have to pay a penalty, so I pay a $900 penalty because it's a 10% penalty when you take money out your retirement early. There are codes where if you took money out your retirement early for a specific reason, I could waive the 10% penalty. So if I took it out for education, if I took it out for medical reasons, I can waive it. So there are certain codes you can put in to avoid that. Now, there's some new codes, new error codes for 2 new things. So there's one about a domestic abuse victim. If they took money out their retirement, they don't have to pay the penalty. They took money out the retirement early. They don't have to pay the penalty on that money. They can take up to the lesser of $10,000 or 50% of what they got into their retirement account. If they have 3 years from that date, they can actually put it back in there as well. They don't have to, but they can repay it within 3 years. And that's just a new way that you can take money out and not have to pay penalty. They also have one for emergency personal expenses. You can take out up to $1,000 if it's an emergency, and not have to pay the 10% penalty on that $1,000. With this though, you only can do it every 3 years. You can't do it every year. You're limited to do it every 3 years. For this one, I'm not sure there's a limitation that you only can do it every 3 years, which I would hope that it does not have a limitation, but I know for this one, it is a limitation. You can do it every 3 years. Again, it's the penalty. It's not the tax. You still got to pay taxes on it. It's the penalty. Both you can repay if you choose to. Inside of the system, I haven't seen the codes 22 and 23 yet, but I've been using there's like this it's just something like other or something like that, or more than one, and that's what I've been using. I'll show you when we get into tax layer, but for whatever reason there's no code for it yet, but I just been using a miscellaneous code, and I'll show you that in the afternoon. This is a 1099-R that has a taxable income amount blank. This tells me I need to do what's called a simplified method to determine what this is. So we'll do this a little bit later on. So just always pay attention when the taxable amount is blank and I have a code down here for 7. They're saying, I don't know how much I need to get paid taxes on, and I need to figure it out. And I can go through something called a simplified method using how much did I contribute? When did I start taking the retirement? And I can determine, well, how much of this 20,000 needs to be taxable. So I'll show you that later. And the last one is if you see a 3 down here, it's possible. So whenever somebody gets retirement income, it's treated as unearned income. But if there's a code 3, which is basically saying that this person was disabled and they got the disability distributions, if they were under their retirement age, instead of treating this as unearned income, I can call this earned income. And if I call it earned income, I'm eligible to get earned income tax credit and some other benefits that you get when you have earned income versus what you couldn't get if it was considered unearned, which most retirement income is considered unearned. And it's just a code that you got to check off as a box to say, hey, treat this like you would treat wages, is what this is. 1040 line 1 is where wages go. Take this code 3 income and treat it as wages so I can get certain benefits. And it's just a question you would, if they got a 3 that's telling you that this person has disability, then you just got to say, well, how old are you? And you got to determine, have they reached their retirement age? If they have not, then they can get, treat this as earned income. Tresca, you had a question, Tresca?
I don't know why my stuff says that. It's Lisa. I'm sorry.
Oh, you can change your name.
Yeah, I'm going to now that I
know.
Okay. So the rollover, how does rollover work with the 1099-R? Because I think
Yep, that's a good question. So rollover will be different codes.
But it'll state that, right? Because one of the scenarios, I don't know. I don't know if I put the information in wrong, but it was asking me like, is it a rollover account? Like,
oh, you're talking about the next. Yeah, I'll show you that when we get into tax layer. So rollover though would be, there's an actual distribution code. It wouldn't be 7, 1, or 3. It would be like M or something. There's a whole different code actually. Let's use my resources. There is a rollover code. It is, I want to say it's like a J, might be a rollover code. Let's go to my 1099. Where are we at? Income. That would be 1099-R distribution code. So a rollover would be, H could be a rollover. G, this is the one I was looking for. G would be a good rollover. So rollover means that I'm not being taxed on it. I just put the money into another account and I rolled it over. So I wouldn't be taxed on it. So I would probably see a code G for that. I may see a code H for a rollover. But those are the common ones. But what you're referring to is a question in tax layer, and I'll tell you that. But if you see a rollover code in here, it's not taxable. It's just communicating like, hey, I took money out of my retirement and put it somewhere else. But we'll get to that. Social Security, you get a form like this. This is how much you got received. This is your taxes. This is your medical benefit. And you can put that all in on one sheet, and I'll show you that later on. This is gambling, the date that I won it, how much I won, what was I wagering, and how much taxes might have been withheld on it. This is the key. This section is the key section I got to fill in. We'll do that later on. Cancellation of debt. If I had a credit card that I didn't pay and they canceled it on me, they're going to send me a document saying, hey, you didn't pay this to us, so you need to put it include it in your tax return as income. We canceled your debt, put it on your tax return. And that's what I got. So that's your income. Any questions on the income?
Yes, cancellation of debt. When would you typically get that? Like once you pay something off, or if like something was on your credit, or
Yeah, or you didn't pay it off. So let's say you
you didn't pay it
owe Visa $1,000 and you didn't pay them, and they're like, you know what, I'm tired of chasing you. I'm going to cancel the debt. You don't have to pay me no more, but I am going to issue a 1099-C. You need to put that into income. Does that help?
Yeah, but I mean, like, how they know it's your debt? Don't they gotta prove? Like, ain't that?
Well, they know this is Visa. Visa is so what Visa is doing is writing it off on their end. So they're writing it off. They're saying we're going to write this off and we're going to issue that person a 1099-C who we wrote off the debt for. That person got to pay taxes because in I think in the IRS eyes, you receive the benefit of $1,000. You need to pay taxes on that $1,000 because you ain't got to pay it to Visa now. They gave you a gift, right? That's kind of how they look at it. They said you ain't got to pay them no more. So the IRS is like, well, you got $1,000 that you ain't got to pay taxes on it now.
Oh wow! So you're like, it's almost, it's not in your favor, pretty much.
It's not in your favor at all because not only got to pay taxes on it, your credit is messed up too.
So once you
That is,
pay, like, are you admitting, like, you know how, because people are like, oh, we can fix your credit, we can fix your credit. Like, that's the big thing right now.
yeah,
So
you still might get a cancellation of debt. They could have fixed your credit and you still might get a 1099-C. I mean, you don't have to pay the $1,000 back. If you look at it in that mindset, I paid a tax on something. Say I owe the Visa $10,000 and they say, you know what, we're gonna just write it off. You talk to someone, they talked us out of it. I'm gonna issue a cancellation of debt of $10,000. All you're doing is paying taxes on the $10,000. You're not paying the $10,000 back. I'll take it.
as long as the credit's not messed up, I'll take it.
Well, hopefully, yeah, I hear that. Well, hopefully, if you're
Yeah.
working with a credit person, they negotiate that well for you and they don't get
Get
too
it on
messed up.
paperwork.
Right. Some adjustments. This is that student loan interest. I told you that it goes up to the most you can do is $2,500, but it looks like this on a form: student loan interest deduction. If you have a CD and you cash it early, you might get a penalty for taking, like sometimes you get a 9-month CD. You cash it early, they may charge you a penalty for cashing it too early. You can put that as an adjustment on your tax return. HSA, which we'll talk about later. If I contribute to an HSA, I can put that, a portion of it. I might can put all of it, depends on my tax return as well. So those are just some adjustments and forms that come with those adjustments that I just wanted to point out to you guys. Cool beans.
I got
Any questions?
question. I'm so sorry. I'm like,
no, you're fine. Questions are good.
But so okay, so how we deal with like clients that come in and are like, oh, I had so and so money in my savings account and it did generate an interest form. But like I spent the money, like I didn't keep the money in there for it to even like, I don't know. Sometimes they do that, like Cash App will do that. They will like add a couple of cents or whatever if you get a direct deposit. They will deposit a certain amount to your savings and you will like accrue interest on it, but like you take it out. So how does that
What
work?
is interest? Interest is interest. Interest is income made on other money. So if you got interest on it, you got to pay the tax on it. It's extra income.
Oh my God, that's crazy. I mean,
Yeah,
not
I mean, you do get it. I mean, if you take it out, that's your money now. Once they put it in, it's still your money.
I ain't
You
asked
got,
for it.
well, you would want it, yeah, but you're paying taxes on it. You're just paying tax on what they gave you. The IRS wants their tax on any money you receive. Well, just about the taxable stuff that they say at least. But yeah, if I
Okay.
got interest of $10,000, again, I'm happy to pay the tax on it. I got $10,000. Take your little tax. I still got $10,000.
Okay, thank you.
Yep. Any other questions? All right. So let's take a little quick break. It's 10:24. Let's take a break till 10:30. Take a 5-minute break, and we're going to get into the advanced scenarios, as I was saying earlier. If you wanted to follow along, you'd be wanting to your Link Learn certification and launch your advanced tests. You can do this together with me. It's totally up to you. or you can use the 6744 book and follow along, but we're going to do the scenarios starting with Sharon Smith. So it's up to you. I would say go into your system so you can kind of like follow along with me. But if you go to page 75 through 80 of your 6744, you'll be in the same place. So let's take a 5-minute break. I'll be back at 10:30 and we'll start from here. Cool? Any questions? All right, see you at 10:30. I'm just going to pause the recording. All right, so let's do this first scenario. Hopefully you guys have this up on your screen or whatever. We got Sharon Smith. Sharon husband Daniel moved out of their home in February 2022. Sharon has no contact with Daniel since he moved. Sharon and Daniel are not legally separated. So that means that Sharon is still married. Sharon has one child, Leah, age 10. She will claim Leah as a dependent on a 2024 tax return. Sharon is 31 years old. She made $44,000, had $50 in interest, and had $2,000 in lottery winning. She paid her cost of keeping up her home. She provided over half the support of Leah. All U.S. citizens with Social Security numbers. So, what's Sharon's filing status? There's 5 filing statuses. There's married filing jointly, meaning you're filing jointly with your spouse. Sharon has not seen her spouse since February 2022, so she's probably not filing jointly. There's married filing separately, meaning you're still married, but you do not want to file with your spouse. So it's possible that Sharon may be filing as married, filing separately because she's separated, but she's probably not going to file together. There's another one called a qualified surviving spouse. That's if you are married and your spouse passed away. For 2 years after your spouse passed away, if you have a dependent, the dependent being either your daughter or your son living with you that you're caring for, that you can claim as a dependent, you can use the status called qualified surviving spouse. 2 years after your spouse died. So the year your spouse died, you can still file married filing jointly. The next year, if you have a qualifying son or daughter in the household, you can file as qualified surviving spouse. The year after that, if you have a qualifying son or daughter living in the house, you can file as qualifying surviving spouse. The standard deduction for qualified surviving spouse is about $29,000, same way as it is for married filing jointly. So they're given a single person, meaning one, not as the term single as in tax terms, that one person will get the same standard deduction as a married filing jointly person would for 2 years after their spouse dies, assuming they have a son or daughter that qualifies as a dependent in their household. That's so it gives that person 3 years of a larger deduction. Yes.
Well, this I asked the same question too when I had the basic training this week with the instructor. So what the way she clarified to me is the first year you do married filing jointly. Yep. And the next year you can do as surviving spouse because you have a child. Correct. Right? Only if you have a child, you can do that. If you don't have a child, it's only 1 year after, the year.
If you don't have a child, you're whatever status you would be. So you could be single, or you can be, basically you would be single because you wouldn't be head of household. You would be single.
The second year, right?
The first year. The first year you're married filing jointly. The second year, you are single if you do not have a kid. Correct.
Correct. And then she said, but if you have a child, the second year, the first year is married filing jointly. The second year is qualified surviving spouse, and that's it. There's no third year. So that's what she said. But now you're saying that there's a third year where you can do QSS again, right?
That is what I'm saying. so yes. So the first year is married, filing jointly. The second year is qualified surviving spouse. The third year is qualified surviving spouse. You can do it 2 years after your spouse died.
Okay, thank you.
Yep. That's why if you look at up here, it says your spouse died in either 2022 or 2023. So if it's 2022, this would be the second year in 2024. If it's 2023, this would be my first year, 2024. So it's 2 years after your spouse passed away.
What we also found in the basic training is all these documents in that we are seeing is a 2024 filing, not the filing for 2025. So she said there's a glitch in the book. She said, so as if we are filing for the 2023 taxes in 2024. That's what she said.
I don't know because I wasn't in that class, but we're filing. This is clearly saying this is about 2024.
Okay, thank you.
I have a question.
Sure.
Wouldn't it be that way just because of the, like, I know even though they passed away, like, what if they passed away like 3 months into the year, or like, because isn't there like you have to live with the person 6 months?
Not with death. Death has no time frame on it. So if I had a kid that was born and died the next day, they're treated as being with me all year. Death does not have that time frame. So if I was married and my spouse died the first day of the year, I can treat it as being married the full year. Death is not one of those things. If someone died or was born, just like if I was married on December 31st, I'm considered married a full year. If I had a kid December 31st, I'm considered having a kid the full year. So birth and death does not have a time of that 6 months restriction on it.
Okay, that makes sense, because I know that I think that kind of like alleviates, because like let's say like people who have miscarriages or like
well, miscarriage is not the same.
No, I'm like, let's say like not miscarriage, but like let's say they were 8 months pregnant or something like that, and then
stillbirth is different. Yeah,
that's what I'm saying in regards to that. It kind of alleviates it because you grew the human for up to like 8 to 9 with the understanding you was going to birth, but something else happened. So
right,
I guess they was still counted as that.
Just to be clear, the child has to have been born, meaning they have to have been alive for some time frame. They have to have been alive for a certain time frame. So miscarriage, I actually think stillbirth does not count. The kid has to have been breathing for a minute. They have to have some type of birth. If they were never born, then they would not be able to do this.
Okay.
So then the last two are single. You're just kind of caring for yourself, or you don't have any qualifying child in your household. And then head of household would be someone who has a qualifying child and they took care of 50% of the household bills. That's head of household. That's probably the one of the filing status that most people want to land at, because it's better than single. If you're not married, you can still get head of household. There are people that are actually separated that can get head of household, but the rule is you have to be separated from your spouse the last 6 months of the year. So for this example, Sharon, her spouse has been gone since 2022. So he's been going for a couple of years now. So if this was for her, I would say, yes, she's married, but did your spouse live apart from you the last 6 months of the year? Yes. And then it says, well, did you take care of half the home? And did you provide the home for a child? Then that person can go to be head of household. Even though they're married, they're considered married, they can still end up a head of household because the spouse was outside of the household the last 6 months of the year. Now, when the spouse was in the house the last 6 months of the year, they can only file as separately. So this is a unique way to get someone who's married to not have to file as married, filing separately, which has a lower standard deduction, and you don't get as many benefits. And then you can change that status to head of household because the person was going the last 6 months of the year and you have a qualifying child in the house. Any questions? So these are 5 filing statuses that you should be aware of. And again, filing status is important because it tells me how much I can deduct my income by. All right, every filing status has a deduction with it. To get a qualifying child, I have somebody that's related to me, someone that's under the age 19 or under the age 24 and a full-time student, or any age if they're permanently and totally disabled. The child has to live with me for half the year, for more than half the year. And the child must not have provided more than half of their own support. And lastly, they cannot file a joint return. The child isn't filing married, filing jointly. And that's really the rules of a qualifying child. If you are not a qualifying child, you might be a qualifying relative. Qualifying relative would be someone who's related to you that lived in your household, or someone who's not related to you that lived with you as a member of your household all year. And this is the key thing, that person made less than $5,050. So this is somebody that's not a qualifying. So I've determined that they're not a qualifying child because maybe they were too old. The relationship was different. Then I come over here and say, well, if you lived in my house all year, like maybe my girlfriend and my girlfriend's kids or something, they lived in my house all year and they didn't make less, they made less than $5,050, I could claim them on my taxes. And I have to provide half of that person's support. That would be called a qualified relative. And there's a different benefits you get for a qualified relative than you get for a qualifying child. But first you got to see if you can claim someone to determine if you can get anything. So those are the different types of dependencies you can have, either qualifying child or qualifying relative. Most people that we're going to deal with in our space are going to be qualifying children. Every once in a while, you'll get a qualifying relative. That could be like your mom. That could be the 30-year-old kid still living in your house that ain't working. Like, those are qualified relatives.
Justin.
Go ahead, Nafis.
Sure.
Okay. You just said something. If your girlfriend is living with you,
yeah,
and then their child will become a qualified dependent if you want to file.
Qualified relative, yes.
Relative, right, yeah, qualified relative. But the girlfriend and you, can you file a joint return, though you're not married?
We can't file because we're not married. You only can file married, file jointly if we're married, correct?
Right, and if the girlfriend files the child, you cannot take them, right?
That is correct. That is correct. If the girlfriend claims the kid, I can't claim someone who's claiming someone else.
Okay, and for the girlfriend, it will be qualifying child, not a relative, right?
If depending on the age.
Depending on the age, right?
Yeah.
Okay.
Yeah.
Okay. Thank you.
Desmond, did you say that people can claim your boyfriend if your boyfriend's living? That's not a relative.
Yeah, that's well, they call it, the term is called qualifying relative, but that boyfriend must live in your house all year as a member of your household. The term is called qualified relative, but yes, they're not related, but that's just the term of those kind of dependents all over here. That's where the boyfriend and the girlfriend would go. They don't go over here.
So you can have.
I know what you're saying, but
it's just the terminology that they use for the IRS here. They probably should call it a qualifying person, but they call it.
Yes, because I don't think we ever allowed them to claim a boyfriend living in your house.
You can do it as long as it may less than a certain amount of money. This is key. They got to make less than $5,050. Yeah.
No.
If they're not related to you, they must live with you all year as a member of your household.
Where was y'all at a couple years ago? Y'all should have been
right. This is this.
You should have been told me this, Desmond. I would have been claiming a couple people.
Yes, a lot of people could have claimed
this. Has been around for a while. This is not new.
But it says relative. You had to be a blood relative.
No, this is the term is so-called qualified relative. This is why I'm giving it to you. It says the person either must be related to you in one of the ways listed under relatives who do not have to live with you on table 2. That's like your mom, your child. It has a list of all the people. Or must live with you all year as a member of your household. And your relationship does not violate the local law. That's like you're not kidnap somebody. So this is that boyfriend.
Forgot about this or that's in the middle.
Yep. There you go. That's why I give the example of the girlfriend or the girlfriend's kids. The girlfriend kids may not be my kids, right? They're not related to me, but I still get the opportunity to claim them if they're not working. Girlfriend got first dibs, of course, but if she chooses not to, I can claim those kids.
You should have told me this, Desmond. I'm finna tell my friends. I'm finna.
Hey man, I give you. I'm just
get you your $600.
So now we'll talk about later what you get with that, but it ain't like you're going to get. It's nothing crazy.
Right.
Claiming that person, you get like a $500 credit. It's not like you get a lot. With the child, you can get a $2,000 credit. You can get dependent care credit. You can get American Opportunity credit. There's a lot you can get with it. Not with the relatives. It's only $500 credit you can get. It's not like you're gonna. It's not much else that it does but that.
So would that put you though under head of household though, if you was to be able to claim your?
That's a great question.
Your boyfriend,
that's a very good question.
Because now you're providing like the basic.
That's a really, really good question. So to answer that, the answer is no.
Okay.
To get head of household, that qualifying person has to be related to me. So that could be what you're referring to when you talk about your boyfriend. You can't get the filing status of head of household, but I do get to claim them. So this person would be single with claiming someone where I get a $500 credit. I may not be able to get head of household. Now, if they're related to me in the ways of people who do not have to live with you, your mother, your son, then I can get head of household if I have that relationship. Does that help?
Yeah, I just thought it was gonna help the person also get like a higher standard deduction too. But
yep, if they related to him, not the boyfriend. The boyfriend does it, the girlfriend does it.
Okay.
Relationship does. The bum on the 30-year-old bum does though.
Some people have like ill boyfriends or girlfriends. People have medical problems. They want to help out. They want to.
Yeah, they just can't get filing status as they just can't get filing status of head of household. They'll be single.
Okay, thank you.
If you have 3 or more kids, would you get the $2,000 credit for each child?
That is correct. Each qualifying child.
Okay.
So it doesn't have to be a boyfriend or a girlfriend. Is anybody who is living with you more than the whole year or the 6 months?
The whole year, if they're not related to you.
Oh, okay.
6 months if they are related to you, but they got to meet these age requirements.
Okay. So even it goes for boyfriend and girlfriend as well, the whole year.
Boyfriend is girlfriend. They're unrelated to you, so they're over here, and it got to be the whole year.
Okay. Now, if somebody lives with you the whole year as a paying rent because you have a house, you're living alone, you're renting a room, but they are paying you in cash. But you can, they said, I'm not going to file, you can file me as a dependent.
Well, it sounds like you're doing tax fraud now.
Okay, I'm just asking. I don't know. I don't have anything like that. But
their income, I told you, their income has to be less than $5,050. So if they're paying you rent, my guess is their income isn't less than $5,050.
Okay.
That makes sense. I see where that could come from too, because even like certain places it's like that. Like if the person is paying you income, then it's not you taking care of them no more. It's like
exactly what that is. Because now I'm also not providing more than half of that person's support.
Yes.
They just paying me rent. Then I'm out of that. Then they're not a qualified relative.
But if it's like basic necessities, like things to take care of themselves, like their hygiene products and stuff like that, and it's not rent, does it still fall underneath that?
Well, support would be rent, support would be electricity, support would be utilities and all that other stuff. If I'm paying half of it, I'm good. But they're just buying their toothpaste and stuff. That's not half of their support. Again, they got to be making less than 5,050 too.
Okay. So I got a question though, because it's a personal question. I'm gonna talk to you after class.
Okay, I'm around. All right. So that's it. So child tax credit. Child tax credit would be a credit up to $2,000 that you can get for a related child under the age 17. That's a U.S. citizen. They also then provide half of their own support. They live with the taxpayer for half of the year, and they must have a Social Security number. Must have a Social Security number. So this is similar to this person, very similar to that person, but the age is at 17, under age 17, while this one was under the age 19. So under the age 17, and this one must have a Social Security number. This qualifying child did not have a Social Security number to claim them, but you got to have a Social Security number and under the age 17 to get the credit. It's a little different between the qualifying child. Lisa.
When is the IRS going to find like the fraud regarding claiming foster kids? Like I'm still waiting for that to come out, because from my understanding, you get paid. So isn't it like a double? I don't know, like
I don't know. I mean, foster child is someone you can get a credit for. I think
but
the problem
working, like I had an issue like that. I was working and I had made more than the 5,000 amount, and I was
the 5,000 amount is for a qualified relative.
So it don't matter how much your child make, because in one of the scenarios,
it does not matter about a child. Child are not asking you how much money you make. They're saying, did you provide half of your own support? It's relative, right? So if my child lives with me, let's say I make $300,000 a year. My child lives with me and makes $30,000 a year. And I pay the mortgage, I pay the electric, I pay utilities. That $30,000 ain't doing nothing because their shelter is $10,000 a year. I mean, a month. I'm providing half of their support. If I got an 18-year-old kid that's making $30,000 a year and they living in my house and I make my mortgage is $10,000 a month, I'm supporting that kid. That $30,000 they making ain't doing nothing for their shelter. I'm supporting them still. They're living in my house, so it's relative.
I feel like that's why parents be doing too much. Was you live underneath my roof? You live underneath.
That's the truth.
But like
roof, there's shelter. Shelter has value. Shelter is a big thing of support that people take for granted.
That's true.
So you can get a credit for $2,000 for that qualifying child. So there's a credit for other dependents. It's for $500, and that's that qualified relative. You can get a $500 credit for that person. And those are people that usually are older, 17 and above. And you don't have to have a Social Security number to get that one. So that's really that qualified relative. That's usually that person you get the $500 credit for. That's that boyfriend, that girlfriend that's living in your house all year. Or that 30-year-old son or daughter that's just isn't working, you're taking care of. You get a $500 credit for that person. All right, and then there's earned income credit. There's rules for earned income credit. Everybody got to have a Social Security number. You cannot file as married filing separately, unless, again, the spouse is going the last 6 months of the year. The child has to be related to you. This is not a qualifying relative. You can't get EIC for the relative. You can't get EIC for this person. You only can get EIC for that person. You cannot get it for the qualified relative. You only can get it for the qualifying child. So you got to be related to you. You got to meet that age test, under 19, under 24, full-time student, totally permanently disabled, live with you for half the year, and did not file a joint return. Support test is not related to EIC. So this is if you have a qualifying child. And if you don't have a qualifying child, you just got to be at least age 25 and under the age 65. And then your income can't be no more than this $18,000 with no qualifying child. If single, 25,000 if married. Can't nobody else claim you. You can't be somebody else's dependent. So you got to, if you meet these rules A, B, or A and C, then you look at your income, whether you're married or not married, and determine if you have enough, did you make enough to qualify. If you're over the threshold, depending on how many kids you have, you can't get it. If you're under it, you'll get it depending on where you, how much you get is depending on where you fall in the bell curve of how much money you made. So the closer you are to the threshold, of course, the less EIC you'll get. The further you are, the more. Any questions on that? So again,
I'm sorry.
Go, sure, go ahead.
You said the closer you are to what?
The closer you are to your threshold, so this is your limitation amount. So if I have one qualifying child and I made $49,083, I'm not going to get a lot of EIC because I'm about to meet the threshold of how much I can make to even get it. But let's say I made $25,000, I'll probably get a good amount of EIC because I'm not close to phasing out of that threshold.
Okay.
Make sense?
Yes.
All right. Remember, gambling winnings is taxable income. If I ever want to know what's taxable, I can go to this chart. Gambling winnings are definitely something that's taxable. So let's think about this client. This is the person. So you should have this up on your screen. We're talking about Sharon Smith. Lisa, did you have another question, or your hand just still up?
Yeah, I'm sorry. So when you said that, I meant to say yes. I'm sorry. So is it based off your AGI once the deduction adjustments have all been?
Yes,
like,
this is based off of your AGI.
like
based off of your earned income and your AGI.
Your earned income and your AGI. What do you mean?
That's a good question.
Income.
So what I mean is, let's say I made $10,000. I made $25,000 of income. That's my AGI is $25,000. Of that 25,000, 10,000 of it was unemployment. So my earned income is actually 15,000. And that's what I'm limited to. My earned income is 15,000. My AGI would be 25,000. Okay, I need to look at my earned income. My earned income would only be wages.
Thank you for saying employment. I forgot employment don't count. There's certain things that don't count as earned.
There's certain things that don't count as earned. That is absolutely correct. And I'm sorry, I should have went over this a little bit deeper. This is earned income. So this is what it includes. This is what it does not include. It does not include unemployment as earned income. It's still all taxable stuff. I gotta pay taxes on unemployment, but I don't look at unemployment as when I'm thinking about getting EIC. So if I came to you and I said, hey, I had unemployment income of $25,000, I have one qualifying child, I don't get EIC because that unemployment is not considered earned income. If I had 25,000 of wages, I would get unemployment, I would get earned income credit because that's earned income. Both are taxable income. Just one gets me earned income credit, one doesn't. So yeah, unemployment is taxable. All right. So what's the filing status for this person? Looking at this scenario, what do you think the filing status is?
Head of household.
Head of household. Anybody got anything different? Good. How much is their deduction based off of their filing status?
$21,900.
21,900 because they're filing as head of household. That's the standard deduction for a head of household. What is there a dependent? Do they have a dependent?
Yes.
Is it a qualifying child or a qualifying relative? Which one is it? Child or relative?
Qualifying child.
Thank you. Qualifying child. So what kind of income do they have? Do they have earned income or unearned income?
Earned income.
They have earned income. What about the gambling? Is the gambling earned or unearned?
Unearned.
Unearned. Gambling is unearned. Wages, I work for the earned income. Gambling is something I'm playing games or whatever. That's unearned. Do they have taxable or do they have any non-taxable income? Is there any, what's taxable?
Both earned and unearned, right?
Well, earned and unearned are a different question. I'm asking what's taxable and what's not taxable.
Can you show us the information again about the person?
Y'all should have this up. You should definitely have this up when you're
I'm
in.
trying to find. I'm on the pub.
6744, page 75. Go to page 75 of your 6744 booklet.
I have it on the computer, but you know, on the computer, the pages and the one on the side be two separate things. So I'm over here struggling.
Yeah, so
Okay.
you don't struggle. Yep.
Thank
Yep.
you. It's
So
the other page.
So just to go back to what's unearned, $50 of interest. This was unearned too. That's unearned income. Gambling is unearned. Earned is the wages, and that's it. And then what's taxable? What's taxable and what's non-taxable?
Taxable is wages.
Taxable is wages.
Interest.
Interest is taxable.
Lottery winnings.
Lottery winnings.
Lottery winnings is taxable. Is there anything that's non-taxable? Not a trick question.
Because that's all she had.
Nothing.
Yeah.
So everything is taxable is the answer. Yes. So there is nothing that is non-taxable. All right. So what credits are they eligible for? Do they get a child tax credit?
Yes.
Why?
2 children under 17.
Under 17. That's good enough answer for me. What about a credit for other dependent? Do they get that?
No.
Why?
Oh, no. Yes,
Because they would have to have a kid that's 17 and above to even think about that one, right? So they don't have a kid 17 and above. They got a kid under 17. So they don't have to worry about that one. How about earned income credit? Do they get that?
Yes.
Yes.
And why?
Because
Social security numbers. They got social security numbers.
Qualifying child.
Filing as head of household. They got a qualifying child here. And what's the income? Did they make the threshold for one qualifying child? Did they make less than 49,084?
Yes.
They did. So they're at 44 plus 2 is 46,500, 46,550 where they would be. And that's under the 49,084. Cool beans?
Question.
Yep. Sure.
So you mentioned that the gambling is unearned, but you still use that in determining the threshold?
You do. So it's earned income and AGI limitation. That would be part of my AGI limitation.
Okay.
All right. You guys did really good with the review. With that, you should be able to answer these 3 questions. I am not going to give you the answers, but I think we went over them well enough that you should be able to answer those questions. So take notes, write your answers down in your book, write them on a Word document, whatever you want to do. make note of your answers. So whenever you get into the Link Learn certification to put your answers in, you know what they are. So these are the questions you're going to be posed. Make note of your answers. Can I move to scenario 2? Be good?
Yes.
Any questions on scenario 1? Moving on to scenario 2. Jeff and Jane, they're married. They got social security numbers, but Jane is a resident alien and Jane has an I-10. Jane has an I-10. Jeff and Jane got 2 children that are age 7 and 15. They're U.S. citizens, and they both have valid social security numbers. Jeff earned $23,000. Jane earned $21,000. In order for them to work, they paid their son Jim to take care of Joan after school. They all provided all the support for their 2 children. What's their filing status?
Married, filing jointly.
Married, filing jointly. What's their filing status? What's their standard deduction because they're married? $29,200. Do they have a qualifying child or do they have a qualifying relative?
Qualifying child.
They have 2. Yep, they got 2 qualifying child. They're both under the age 19. Live with them for more than half of the year. Did not provide half of their support. They're not filing as joint, and there's a relationship. They got 2 of them. Do they get child tax credit?
Yes.
Yes.
How much do they get?
4,000.
How much?
4,000.
4,000 because they got 2 kids that are under age 17. They're U.S. citizens. They can claim them. They did not provide half their own support. They lived with them for half of the year, and both the kids got social security numbers. 2,000 per kid. Very good, y'all. Are they getting a credit for other dependents?
No.
No, because they don't have a kid that's 17 and above, so they ain't got to worry about it. Earned income. Somebody had a question?
No, you're going into that, I think. Yeah.
Yep. So earned income credit. Do they get earned income credit?
No.
No.
Why?
One has ITN number. Both have to have S.
Yep. You got to have a social security number. So once one person does not have a social security number, this is dead. One person did not have a social security number. Everybody on that tax return has to have a social security number. So that is absolutely correct. Very good job. Dependent care. So dependent care, to super simplify this, is for someone who's under the age of 13. This is basically what we're going to see a lot of when people come into our sites. Somebody is under the age 13 and they use them, they took them and put them in childcare so that the parent can work or look for work, they say. And the care includes the cost of service for that qualifying person. And they put them somewhere after school care, before care, child care. So after school care, before care expenses, attending kindergarten or a higher grade are not an expense. Summer camp is an expense, but not overnight camp. Okay. But it's for the person has to be looking for work. You have to be either working or looking for work. And they said that. They said they were live with the tax. They said, what did it say? I'm sorry. In order to work, the Springs paid $2,000 to their son for Joan care. So there's one thing you should be aware of, is that where is it? I think it's on this page. The payments were the payments made to someone you or your spouse could claim as a dependent. Was it?
Yes.
Yes.
If the answer is yes, what happens there?
Can't claim it.
So they're saying that the only way you can do this is if the expenses were made to like a business, someone, not even say a business, but someone who is not your dependent. So let's say I had a 25-year-old son living in my household that works. I'm not going to claim this kid. And this person goes and picks up my younger kid. Now that person would qualify because I'm not claiming that 25-year-old. So it's not just because it's a kid in my house. It's if it's my dependent, I can't pay a dependent and still try to get this. So daycare, like if they go to a true daycare, that's fine. But I want to make sure you understand somebody could be living in my house that I paid and still get this. I just can't be claiming that person that I'm paying. Clearly, they're claiming the person that they're paying. So you can't get it if you're claiming that person. Everything else was working for them until they met that part. Does everybody understand what just happened? Any questions around that? We good? All right. Sure. Go ahead.
Can you claim your wife as a dependent, or is it just boyfriend, girlfriend?
So why would I claim my wife? What would I do with my wife?
I mean, like for the ITN situation, like being that or no.
Oh, I hear your point. But even with the ITN person, if I claim them, where are they going to be?
They don't count as a dependent?
They don't, but let's say for magical reasons, what if I could claim them? Where are they going to show up? Where are they going to be?
What do you mean?
Am I going to put them on my tax return as a dependent?
Can you?
if I could, would they go in as a dependent? If I put somebody on my tax return that does not have a social security number, I still don't get EIC. So they would go on my tax return. If I could even do this and put them on my tax return as a dependent, they still got an I-10. So no matter what, I still don't get EIC.
But no, I don't get nothing at all.
You don't get nothing. You don't get EIC. They got child tax credit. You just don't get EIC. So that person, no, you can't claim your wife. You just file as married and get the higher standard deduction. But my point is, if they could have claimed them, they still couldn't get it because they got an I-10. Then that's for EIC.
Okay, thank you for
clarifying.
But for filing taxes as a joint with a wife with the I-10, it is allowed. Only for the EIC, it's not. I-10 doesn't count.
That's the only credit that eliminates it. Child tax credit has no rule around I-10s. For the dependents, you got to have social security number. Now, if the dependent had an I-10, then you couldn't get child tax credit because the dependent has to have a social security number. But if the parent has an I-10, that doesn't count. They're talking about the dependent on this one.
Okay.
While EIC saying if anybody on this thing got an I-10, nobody gets it. That's not what child tax credit said. Child tax credit just says if the dependent doesn't have a social security number, they don't get it, which is different than what EIC is saying.
Okay.
And child credit for other dependent doesn't care about an I-10 at all. You can have an I-10 and get a credit for the other dependent for 17 and above.
So my question is, what if one of the kids had an I-10? They would just get credit for the one that do have a social security number?
That is correct. Very good question. Yep, they would just get the one. So what here, Matt, I'll expound on that a little bit differently. So if they had one kid that had I-10 and one kid that had a social security number, they would get $2,000 for the one kid, and they would get $500 for the other kid. So this would be someone.
I thought the kid got an ITN number. They don't get nothing if you have.
They don't get EIC
or child credit. They do qualify as a dependent.
They qualify for credit for other dependents because this is for available for the dependents who don't qualify for child tax credit, such as children who are age 17 and above, or they got I-10s. or children who do not have a valid social security number.
Okay, thank you. Because I've seen some of that last year when, like, as an intake specialist, and I was just curious.
Yeah, no worries. All right. Let's go over these. What's the filing status for this person?
Married, filing.
Married, filing jointly. How much is their deduction?
20, what is it?
29,200.
29,200. And is there a dependent?
Two.
Yes, 2.
There's 2. Qualifying relative or qualifying child?
Qualifying child.
Qualifying child. Is the income earned or unearned?
Earned.
Earned. What credits are they eligible for and why? Do they get EIC?
Yes.
Yeah. Do they get EIC?
No.
No.
Why?
Because of the wife.
Because of the wife. Great answer.
Yes.
Child.
Yes, the I-10.
Child tax credit. Do they get a child tax credit?
Yes.
Yes.
Why?
They have 2 children under the age of 17.
That's good enough for me. And they got social security numbers. Do they get the other dependent credit?
No.
No, because they don't have to worry about that. What about child and dependent care credit? Do they get that?
No.
No. Why don't they get this one?
Because they paid their son, Jim.
Because they paid the son. You guys are doing a
Son that they're
great
claiming.
job. You're understanding how this all works. Very good. You should be able to answer these 2 questions. Anybody need more time on this? All right, next one. Mary Wood. It's a different concept now. So Mary Wood is 58. She's single. She had $51,000 in wages, and she has a high deductible health plan. This is an HSA question. I had a question in a scenario. I'm sorry, I missed this, Cynthia. Advanced scenario 2, what happens if they file separately? If they file separately, then this rule is not met, where you must meet certain requirements if you are separate from your spouse and not filing as a joint return. So if they file separately, the only way you can get EIC if you are separate from your spouse for the last 6 months of the year. This is not the case. They're married and they're living together. So this would eliminate them by filing separately. You couldn't get EIC, just to answer that question.
What if
only if they were living separate from their spouse? Go ahead.
What if somebody was going through a divorce and this was the situation?
Then that spouse need to be out the house the last 6 months of the year.
Okay, as long as they're out the house, then everything's good.
That would be fine. If they're out the house the last 6 months of the year, then that would have been fine. And they would actually, if that was the case, they could probably file as head of household, right? And they wouldn't have to worry about having to file married filing separately. All right, so this one is about HSA. To get HSA or to even consider HSA, you have to have a high deductible health plan. So that's why they're telling you that this person is on a high deductible health plan. They have self-only coverage. During the year, they contributed money until the HSA. So Mary contributed $2,000. Her mother contributed $1,000. So that's $3,000, $2,000 from her, $1,000 from her mother. And also her employer, this is on her W-2, shows 1150 in box 12. And I think I was showing you guys that earlier with the code W. It says that the employer also put money inside of this HSA. So Mary put in 2,000, her mom put in 1,000, and the employer put into 1150. That, and that. So there's a total of 4,150 was put into an HSA. Follow me? We all good to this part? All right. So then she has a 1099. I'm sorry. So a 5498 is a form, and I'll show it to you a little bit later. It says how much money was contributed to this HSA. That's the total of everybody that put money in it. Mary, her mom, her job. It was going to say 4,150. I can show it to you what it will look like. This is what it will look like. This is the 5498. It will look like that. It says 4,150. That's how much was put in there. All right. So then they had distributions, meaning they took money out of their HSA, and she used it to pay for the following expenses. So if I have money in my HSA, I can take money out of it, but I only can use it for qualified medical reasons. Qualified medical reasons would include going to see a therapist for a knee surgery, paying some doctor bills, paying for prescription medicine, replacing a crown, deep cleaning on my teeth. Over-the-counter medication is included with HSA. What is not included is a gym membership. All right. So she would have got a 1099 SSA, which is this thing, for 1099 SA for $3,880. The $3,880 is the total of all of this. All of that totals up to be $3,880. So she took money out of her HSA for something she wasn't supposed to. So keep that in mind. She took out $3,880, which included all of it. Within it, there was $260 that she should have not taken out of there, and we'll deal with it. All right, any questions about what I just talked about? I talked about how much was distributed. I talked about how much was put in. And who put it in. All right. So HSA is just to help make sure you just get a simple understanding. It's kind of like a retirement account. If you think about an IRA, people put money in their IRA, and then are able to take the money out the IRA later on in life. With an HSA, it kind of works the exact same way where I can earn interest and dividends and gains on it. I can put money in an HSA, but I don't have to wait until retirement to take it out. I can take it out immediately, but the only reason I can take it out is for medical purposes. I can't take it out for anything but medical purposes. If I take it out for something that is not a medical purpose, I'm going to have to pay a penalty on it. I do have to have a high deductible plan with my employer in order to even have an HSA account. Anybody can put money in my HSA. My mom, I can, my cousins, my friends, anybody can put money in my HSA. I can take a deduction for the amount of money that's put on my HSA. Anybody that put it in except my employer. I cannot take a deduction for what my employer put in because my employer gave me the benefit already. I can't double dip on it. So everybody but my employer. So there are limits that I can put in. If I have a family plan, I can put in up to $4,300. If I have a self-only plan, which this person has, I can put in $4,150. And if I'm over age 55, I can put an additional $1,000. So this person was 58, had a self-only plan. So they can put in up to $5,150. They can do $4,150 and they can put another $1,000. So they can put it up to $5,150 inside of this HSA account. Any questions on that? So it depends on what kind of plan you got. Either you got a family plan, which means you're married, or you're single with a kid, or you're married with kids. That's a family plan. Self-only is just you're by yourself, nobody else. And if you hit a certain age, you can put some more money in. Any questions on that? This is the contribution limits. All right. So I just want to go over just so you can understand. These are included medical expenses, and it's like a whole list of things. I'm not going to go through all of them. Page 48, you can see the list. But in addition to that, this is stuff that you can take money out for HSA, for menstrual care products, for over-the-counter products. they're now something that you can take out of your HSA, which is not normal for medical deductions. You can do that though for HSA. What you can't do are health clubs. Health club dues are ones that you can't include. So that's why we had to take that gym membership off. It's just IRS rules.
What are the numbers you had? 3,341.50, right?
I had 4150 was contributions.
Okay.
4,150 are the contributions. 3880 was the distributions.
Okay.
So this is showing this is what my employer put in. All right. So I want to make sure you understand something. 4,150 is how much was put into this person's account. That is not what I can take a deduction for, though, because in that amount is the 1,150 that my employer put in. So I need to make sure I account for that. That's why it's important you account for that by putting this on your W-2 when you do it. Your W-2 will know what you're telling this computer, how much money you put into this, how much money your employer put into your HSA. So if you miss that W, you didn't tell the computer and you're going to mess up somebody's taxes. That's why these fields are important. You got to make sure you're putting in all these fields right.
So you got to put the W, not just the amount?
You got to put the W and the amount. So when you're in a computer, you put both of them in there. Sometimes people skip stuff in box 12. I'm just showing you why it's important that you put the stuff in there.
It's not like a selection you can click like how the other one is for.
It is. Yep. You can choose W like you can choose D. But if you see it, make sure you select it.
This message is of notification to update.
Okay. And then when you said 4,000 and some change, is that like all together, including the 1,500, the
yep.
1,000? Okay.
That's including 1,150. So the 4,150 again, it was the $2,000 that Mary contributed. It was $1,000 that her mother contributed, and it was the 1,150 that the employer did. Add all that up, you get 4,150. All right, I'll do that one more time. $2,000 was from Mary. $1,000 was from her mom. 1,150 was from her employer. Total is 4,150. All right, and that's what's showing up on that box. So that's what that 4,150 is. So let's break this down a little bit. And distribution was a 3880. And let's break this down. So the question that's going to happen, and this is what's going to happen behind the scene, but I want you to understand what's happening. There's a form called an 8889 that makes sure that you get an adjustment of the right amount. So up here, you want to know what's my HSA contribution and what's the deduction I can take on my taxes. Deduction meaning I can make an adjustment. I can make an adjustment on my taxes. So they ask the question here, HSA contributions you made for 2024 or those made on your behalf, including those made by the unextended due date or tax return. You can do it up into an extension amount. Do not include employer contributions. So it would have been $3,000. $3,000 would have been Mary's $2,000 and her mom's $1,000. I am not including the employer portion. So right here it's saying $3,000. Here is saying, well, how much could you put in? Well, I could have put in 5,150 because as a self-only plan, I can put in 4,150. And if I'm over 55, I can put in an additional 1,000. So that's how much I'm allowed to do. So this is what I'm allowed to do. And then it says it's basically copy down what you were allowed to do. Copy that down. This is how much I was allowed to do. This is how much I was allowed to do. Then it says, well, how much did your employer put in? My employer put in 11,150. So if I subtract that from what I was allowed to put in, I would have been able to get a deduction for $4,000. But then they say, well, how much did you actually pay? I only paid $3,000. So my deduction is limited to $3,000. So while this document says that my contributions was $4,150, that's not how much my deduction is. My deduction is going to be my total amount of contributions minus what the employer put in, which equals the $3,000. Does that make sense to everybody? Any questions on that? So here, I'm going to reduce my income by $3,000 because that's how much I or somebody on my behalf put in.
So in part 1 of 8889, you put all the contributions, mothers, hers, and the employers, right?
So what is this right here?
Mm.
What's that right there?
That is all, right?
What's this right here?
I don't see your arrow.
You don't see what my arrow is?
Employer
Oh,
contribution.
that one. Okay, employee contribution.
Right.
Yes.
That's employer contribution. That's on part 1. And what do you see up here? What's that? What's the 3,000?
That is her own.
That's who?
No, hers and the mothers together.
Right. So I think I just answered your question. What's put in part 1?
Yeah.
That's all the stuff that's put in part 1.
Okay, thank you.
All right. So let's look at part 2. Part 2 is the distributions. This is all the money that I took out of my HSA that year. That's what's going to show up on this document. And that totals all of this. That's $33,880. So then I said, of that $3,880, they asked me how much of it was qualified medical expenses. Well, all of it was except for the 260. So 3620 was the qualified medical expenses. So I have 260 left over because 260 of it did not qualify as a distribution. So you know what? I have to pay a 20% tax on that 260. That's what the $52 represent. And I will have to pay it every year until I put that money back into my account.
Okay. I made the mistake. I took my P&A card, which is the HSA card, and I paid for some groceries without even knowing that I took that card. And then I'm like, oh my God, what did I do? Now, what's going to happen? Because that is for the year 2025 HSA. So
this is, I'm showing you what's going to happen. You need to put that money back into that HSA or you'll get penalized. You'll pay a penalty on what you took out for groceries because groceries is not a qualified expense.
Okay.
So you need to reach out to your HSA account manager and put the money back in the account.
Okay, thank you.
And you'll be fine if you do that.
Okay, sure.
I'm lost.
So that's that. What part are you lost at?
So I understand the subtraction to really find out how much contributions you made.
Okay.
But I'm not, where did you get 5,000 from?
How much can she put into her HSA? She's a self-only plan.
4,150.
How old is she?
Let me go back to the stuff. She is 58.
So she is over age 55. So how much additional amount can she put in?
$1,000.
If she can put in $1,000 and she can also put in 4,150, what's the most that she can put into this account?
5,150.
That's what that number represents. This is just saying what's the maximum amounts that you can put into these accounts.
Okay, not what
not what she did, what she can do.
Okay.
And then this is telling me of that, 1150 of it was employer. So there was $4,000 that you could have put in there. But how much did they put in?
3,000.
3,000. So I'm only gonna get a deduction on what I actually put in.
Oh, so they subtracted the employers and then they're like, oh, you really could have put in the 4,000.
Exactly, because I could still do $1,000. So the way this works is I have up until I file my taxes to fund this HSA. So I can put up to 4,000. I know I already put a 3,000 in there. If I wanted to, I could go to my HSA and say, here's another $1,000. And then I can take a deduction for the full $4,000. I could do this after the year is done. I could do this up until April 15th. So this is why it's telling me, you can actually get a deduction for $4,000. And I'm saying, I know that, but you know what? I only put in 3,000 and I'm gonna just stay with that.
So does it kind of like, it's better to pay more, like the maximum you can yourself? It's just
you can,
for
if you want to.
You take money out later on for things that's not covered, so you don't have to.
I think it's not a bad idea to put in there, and that money grows earn interest and dividends on it. I don't see nothing wrong with doing it, but this sheet is letting you know what you could do. But here is what you actually did. This is saying, like, what did you actually do? This is what you could have done.
Okay, thank you.
But is it not that you can put the maximum amount, but if you don't use it, you lose it, right?
It's not a lose it. I didn't put the money in there to lose it. This is opportunity to put more money in.
Right.
It's not a lose it or use it. You're thinking of FSA when you say lose it or lose it. If I put money in and I don't use it, I lose it. I didn't put the money in. They're just saying, you know what? You put in 3,000. You could have put in 4. Do you want to put in another 1,000? That's up to that person.
So I'm thinking about the FSA, like
you're thinking about FSA. FSA, so FSA, the difference is I put in 4,000. I spent 3,000. I'm losing $1,000. That's a FSA. Why HSA is, I can put in up to 4,000, already put in 3,000. Do you want to put in an additional 1,000? You can do that if you wanted to. That's the difference.
Question.
Sure.
So if she realized that she had taken money she shouldn't have and she puts it in immediately, would she still have to pay the 20% tax penalty?
Nope. She just got to put it in as soon as possible and she'll be fine. She actually can do it up until she files her taxes.
Oh, okay.
Yeah. So if this happened, I would say, hey, you're going to get a penalty on that. Call your HSA people, put the 260 back in there. And what they're going to do is fix it. And then I say, cool, you're good. Then you didn't take out 3880 and they're going to change your 5498 to say 3620. They'll change this because this shouldn't say 30.
So she'll get an amended SA form.
She'll get a, yep. They'll change it for her.
Oh, okay.
Yep. Any other questions? So adjustment again goes on line 10. So this is where you would see the $3,000, or this will show up on your schedule 1, line 13. That's that $3,000. It will just wind up on your 1040 on line 10. But schedule 1 is basically all your different adjustments. So the total of your adjustments ends up on line 10. That's line 26 of schedule 1, line 26 of schedule 1. And you add all of this up. So this is where the $3,000 will come. And it reduces your income. The adjustments reduces your income. All right. What's this person filing status?
Single.
Single. Good. What's reported in part 1 of your 8889? What's reported in part 1?
HSA contributions.
Yep. What's reported? All your HSA contributions and any HSA deductions. All is that reported in part 1. What's reported in part 2?
Your employee.
Part 2 of the 8889. What's reported in part 2?
Is it the employers?
Part 2.
Contributions.
What's reported in part two?
Your
What you have.
Your expenses, I would like a better
Expenses.
word. What's a better word for than expenses for just this practice?
Your
Unreimbursed
deductions.
qualified.
Unreimbursed medical expenses.
Your deductions. Let me see. Total
Adjustments. What do you want from us?
Can y'all see my screen?
contributions. Contributions.
Distributions. Oh,
It's real small,
distribution.
Desmond.
Is this small for y'all?
Yes, very small.
Oh, I'm sorry. Distributions, y'all. This is all your distributions in part two. Part one is your contributions and deduction. All right. What counts as an HSA distribution? So what counts as an HSA distribution when we looked at, this is the thing.
Everything except.
That's the answer. Everything but that. Does that make sense, everybody? Everything but that. What's the next question? How much was Mary allowed to contribute to her HSA?
Or
5150.
5150. That's how much she was allowed.
oh, allowed. Okay.
Allowed. What portion, though, of the contribution can she do as an adjustment?
The 3,000, is that the 3,000?
That was the $3,000. She was allowed to put in 5,150, right? She put in 3,000. Her employer put in 1,150. Of all of that, she's only able to make a contribution as an adjustment on her taxes for what she put in or somebody put in on her behalf. That's not her employer. That's the $3,000. Any questions on that?
Yeah, I just think it's the wording for it, like,
Yep.
because I know her job, although it's on the behalf of her, it's not really like what she's putting in, but it counts as contribution, so she's allowed to put into that, I guess, because.
So the wording that gets tricky is the difference between the contribution and what's the deduction. The deduction is what I can put on my taxes. So let's go back to this form. The deduction is what I can put on my taxes to reduce my income. The contribution is what was put into the account. So the contribution would have been the $3,000 from me and my mom and the $1,150 from my employer. That equals $4,150. That's why I would have gotten a document that says that I have made a total contribution of $4,150. That being $3,000 from me and my mom, $1,150 from my employer. Does that make sense so far?
Yes, I understand that.
All right. So that is my contribution. Now I need to figure out, of all the money that I have contributed into my HSA, how much of that can I deduct on my taxes? And what the IRS says, you can deduct all of it except what your employer put in. So I put in $4,150. My employer put in $1,150 of that. So I have to subtract out what my employer put in, and I'm left with $3,000. That's how much I can put on my tax return as an adjustment to reduce my income. I can't put the $4,150 because it's $1,150 is in that number. I got to strip out the $1,150. Does that help? Lisa?
Yep.
Yes, I'm sorry. I'm over here parenting. Yes, it made sense to me.
Does that make sense? Okay.
Yeah, the way you broke it down and the way you used the terminology, it made me understand it more.
Okay, so yeah, what's in here are all the contributions, and then they want to say, well, how much is the true HSA deduction? And you got to do some math to figure out that part of it.
So 3,000 is the adjustment, right?
That's the adjustment.
So where will it go on the 1040?
Yep, that's what I was showing you early. On the 1040, it would go right here on my 1040, line 13. And then on the 1040 is going to wind up showing up as an adjustment right here.
Okay.
Yeah. All right. How much is the additional tax on this one?
Additional tax.
60. Was it two?
That's $1,000.
How
Oh,
much was it?
additional. 1,000, like she said, Ms. Lena said.
How much is the additional tax?
52.
52. It's 20% of the amount of money that she was not supposed to take out of her account.
No additional tax.
It was 20%. We're talking tax. You guys are talking about the additional contribution.
Right.
See, so you got to pay tax on money you take out of your HSA that is not qualified reason. That's what we're talking about back up here. This gym membership was not a qualified reason to take money out of her retirement. This, she took it out. She should not have took it out of her HSA. And I shouldn't have said the word retirement. She should not have taken this out of her HSA, but she did. And if you do that, you got to pay a 20% tax on the money you take out your HSA for a reason that does not qualify. So that tax for 20% of $260 is $52. And you'll pay that tax every year until you put it back in. Does that make sense? So that question, how much is additional tax and why? The additional tax is 20%, and it will be $52 because they had money that they took out of their HSA that was not for a qualified reason, qualified medical reason. Does that make sense?
Yes.
Yeah.
Yes.
Awesome. No.
You found something to us that we get from HSA, right? The form, the.
Say it again.
You before you showed something to us like a 1099 that we get.
Yep, this is it. This is what you're going to get from the HSA folks saying this is how much money you took out of your HSA. Of this amount, how much of it was for qualified reasons? So for your example you talked about earlier, your HSA 1099 SSA is going to show all the money you've taken out. And then when you put it on your taxes, it's going to say, well, how much of that was qualified medical reasons? So for you, you would put in all the amount except the stuff you bought for groceries. And that amount is going to drop down here that's related to groceries, and you'll pay a 20% tax on it.
Oh, so the 1099 essay won't show that.
The 1099 essay is only showing what you took out of it. It's not going to break down if it was qualified or not. It's just saying you took this money out. When you do your taxes, you're telling the taxes what was qualified and what wasn't.
Okay. Thank you.
Yep. All right. You should be able to answer these questions based off of what we talked about. Take your time. This question is asking about the unreimbursed qualified medical expenses. What was the qualified medical expenses that was taken out?
10,000.
What was the qualified medical expenses that was taken out of the account? Up here is a list of all the stuff that was taken out. The question is, of that, how much was qualified? How much of this was qualified medical expenses that was taken out of the account? That's what that question is asking you. What was qualified? If it wasn't qualified, then you have to subtract that out. Any more questions on this one? All right. Next one, Cheryl Brown. So we got two more to do after this, and we'll take a break, a longer break. And then we'll do it's 9 to 5, and we'll start the tax layer in the afternoon. So this should be like another, I'm thinking 45 minutes, and then we'll take a break. I think we can do like a good 30-minute break or something like that. We'll see where we are when we get there. All right, so Cheryl Brown. Cheryl's 62, is single. Are we good? Any questions on this, the one we just did? Any questions? Any questions? Any questions? All right. I say that to say this is tricky. And I just want you guys to pay attention. I'm gonna try to break it down as much as I can. Cheryl is 62. She's single. She owns her home, and Cheryl provides all the costs of keeping up her home. Our only income is $48,000 in wages. Cindy, age 24, and her daughter Carrie, age 5, lived with Cheryl all year. So Cindy is Cheryl's daughter. Carrie is Cheryl's granddaughter. They all live with Cheryl. Cindy separated from her spouse in April 2023. But clearly she sounds like she's still married. But she separated in 2023. Cindy had $24,000 in wages. Cindy provided over half of her own support. Carrie, the grandkid, did not provide more than half of her own support. Cindy will not file a joint return with her spouse. All of them are U.S. citizens. No one has any disability, and they live in the United States all year. What do you think is Cheryl's filing status?
Head of household. Depends.
I hear head of household.
Head
Anything
of
else?
household or maybe single.
Be single as well.
I
if she
hear
doesn't claim.
Right. So that's you're on the right path. So it depends, right? So Cheryl would be she married in the last day of the year? She was not. Did her spouse die? Her spouse didn't die, so none of this matters. Did you do both of the following? Did she pay for half the cost of keeping up the home? She did. And does she have a qualifying person? Maybe.
Maybe. Yep, maybe.
So if she claims that grandkid, she's head of household. If she can't, not that she can't, if Cindy claims that kid, she's single. Because you got to have both. So it all depends what happens with this kid. Make sense? This is for this is for Cheryl. It all depends on what happens with this kid if she can claim this child. I mean, if she can get head of household.
No, Cindy provided half of her own support.
Right. I'm not talking about Cindy. I'm talking about Cheryl.
Yeah, but if Cindy also paid for it, doesn't say Cindy paid for Carrie too. Okay.
It does not. It just says that Carrie did not provide only half her own support. It didn't say who supported Carrie.
Yeah.
So Cheryl, if she claims Carrie, is head of household. If she does not claim Carrie, she's single. All right, let's do Cindy. What is Cindy's filing status?
Married, filing separate.
I got married, filing separate. Anything different?
She could be head of household.
Head of household.
I'm hearing that she could be head of household. How could she be? Tell me how she could be head of household.
She can't be head of household because she didn't provide more than half the child's support.
Thank you. So, was she married on the last day of the year? Yes. Did the spouse live away from the last 6 months of the year? Yes. Then, did you pay more than half the cost of paying for the home? Did Cindy do that?
No.
So then Cindy is back up here. So Cindy is married filing separately or married filing jointly are our only options. She did not pay more than half the cost of keeping up the home. She may have a dependent, but she got to have both. So she's back up here with married filing separately or married filing jointly.
So what does it mean Cindy provided over half of her own support?
It's just saying that Cindy supported herself. That's letting them know that Cheryl can't claim Cindy.
Okay.
Carrie's the kid that's making this all happen for both of them. Carrie's the one that has to support them. So remember, in the household is their kid and a grandkid. All right, so then we just in here, qualifying child. Cheryl has a child that is related to them, Carrie. A child that is under the age 19, Carrie. A child that lived with her for half of the year, Carrie. A child that did not provide half of their own support, Carrie. A child that is not filed a joint return, Carrie. So Cheryl has a qualifying child in her house.
So she can be head of household.
Cindy has a child that she's related to her. Cindy has a child that's under the age 19. Cindy has a child that lived with her for more than half a year. Cindy has a child that did not provide half her own support, and Cindy has a child that's not found a joint return. Cindy also has a qualifying child in her household. Yeah. So what happens is there's a tiebreaker. When there's two people that can claim a child, you have to go to what's called the tiebreaker rules. The tiebreaker rule says if only one person is the child's parent, the child is treated as a qualifying child of that parent. Cindy wins. So if Cindy claims this kid, Cheryl no longer gets the options of doing head of household. Now they can agree, and Cheryl could say, hey, I'm going to claim this kid. And if Cindy says, sure, I'm okay with it, then Cindy can, Cheryl can become head of household. But that's not Cheryl's decision. It's Cindy's decision.
Right.
Cindy has the right because she's the only parent of this child. That's how you break the tiebreaker rule. And if they were both parents, and then you would go to their income. If they were both parents, you could say, well, who had the highest AGI of the year?
What if Cheryl was supporting the grandchild, but Cindy still wanted to claim her?
She can.
She can't. It goes to the parent. It's not about who's supporting. It's the kid did not support themselves. It's not asking who supported the kid. It's asking, did the kid support themselves? The question is tricky. They're not saying who provided half the support. It's saying the child, specifically says the child must not have provided more than half of his or her own support. Not saying who did it. The child just didn't.
Okay.
So don't get caught up on who supported who. That's not the rule. Now, the rule about supporting someone is for qualified relative. This one says you must have provided more than half of the person's support. That's for a qualified relative. For a qualifying child, they're saying the child must not have provided more than half of his own support.
I think they should increase this so the mom can claim Cindy, because why is you in my house and not providing? It only says
well that's something that they got to take up, right? Because Cindy's making $24,000. Maybe Cheryl should be like, yo, you need to start paying me a little bit of rent. And she can't claim Cindy because she made more than $5,050.
Yeah, and then she gets to claim her daughter, and she didn't really do much. And then, like, we don't know grandparents' hope.
I hear you. I hear you.
It's a lot of people getting over on their parents who take care of their kid because it is. This is crazy.
But whose fault? But it's not an argument. I'm just saying, whose fault is that?
It's the parents' fault.
No, it's not. It's the parents' fault.
The parents that kid should be out the house living on their own.
Thank you.
That kid, you got to go take care of your kid while you're still in my house.
Right.
The kid might not get taken care of, and some parents know that. Like, I'm sorry.
But that's not the problem.
Oh, man. That's good.
So the tiebreaker rule, basically Cindy will win. But if I'm asked a question, who could claim this child? What's the answer?
Either one of them can.
Either one of them can claim this child. That's the true answer. Either one of them can claim them because they both have a qualifying child. But if it came down to it, the tiebreaker rule says the parent would win. Cindy would win.
Cindy would win.
Now,
Question.
Sure.
So, Cindy can claim her child even if she's married, filing separately.
Sure.
Okay.
Yep. So, who would get child tax credit?
Cindy.
Who would get child tax credit? That's not the answer I want.
Who would get child tax credit? Probably. What you mean?
Carrie. Carrie.
Who would get child tax credit?
Carrie or Cheryl?
Who would get child tax credit?
Oh, Lord.
Either one, whoever claims the child.
That's the answer I wanted to hear.
Oh.
Whoever claims the child will get child tax credit. That's the answer I wanted. Whoever claims this kid is going to get the child tax credit. That's the answer I wanted to hear. Yes, whoever claimed this kid is going to get child tax credit. Again, they got to decide who can do it. Either one of them could do it. If they arguing and they can't agree, the parent wins.
Yeah.
But whoever claims this kid gets the child tax credit at the end of the day. Earned income credit. Who can get earned income credit?
Cheryl.
Oh,
I don't think none of them can get it.
no, Cheryl and Sydney, because Sydney, well, no, Cheryl, because she's not filing jointly, she's filing separately.
Cheryl, because Cindy is less than 25.
Who can get child tax credit? Who can get earned income credit?
I feel like they both can, Cheryl and Sydney.
Depends on who claims this kid.
It's the kid.
So it depends on who claims this kid. So let's think about this. Cheryl made $48,700. Cindy made $24,000. So they both could get EIC. This rule in here about you have to file married, filing jointly. If the spouse was gone the last 6 months of the year, this is down here. If the spouse was gone for the last 6 months of the year, you can still claim the kid. You'll file married filing separately, but still get EIC. If your spouse was going the last 6 months of the year, which it was. Remember, the spouse was going since 2023.
Right.
So she still can get EIC. Now, for a qualifying child, you can make up to $49,000. The mother made $48,000. Is she going to get a lot of EIC?
No.
She is not.
She's close to the threshold.
She's close to the threshold. On the other hand, Cindy made $24,000. Is she going to get a lot of EIC?
Yeah.
She would. So what I would do is do it both ways and see what is most beneficial to this household. More than likely, Cindy is going to get a really nice EIC from this. It's going to be more beneficial than Cheryl getting the head of household filing status, because a credit is always better than a deduction. Does that make sense? So this is more tax planning, and if they're sitting down with me, I would actually do it both ways. But more than likely, that credit is going to be more helpful than getting a higher standard deduction for the household.
Especially when she ain't paying for her kid, yeah.
So I think the end result with this in real life, Cindy's going to probably just claim her kid and get EIC and call it a day. And Cheryl will just be mad. And then Cheryl will be like, you got to go. You got to go.
That happens at the tax site. Yes,
that Cheryl's like, you got to go. You getting these fat refunds and you ain't, you know what I mean? Hopefully Cindy shares it with Cheryl, because Cheryl is probably the one really paying more of the cost. But it is what it is. But I just want you to understand that two people can have a qualifying child And then there are tiebreaker rules that helps the IRS determine who should have if the person can. So if they basically were arguing, and let's say they came in on different times, and the mom came in, yeah, I got a qualifying child, and went to one site. The grandma went to a different site, and they both put that kid down. They can both claim them, and what would happen is they would get audited, and the IRS would say, "Well, who's the parent?" The parent wins, and that's simple. Lisa,
could you, if that's so, as tax preparers, like if we see a situation like that, and we want to compare to see which situation will work best for the household, could we ask, like, let's say if the other party can come in with them, like,
yeah, I would totally do that. I would just do both of their tax returns and say, well, this is the refund for you claiming, this is the refund for you claiming.
No, if they're both not there, like, can you ask that?
So I would not do that. I would actually just do the both tax returns, and they need to discuss it, because I can't share with another person what somebody else's situation is. So I would do both of them. I would say, hey, y'all can come in. I can do both of y'all taxes. Now y'all can go outside and talk about it. I can't tell you what she's getting, and I can't tell you what she's getting based off a kid, but y'all know because I just did it for y'all.
Right.
Now y'all can go outside and talk about it.
Talk to each other. Okay.
Yeah, that's how I would do it.
Okay.
For privacy reasons, you're not supposed to share somebody else's tax information.
No, like before you do it, like let's say, like you said, if they come in or if they're separate, like if mom comes in and I'm like asking her questions like, well, is there another parent that can claim?
Yeah, I would say have them come in and then we do their taxes too. Yeah. Okay. I still wouldn't talk about it, but I say have them come in and I'll do their taxes as well.
Okay.
All right, so that's that. What's the filing status for both? What would be the filing status for both?
Depends.
It depends. So if it could be, it would be single and married filing separately if Cindy claims a kid, or it would be head of household and married filing separately if Cheryl claimed a kid. Either way, married filing separately is Cindy, right? Mm-hmm. That doesn't change. Only person that can change would be Cheryl. Is there a dependent? Are they qualifying child or relative? We determined that's a qualifying child for both of them. What credits are they eligible for? Whoever claims the kid gets the child tax credit. Credit for other dependent is not in play because nobody is over 17 or older. And EIC would go to whoever claims the kid, basically. All right. So you should be able to answer these questions. And like I said, just make sure you understand this is actually asking to determine dependency, okay? They're not saying who claimed them, who didn't claim them. To determine dependency, Carrie could be a qualifying child of who?
Now, if Cindy is 24, which she is, and didn't have Carrie, then she's not eligible for EIC, right?
If she did not have Carrie?
Yeah.
That's correct. If she did not have Carrie and she's under the age of 25, yes.
Okay.
So to the purpose of determining dependency, Carrie could be the qualifying child of either.
I can't tell you what the answer is.
Oh, well, we already went over it, so
I'm giving you an opportunity to make note of your answers or put them inside of your Link Learn certification.
I'm doing that. Thank you.
Yeah. But we're basing this off of who's the tiebreaker when you were discussing about the tiebreaker.
No, I didn't say that. I said we're basing this on determining dependency.
Okay. Okay.
And down here, this question that somebody just asked, Cindy is not eligible to claim EIC for Carrie because she's under the age 25. If I'm claiming Carrie, that changes my rules. So just make sure you're paying attention to how these questions are being asked. It's asking you which of the following statements is true. If Cindy has Carrie, does her age matter? Is what's happening. And this is what they're saying. She's not eligible to claim EIC for Carrie. Is it because she's under the age 25? If I have a dependent, does it matter how old I am? So be careful with this question. All right. Any other questions on this one? Hearing none, we're going to move on. This is I'm gonna go through this a little bit fast because we're getting tight on time. I want to make sure we got time for TaxSlayer, and I give you guys a break. This is itemizing. I don't think itemizing is rocket science. You basically got to know what you can itemize and basically do math. So this is somebody who's 54 years old. They have an AGI of 52,000. They have gambling winnings of $2,000. These are all of the deductions that they want to know. Can I use this to itemize? So let's make sure we understand basic stuff. She's single. What's her standard deduction as a single person?
14,600.
14,600. Is that right? I didn't go to the slide. Is that I'm agree with? Is that what it is?
Yes, 14,600.
All right. So if it's 14,600, let's put this up here. 14,600. She's single. So for her to itemize, she got to have more than 14,600. So let's see if she does, right? So the things you can itemize are medical bills. I can itemize contributions to a qualifying 501c3. I can itemize taxes up to $10,000. And taxes being state taxes, local taxes, personal property taxes, real estate taxes. I can deduct mortgage interest, and I can deduct gambling losses up to what I won. So let's break that down. So I can deduct medical expenses. This is medical. Medical, though, I have a rule where I only can deduct medical expenses that exceed 7.5% of my AGI. What does that mean? I made, I know this is a little small. 9,500 was my medical. 52,000 is my AGI, which means 7.5% of my 52,000 is 3,900. I only can deduct what I had in expenses that exceed $3,900. So I got to take $9,500 minus 3,900, and I come up with 5,600. That's the amount of medical that I would be able to deduct. But because I only can deduct medical expenses that exceed 7.5% of my AGI. Does that make sense?
No, please do it again.
I will. So this person made $52,000. 52K, right? There's a rule that says for medical, you can only deduct medical expenses that exceeds 7.5% of your AGI, the 52,000. 7.5% of my AGI is 3,900. 3,900. That's 7.5% of $52,000. I had 9,500 of medical. I cannot deduct the $3,900. I only can deduct what is more than $3,900. So if I had, let's say my doctor bills was $3,901, I can only deduct $1 because I have a floor of that 7.5%. That 3,900 is my floor. I cannot deduct anything until I exceed 7.5% of my income. Oh. So I'm at 9,500. I got to first subtract out 3,900, and I'm left with $5,600. That's the math.
It is like the deductible in their car insurance, right? You don't get that back.
Something like that. Your deductible, something, you can look at it like that, but the deductible is 7.5% of your income.
Yeah.
So whatever that number is, you need to subtract that out of what you paid, and that's what you can put in on your tax return as a deduction. Does that help, Lisa, or whoever asked the question?
I probably, with more time, I guess, and more examples of that exact same thing, I'll understand it.
The computer will do the math for you, but just know, you can't deduct all of your medical. That's the key thing to know. Your medical is limited to 7.5% of your income. You have to exceed 7.5% of your AGI before you can deduct it. So if somebody said, hey, I had $9,500 of medical bills, I know you're not going to be able to deduct all of it. I need to do some math to determine how much of that $9,500 you can deduct. And
okay,
it has
since
better to make more if you have, because I just feel as though 9,500, that's almost 10 grand of doctor bills that like it has to,
that's true.
That's all messed up, low key.
It's not, yeah, it is what it is. It's the IRS laws.
now, this calculation 7.5, it is done in the background. Is there any schedule which does it?
Yep, it does it. The Schedule A does it.
Oh, it's just Schedule A
Yep.
does it.
So it'll be done in the background. That is correct.
And now HSA is not part of the medical bills?
So that's the next question. Can I deduct the HSA contribution? What do you guys think?
Isn't that an adjustment?
Oh, look at the answer. I love that answer. So can I deduct it as a itemized deduction?
Yes.
No.
No. And the no is because of why?
Pre-tax.
Because you already adjusted for it.
Thank you. I can't deduct it as a deduction because I already took it as an adjustment. Great freaking answer. Thank you. Really good. That's good understanding of how the HSA works. I already took an adjustment for the HSA. So I can't take a deduction now. That's a double dip. So
Wait,
thank you.
It's not the same person. What do you mean? You already took.
Say that again.
It's not the same person we talking about, right? When we did the adjustment, it's not the
No,
same.
no. We're assuming that this person has an HSA as well, and they did a $600 contribution to the HSA. They would have got a deduction for that. So they can't turn around. They would have got an adjustment for this HSA contribution. So they can't turn around, take the adjustment, and then turn around and say, now I want to take a deduction for it too. You can't do both.
I thought the house savings account work almost the same with like how these two don't work together. The 9,500 and 600. Like, is there a way we can like, I don't know, because I don't have a problem with doing people's taxes, but I'm not into all this IRS scheming stuff, to be honest with you. So
none of this was scheming. This is a contribution. We're talking contribution and you're talking cost. Two different things.
No, I mean the way they just finesse people out their money by the numbers. That's what I mean by the scheming part. Is there a way I could like talk to my client for future reference? Because it would have made more sense for them to put the 9,500 in the house savings account. I don't know. But this
they could have. No, I hear what you're saying. They should have contributed. They could contribute money into their house savings account and then took the
house savings
it's
account.
Possible.
Doctor's bills, right?
That is true. So what they would have done is had it paid out of there. That's possible.
So that's what I mean by like, because I morally, like, I would want to tell somebody that because that just.
And you can tell them this is not a moral or a non-moral thing. It's tax planning. To say, hey, it sounds like you got a lot of medical bills. Why don't you have a HSA account? But guess what? You only can put in up to a certain amount. This person is single, 54. They only can put in $4,000 anyway. Right? They can only put in $4,000, so they would spend some of it, and they still had to come out of pocket for some other stuff.
Yeah, because
they're limited.
High deductible plan, so they're still putting out more money.
They're still putting out more money, but they could have spent half of that through their HSA and the other half as a deduction on their taxes. It could have been done a different way, but I see your point.
Thank you.
State withholdings. This is taxes. I can deduct $3,600 of taxes. I can deduct $300 of personal property taxes. And there's also $2,300 of real estate taxes. I put that on my Schedule A like this. This is the 3,600. This is the 2,300. This is the 300. So I can deduct $6,200 in taxes. There is a limit though of only up to $10,000. So if I have more than 10,000, I can't put in any more than 10,000. If I had $25,000 of real estate taxes, I have to stop at $10,000. There's no more than 10,000 for taxes, but 6,200 is fine. So I got 5,600 and 6,200. I'm at like 11,800 now. I also can do mortgage interest.
Right.
My mortgage interest is $7,300. I'm putting that in right here, $7,300. Now I'm up to about what, $18,000. I already exceeded my standard, so this is a good thing. So it sounds like I'm going to itemize. I got gifts of $350. That's the $350 that I gave in cash contributions to Red Cross. I had $200 in fair market value that I gave to the Salvation Army. I put that on here as well. That's the $200 right here. What I did not put on here is money I gave to my GoFundMe, because I can't deduct that because I'm not giving it to a 501c3 organization. And I can't deduct home association fees. It's just not one of the things that you can deduct. And gambling losses, I can deduct gambling losses, but I only can do up to what I won. Meaning my deduction is limited to what I won. It's $2,000 is what I won. So if I add all that up, I come to $21,650. Should this person itemize?
Yes.
Yes, because it's higher than the $14,600 of standard deductions for a single person. So it makes sense for them to itemize. So I think the simple thing here is you just got to know what you can deduct. This has a 7.5% floor. Just remember that this has a floor. So I can deduct medical, but it got to exceed 7.5% of my floor. I can't double dip on my HSA. I cannot deduct anything given to my GoFundMe. And I also cannot deduct home association fees. When it comes to gambling, I'm limited to what I won. Lisa.
So how much should her AGI really be to take account for that 7.5? Because
they told you 52,000 is our AGI.
No, I'm saying how. Okay.
They gave it to us. Whatever the AGI is 7.5% of that amount.
There's no limit for the AGI. There's no maximum limit for the AGI, minimum for the AGI. Any AGI you get.
Any AGI amount. Whatever the AGI amount is, 7.5% of that.
7.5 of that goes towards, like, I'm still not understanding.
7.5% is the floor. So once you do that math, that's the amount that needs to be exceeded to include in your medical bills. I do another example. Let's say the AGI was $10,000. 7.5% of $10,000, I guess, is $750. I have to spend more than $750 for me to put it on my taxes. So if I spend $800 of medical expenses, I only can put $50 on my taxes because I first got to exceed 7.5% of my income.
Okay.
That's my floor.
Now I'm starting to understand. So you can't even really count it until you get
exactly. You can't count it until you get over 7.5% of the income.
Okay, that's where the confusion was coming from.
No worries. I try to say it as much as different ways I can until we get it, and we got it. Hassan, did you have a question?
Yeah, so if somebody wants to itemize at the site, do we need the documents or can we rely on like good faith?
We can rely on good faith.
Okay, thanks.
All right. So that's itemizing. It's just a concept of if I can itemize more than my standard, go for it. We got some questions here. Can Elizabeth claim the homeowner association fee? We talked about that. And what amount of the gambling losses can she claim as a deduction? We talked about that. You should better answer these questions.
Now, the question the gentleman asked, is it on good faith? And you said yes. Now,
That is
as
correct.
a volunteer tax preparer, can I say, you know what? If you contributed to Red Cross, I will take this as a good faith that we can put, do you want to get some amount? Can I suggest it's illegal, unethical?
I can suggest that I can put down whatever you told me. Just make sure that if you're ever audited, you can prove it, is what I would say to the person.
Yeah,
somebody
but
come to me and said, yeah, I
Mhm.
donated $10,000 of clothes to the Salvation Army. I'm like, okay, cool. I'll put it down here. Just make sure you have backup for it if you ever audit it.
Yeah, but they say nothing. They don't even say. I said, you know what? If you want more, you can put it in Salvation
Oh
Army.
no, this sounds like you are doing tax
Yeah,
fraud now.
Exactly. So I cannot suggest something that they haven't told, right? Yeah.
No, why would you do that? That sounds
I'm
like
just asking. I'm just
oh no,
saying.
no, that's fraud. You don't you're just preparing the taxes. You're not doing them. You're not you're preparing someone's taxes from information that they gave you. You're not giving them information. That's fraud. Be careful. All right. We good with this? Any more questions on this guy? Got one more and we'll take a break. All right, last one. This is pretty straightforward. David, single, he made $18,000. He went to a community college to improve his job skills. All right, he also took money out of his IRA. He used 500 of it for emergency repairs. He took money out of his IRA. He used 500 for emergency repairs. He also used 2,000 for tuition. All right. So how much did he take out of his IRA?
2,500.
2,500. He took $2,500 out of his IRA. He used 2,000 for tuition. He used 500 for emergency repairs. This is his first time ever taking money out of his IRA. All right. What's his filing status?
Single.
He's single. He got a standard deduction of 14,600. Can he get earned income credit?
Yes.
How much money he make?
18,000. What's the earned income?
Oh, it is less than 18,000.
No, he can't.
18,500.
591, right? He's less than 18,591.
His earned income is 18,500, so he is under it.
Under it, yeah.
By like
Yep.
$90.
Yeah, he not gonna get a lot, but he'll get a little something.
Yeah, 18,500. Yeah.
All right, so he was in school. So there's two credits you can get if you're in school. There's the American Opportunity Credit. There's a Lifetime Learning Credit. American Opportunity Credit, the super simplify it, is for people that are like matriculating and taking school classes to get a degree. That's what American Opportunity Credit is. The first 4 years of college. You cannot have any felony drug convictions to get an American Opportunity Credit. And you can use your expenses or for tuitions, enrollment fees, course material, and anything else you need to like for your class. That's the American Opportunity Credit. The Lifetime Learning Credit is for all other years. It's for like maybe somebody's in their master's or in their doctor's, or if they're just taking one-off classes to improve their job skills. American Opportunity is for matriculating college kids. Lifetime Learning Credit is for like outside of that first 4 years. You're working a job. You're like, hey, I'm gonna take this one-off class to improve my job skills. That's what the Lifetime Learning Credit is. The American Opportunity Credit is a little bit higher than a Lifetime Learning Credit. The Lifetime Learning Credit is not refundable, so you can't get none of it back if you don't have tax liability. You can do drugs and get the Lifetime Learning Credit. It doesn't have the restriction about felony drug conviction, so you're good there. It is only for tuition and required enrollment fees. For books and stuff, it has to be included in tuition. You can't go out and buy a separate book for the Lifetime Learning Credit. You can do that for American Opportunity Credit. You can go to like Amazon and get a supplement book to kind of help you with your class course. You can't do that with Lifetime Learning Credit. It has to be included in the tuition, the book that's needed. So this is a little bit more stringent around it.
I got a question.
Sure.
So I was thinking about doing notary. Would that fall underneath it? Because if I had to buy all the supplies and stuff like in one, like
no, because a notary would not be is not like a post-secondary educational like course. That's just it's like it's a miscellaneous. I don't even know how to call that. It's like it's not like it's not post-secondary. What would that be called?
I don't even know.
The answer is no, but because you're not paying it to a qualified institution. That's like if somebody went out and got like
it would be a course, something like this, right?
Their child care license, that wouldn't qualify either.
Like a real estate license?
Yes,
real estate license would not qualify either.
Wow. So they need to put on there then a little bit of like what, because to some people it could be different. Like I'm thinking if I'm paying out of pocket for education, period.
Yeah, so that's why some of the stuff they do say you have to have the educational institution must have an EIN number, but you know what? Maybe it seems like the lifetime you don't have to have the EIN number. You know what? Let me double check that answer because it says available for post-secondary education and for courses to acquire or improve your job skills. So with that being said, I wonder if the notary is needed to improve your job skills. Like I would say that's an argument for it. But like, if you're doing it just to have a second hustle, that's a different story.
No, because I'm a political science major. I already have my degree in it, but I can't really work 9 to 5 hours because I have a kid. So I'm trying to find like different like realms that
that's not going to improve your job skills. So if you were a paralegal, right, and they said, you know what, I need you to go get your notary to improve the work that you're doing, so now you can kind of notarize documents. That would be improving the current job you're at. I think what you're doing is going out to get a different thing to like start a business.
Yeah.
Right. So that wouldn't fall underneath here. That may be like an expense on that business that you're starting.
Okay.
Would the CPA fall under this?
A CPA would probably be for your business. So I'm went out to go get my CPA. That wouldn't fall underneath. That would not fall underneath. Well, yes, if you are an accountant, but if you're not an accountant, then it wouldn't, because it would be improving your job skills as an accountant versus you being a political science person and that's going to go get a CPA. You're not improving your job skills. You're trying to get a different kind of job.
Okay, I'm a mechanical engineer, so I'm volunteering for taxes as my retirement. So if I go and take a tax course, which is not connected to engineering, but I volunteered and I want to improve fully in tax. So is that a job skills?
I would say that's a new job.
Oh, okay.
You can't win with IRS, man. I swear to God, you can't forget.
I would say that's a new job.
No, Congress is really horrible because they know that they had to do other stuff that mom and dad money paid for or whatever. So we don't have those privileges, and then it's like, oh wow, that's not improving your current job. But what about the future jobs I want to hold? What if I want to come for your position? Then I can't improve my education.
Well, you can listen. Just because you don't get a credit for it, don't you can improve yourself. Don't let taxes, control your life.
We are improving the American economy, and we don't get credit for it.
I want money. I want something for it.
If I hear you. All right. So exceptions. I just put this in here. So remember, this person took a distribution for emergency, and the person took a distribution for education. Here, what this is telling me is that if I took money out my retirement, I don't have to pay a penalty because I took it out for qualified reason. I don't have to pay a 10% penalty. The question is, do you have to work to get I don't know. You don't have to work to get the American Opportunity Credit. You don't have to work.
I had turned to 2 college kids last year because what was paid in scholarships and tuition over was more than what came out of pocket for them. And then, but when I went and asked the question for why, they said that if they would have held a job during the time that they was in college, it would have helped them out. So I'm confused.
Nope, you're missing two. They're just putting in two things. So if my scholarship was more than my tuition, I don't have any costs for American Opportunity Credit. That's simple. It has nothing to do with whether I'm working or not. I don't have costs.
Okay, so
somebody might have had nothing to do with working. If they were working, it'd be whether they're working or not working, they won't get American Opportunity Credit. They don't have a cost. Their scholarship exceeded their tuition. Where's the cost?
Okay, so what if it didn't though?
Then they can get it. They can get American Opportunity whether they're working or not working.
Okay.
Now, if somebody claimed them, it's a different conversation. You can't get it because somebody else claims you, and that person who claimed you should get the credit.
Yeah, I just told them to just let their parents claim them instead because I was confused too about the information I got. I was like, just let your parents claim it at this point.
Well, their parents couldn't get it either. If their tuition, their scholarship exceeded their tuition, there is no cost.
No, it was two separate people. So it was like two separate situations. I just happened to say one of them that I remembered. One of them had it like that, and the other one, it didn't exceed it. So it was two situations. So I was just asking on one of it. My fault.
No worries. All right, so this is just showing you that he does qualify for exceptions because when he took money out for education and he took money out for an emergency expense. What's the filing status here, guys? Single. How much was their deduction?
14,600.
14,600. Good. Is there any dependents?
No.
Nope. What credits are they eligible for?
The earned income credit?
Lifetime. How about American Opportunity Credit?
No, because it's not going half-time.
And how much is the penalty on the IRA distribution?
10%.
It is 10%. How much would it be for them if they were to tax? If they was to hit them with the 10%, how much would it be?
250.
250. Do they got to pay it?
No, because it's tuition and emergency.
And an emergency.
Yeah. So we can waive it, is what we're going to wind up doing. But that is how much the percent is. But because of what they took it out for, we can waive it.
They don't have to pay it because why? Why they don't have to pay it?
One is because the eligible emergency expense distribution, and one because it was used for qualified higher education expenses.
Okay.
It's how they used it. And if they said I took it out and I bought a car, that's not an exception. But they said why they took it out. He said he took it out for tuition, $2,000 for tuition, $500 for emergency repair. So there you go.
Question.
You should be able to answer. Sure.
How about if they take it out and pay it within the 60-day period? Will they still have to pay the penalty?
They would know. That would be if you take money out of your retirement and put it back in within 60 days, you would not have to pay any penalties.
Okay.
Usually it's called it's like a rollover. If you're taking money out and put it right back in, you do have like 60 days to take it out and put it back in. And hopefully your retirement people treats it like a rollover and codes it right. But I don't know if they will or not. Should have a nice coding on it. But there's other stuff. You can take money out for IRS levy. Like there's a whole list of stuff that you can do it for. Medical. And I just want to make sure I'm saying this right. What you're referring to is a rollover. That's if I take money out of one account and I put into another account. Not if I
No,
just take money
no.
out of an account and then put it back in. That's not the 60-day thing.
Okay. So if it's not rollover and it's just a personal thing, I decide to put it back, I'll still pay the tax?
You still will pay the
penalty, the 10%.
All right, so let me back up because I think we're saying two different things. So if I take money out of my account, use it for emergency repairs, and put it back in, I don't have to pay a tax for it, and I don't have to pay a penalty on it. If I took money out my account and I went and bought a car with it, and I put the money back in my account, I will have to pay taxes on it, and I'll have to pay a penalty on it. It all depends on what you're taking it out for.
Okay.
Certain things qualify for putting it back in, and you don't have to pay taxes on it. Certain things do not.
Oh, okay. Thank you.
All right, so let's take. I want to give you guys some time. So we're gonna take a break. We're gonna come back and we're gonna jump into TaxSlayer. I'm gonna leave this on the screen. I'll give you guys, what is it, 12:41. Let's go to 1:15, I should say. Give you a nice little 30 minutes. Go grab yourself something to eat, get yourself something to drink. I know this is a long day. And we got to go till 5 o'clock. So most of these problems take about an hour each. So that's 1:15 to 2:15, 2:15 to 3:15, 3:15 to 4:15. Gives me 45 minutes to answer questions and things like that. Asan, you're correct. You got to at least be a half-time student to get American Opportunity Credit. If anything, get into your TaxSlayer. This is the information to get into it. There's a link up top. It should look like, where am I? You're going to get into, it'll say VITA, TaxSlayer Pro, whatever. You're gonna get to a screen that looks like this. And this is where you're gonna put in that Train Pro, that this is the password down here, Train Pro Web. I sure can.
Wait, I'm confused. I'm still on David. We don't moved on. I'm still on David.
I'm not sure. Was David the one that we just did?
Yes, the one that went to school.
Yeah, so just finish it up. There's 2 questions you're gonna answer on David, and then next one we're gonna do a 7.
No, so in regards to what Hassan said, you have to be half-time, and it said he was less than half-time.
That was for American Opportunity Credit was his question.
So he don't qualify for that one. But
I can't tell you whether he can or can't. Based off of what we talked about, how do you get American Opportunity or Lifetime Learning Credit? What kind of kid can get American Opportunity Credit? What do they need to be? What did I say they need to be?
You said taking classes that will earn them a degree?
That is exactly what I said. Is he doing that?
That's gonna earn him a degree. No.
No.
That answers your question. So I put the link in how to get to TaxSlayer Pro. You need to put in your password, and you need to set up an account if you haven't. I would encourage you to do that during this 30-minute period, because when I come back, I'm just going to jump back in and get started. So make sure you have a sign in for your TaxSlayer Pro. This is the link. I put the link in the chat. Click on the link. This is the password to get in there, Train Pro Web, and it needs to be all caps. And once you get in there, and I'll show you, once you get in there, you need to set up an account. You need to create an account. So go in there and create an account. You'll get a username and a password, and then you can get into TaxSlayer Pro. All right. So that's again, I'm giving you till 1:15 But in that time frame, make sure you got a username and a password to get into your practice lab. Any questions before we break? All right, I'll leave this screen up. That's the link, and that's the password down here. All right, I will pause the recording and I'll be back. All right, so we're going to record. We're going to log into the VITA TaxSlayer Pro. This is the link. You can write this down or look at it and copy it. Put the link in. The password is Train Pro Web. So when you click on this link or when you type in this link, you're going to get to a screen that looks like this. And here you're going to put in that password, Train Pro Web. And you're going to come to a screen that looks like this. And this is where you can create an account. You can hit create an account, put in the email address, confirm it, make up a username, put in a password. And when you do the password, it's going to ask it to be a certain amount of characters. So make sure you do that right. Select the program type. You can say VITA. And you do not need to put in the SIDN number. You can leave that blank. And for the security question, choose one of your security questions, choose an answer, and then you can hit create an account. After you create an account, you'll have a username and password. You put in your username and password, sign in, and bam, you're at the practice lab. So this is where you would begin. All right, so once you get into your practice lab, I just want to navigate a little bit about what we're seeing on this screen. The key things I want you to key in on are if you're preparing a return, there's a whole section that you can walk through on how to enter information. You put in like your first, last name, and email, and it'll show you how to walk through different things. I'm going to walk through it, of course, but just in case you wanted more practice or a better understanding, you can get a deeper dive on how to enter certain things. In addition to that, underneath enhancements and miscellaneous, there are practice returns. I would highly encourage you to download a practice return. So it tells you what your answers are, but it also gives you a breakdown of what the scenario is for that practice. So here's your social security number, what's the filing status, what's the person's name, their date of birth, their occupation, and then it gives you like, this is the information from the W-2, wages and federal taxes, and you can use this and practice doing the tax return. And again, like I said, it tells you what your AGI should be, what your EITC, what your refund, to kind of check to see if you did it correctly. All right, and I also think they show you the they show you what the return. So this is the W-2, and it shows you what the return will look like. I would highly encourage you to do a couple of these as practice in addition to what we're going to go over in class. Cool beans. So this is some things for you guys. I'm just trying to show you some things to supplement your learning. There's 7 practice returns. So I would highly encourage you to try to do some. All right, with that, I'm going to go into the practice area. And in here, this is where you start a new 24 return. If you had to start a return, you can choose here. Up here, you can change the tax year to either 23 or 24. And then where it says client search, this is where if you were starting a tax return and you stopped it, you said I was doing one for a taxpayer, it'll show up and you can choose which one you were doing. But this is if you need to look for a return that you started, you can choose, you can look by client name, you can look by social security number. I could put social security number in here. There's different ways that you can look for it. First name, last name, give you some options there. I can say if I said railroad, it shows you all the railroad folks. So that's how you use the client search. You can, like I said, social security number, first name, last name to find them. All right, so what we're going to do is start a return. And I'm going to go back to my slides. And we're starting off with scenario 7. And that's Vincent and Faith Hunter. So this is on page 81 of your 6744. And if you want to follow along, we're going to put this tax return in text there. Any question? Any questions from anybody? All right. So I do not expect you to stick with me all the way through. And I know during for virtual, it's kind of hard to know where you are and fix what you got going on because I can't see it. It may not be time efficient to like everybody share their screen and try to fix it. So what I would say is if you get lost, this is being recorded. You can kind of go back and look at what I did, or just try your hardest to kind of follow along with me. Or you can watch and then do it later, where you can pause the recording so you can see what I'm doing. But I'll try to go at a nice slow pace. So if you are typing, you can kind of do it with me. All right, so let's put this in.
There's one.
Sure.
Oh yeah, somebody's asking the same question. Where can we see the recording, just like you said?
Where can we see the who?
The recording, my accent.
The recording.
The recording.
Yeah.
I think it's going to be on the website at some point, on the CWF website.
Okay.
Yep. So I think just to take a quick peek, I think at some point if I go to CWF Philly, I think at some point underneath trainings, I think what they're going to do is put the recordings in here somewhere, where I honestly don't know. So here's some training resources, Link Learn, Taxpayer Lab. I think in this area there's going to be a place where they're going to put the recordings. They're just not up yet because we just started training. So this is where I think is going to live.
Okay.
I know this is where it was at one point before the recordings.
Thank you.
Yeah. All right, so let's start this return. We have, let me put it in my highlighter. We got Vincent, who's a 5th grade teacher at a public school. Vincent is married, and Vincent and Faith is married. Vincent works during a year, and he spent 1,800 hours during the school year, and he spent 844 on unreimbursed classroom expenses. They're telling us this because there is a rule where if you are a teacher, which he's a 5th grade teacher, and you spend more than, I believe it's 900 hours as a teacher, and you spend more, you can make an adjustment up to $300 on your tax return for classroom expenses. So he spent $844. We can limit it to $300. So when we get into the system, the most we can do is $300. So I'll show you that when we get in there. Faith retired and she got some pension. She retired on November 1st of that year, and she has a joint or survivor annuity. She also recovered $1,259 of cost of the plan. These are just data points that they're telling us because this is someone who has a retirement. We do not know how much to tax the retirement for, but they're giving us data sets to figure out that information. And I'll show you that a little bit later on. Vincent settled on his credit card company and on an outstanding bill and got a form 1099-C. So that would be for someone that had a cancellation of debt, like I was talking about earlier. They canceled the debt and sent them a 1099-C. You need to put it on your taxes. This person also has jury duty, got money from jury duty. So that's something I got to claim on my taxes as well. And this daughter was in the 2nd year of college. And they talked about that they got a 1098-T for being in school. And she did not have any felony drug conviction. So we got to figure out what kind of credit and how much the credit will be for. They're all U.S. citizens with valid Social Security number. And this is Vincent, Faith, and Hope Social Security cards. So I look at the intake sheet. Vincent is listed first. Vincent Hunter. Then there's Faith Hunter. And they list out that they're all U.S. citizens. They said if they got a refund, they want to get it directly deposit. It talks about the $3 for presidential election campaign. Yes, and I'm going to assume the yes is for both of them. If I was live, I would say which one of you guys want to do the deduction. I think they changed this to show whether it's spouse or taxpayer. But if it looks like that, we want to just ask them so we can do it correctly. It looks like they're married. They have a dependent. Dependent is a U.S. citizen, a resident, a U.S. full-time student. So that's good to know. So that still makes them a qualifying child. So over here, qualifying child, they are not a qualifying relative. And it helps this person get benefits like child tax credit, EITC, and so forth. They have one job, so there should be a W-2 in here. There's a W-2. So I would go back up here and I would confirm that there was one W-2. They said that they had retirement account, pension of annuity. I'm going to go down, look for a retirement account. And there's my 1099-R, pension to an annuity. So I'm going to go back up here and say, yes, there was a retirement with one form. They said they had Social Security. I would go down here, look for Social Security. This is my 1099 SSA. I will go back up here and say they got a 1099 SSA and there's one, right? It's usually one for each taxpayer. So let's see what else they checked off. They checked off that they had contributions to a retirement account. And that would show up maybe on their W-2 in box 12. This is code D, meaning they put money in their retirement. So what I would do is go up here and say, yep, they did do that. They have a contribution to retirement. And I would say it was like a 401k. That's what that is, 401k. They had school supplies, educator expense deduction. I know I got to limit it to 300. Over here, I would say spent maybe, I'm sorry, I'm writing with a mouse, which is hard. Spent $844. Right, but I know they can only get up to $300. So I would make a note of that. You or someone in your family took education classes. So I would scroll down and say, yep, there's a 1098T. So I'm going to say, yep, I got a 1098T. And then what else they got charged? I have a credit card, mortgage, or other debt cancellation. So do I got a 1099C in here? I will scroll down and there's my 1099C. I'll go back up here and check off that I got a 1099C. And that's it. So I filled that out. Everything looks good. I'm ready to start this person's return. I need to start here at Vincent's SSN. Any question? This is how you should review a return before you put it in. You want to make sure you have everything before you get started. Does anyone have any questions on that? Yes, Lisa.
So what if they both had a W-2? Would you do it based off who made more?
I would, how many jobs? It would just say that it was 2 jobs is what it should say. And I'm just confirming that I got 2 W-2 forms. No, I'm just confirming that I have documents.
No, I mean, when you go ahead and put their social in, like, how would you know who is the tax payer?
It doesn't matter who goes first.
Okay, because sometimes, like, I had trouble because depending on, like, let's say you put it underneath the husband's name, the wife came in to check on it, and they wouldn't let us know that it was under, like, the husband's name was on there. So we should really be looking for the husband's name so we can pull it up. So I'll be a little bit confused sometimes. Like,
this is a question. If they're married and they say, what's your husband's name or what's your spouse's name? If Faith comes in and say, well, I can't find it. If you Faith, what's your spouse's name? You should be able to find it in the events. It shouldn't make it any harder than that. Like if they're married, it's either underneath them or their spouse.
Okay, thank you.
Yeah. And normally if they have their last year return, I just mirror whatever the last year return came. If there's nothing, if they don't have their last year return, then whatever they filled out on the intake sheet is how I would do it.
Okay.
I would, if anything, I would want to be consistent to what it was every year, but I can't force it, and it doesn't really matter for real. But I do like to be consistent. So wherever was first, I always make them first. But if they're new and they don't know, then flip a coin or just do whatever see the intake sheet says. And the intake sheet says Vincent was first because I don't know what your last year taxes look like. So Vincent it is. So let's do this. I'm going to start a return. I'm going to start off with Vincent's Social Security card. So he starts with 416 and it's 00 and then it's X's. Whenever I see an X in a practice lab, I just make up stuff. So I'm just going to go just make up stuff. 5544. And I just need to do it again. 416 5544. And my profile is always going to be click. That's basic and that's fine. Don't change it. You can hit start return. All right, so it'll ask you what your filing status is. We determined that this person is married, right? Don't got to think too much about it. So I could check off married filing separately. If I didn't know, there's a filing status wizard, and it asks you a question. You are considered married for tax purposes if your spouse passed away for 2024. First, were you considered married on December 31st of 2024? Yes, I was. Are you U.S. citizens? Yes. Did your spouse live with you at any point during the last 6 months of the year? Yes, they did. Based on your answers, you should be filing married filing jointly. That simple. Finish, and I'm going to choose married filing jointly. You can do that for every one of those filing statuses. Hit continue. And now I need to start entering the information. I put on all cap locks when I'm doing this. Everything's in capital letters, and I'm filling it out based off of the intake sheet. All right, so let's just do this together. And the first name is Vincent Hunter. Well, Vincent. So let's put in Vincent. Tab, I use the tab key. Tab to the next part. Tab. So now I'm at last name. The last name is Hunter. Again, I tab, and I get down to the Social Security number. I already put that in when I started the return, so I don't have to put it in again. Tab, and I get down to date of birth. I look on where the date of birth is on here, May 1st, 1964, and I just key it in like that, 05011964. Tab. The job is teacher. Use the tab key because it helps you move faster. Then I have a bunch of check boxes for this person. Can Vincent be claimed as a dependent on someone else's return? No, nobody's claiming Vincent. Taxpayer was over 18 and a full-time student. Vincent was not. Taxpayer is blind. Vincent is not. Taxpayer is deceased. Vincent is not. Taxpayer wishes to contribute $3 to the presidential election campaign fund. On here, it says, would you like $3 to go to the presidential election campaign fund? And they said yes. So I'm assuming they both want it. Combat zone, nothing about combat zone, no natural disasters. Did a taxpayer receive, sold, or disposed of any digital assets? I think they asked a question about that now. I thought I saw that question. Here it is. Do you own digital assets? So they said no. So I do not have to check that box. Taxpayer prefers to have written communication in Irish and language other than English. So if they did, you can check the box and this is whatever language they wanted in, but we don't have to worry about that here. Same thing from communication from them. We can say how they want it to look. I think we don't have to mess with that. And we don't have to deal with a U.S. resident, dual status aliens. So all I had to do is check that one box. So I put in Vincent, Hunter, checked off the respective boxes. Now I'm going to the next person, which is my spouse. So I'm doing Faith. I'm putting in Faith, tab, last name automatically populated. So security number is Faith's, which is 417. I'm gonna go 417 and just make up the rest. Faith's date of birth is 10/8/1955. 10/8/1955. And the occupation is she's retired. Again, there's really nothing I need to check off for her except that $3 presidential election campaign fund. Her address or their address would be 1234 Charity Ave. And the zip code, it says your city, your state, your zip code, meaning you make up whatever you got going on or where you live. So I'm just going to put in my zip code. All right. And then all that populates. I need to put in a phone number. Phone number would be on here underneath phone number. So I'm just going to make up a number. Same thing for secondary. And email address would go here if they want to give it to me. And I will put an email address. So I'm putting in fake@yahoo.com. And for her, fake1@yahoo.com. And that's it. Any questions? I wouldn't send the invitation. Any questions on this? This is the basic. Every time you do this, every return, you're going to have to do this basic page, personal information. Any questions on this? Hearing none, I'm going to continue. Sure.
I know how do I log in if I forgot my password?
Oh, we should have this conversation a while ago. You gotta, I think you gotta reset your password.
Yeah. How do I reset my password in Tasmaya?
Click on forgot password.
Yeah, click on forgot password on that page where you're trying to sign in. It should say forgot password.
Yeah, I was trying it, but I didn't see the click on forgot password. There is only passcode and invalid passcode just showing like that.
I'm not sure why you're not seeing that.
Yeah, in that state.
Do you have this screen?
No, I don't have it.
What
Yeah,
screen
I
are you
have
on?
it, and I have it, and I already create the account.
So go to this screen.
Yeah.
Are you at this? Right here, it says forgot password.
Oh, sorry about that. I just noted this. I didn't got that screen. I don't know the PIN number. Yeah.
You don't know.
The previous step.
You don't know the password on this one?
Yeah, here. I couldn't log in here.
It's Train Pro Web.
Oh, sorry. Yeah, I got it. Thank you. Sorry
Right
for
here.
having everywhere.
That's the password.
Yeah, thank you.
Okay. All capital.
Thanks.
All right. All right. So the school district is Philadelphia. Teacher retired. The school district based off of where they live, but most of the clients are going to be in Philadelphia. There might be some in Delaware County or something, but Philadelphia is going to be your most common school district. Actually, in Delaware County, it might be called, I think it was like Upper Darby, could be one. But in any matter, most of them are going to have Philadelphia. So if they're outside of Philadelphia, just say, hey, ask them what school district are they in, and they'll tell you, and you can find it in here. All right. Do they got dependents? Let's see. They do. They got Hope Hunter. So I'm going to say yes. Hit continue. And I'm going to put in Hope. There's a question about if you're based in New York. Yep, you'll get a New York return. And I don't have the power to show New York or Pennsylvania or New Jersey because this is only federal. You will get more instructions on states at your sites because the practice lab doesn't have states in it. Sorry about that. And so the date of birth for is July 5th, 2005, 07052005. Social security number is 608 here. 608. I'm just make up something. was a U.S. citizen. They said they were a U.S. citizen. And a person was over 18 and a full-time student. This person was a full-time student. They're not disabled. This is my dependent. I do want to get EIC. The person isn't married. They're not, they did not make more than 5,050, and multiple people aren't supporting them that are outside of the house. So that's all I got to check off was this first one. And this would be common for most folks, is if they have a kid in college, this would be the one to check off. I think it's rare that you'll have to check off these other boxes. Hit continue. The relationship was daughter. I'm gonna put in, I'm sorry, I'm gonna put in daughter, and the number of months defaults to 12, which is equal to the number of months in a home. All right, let me continue. And the dependent is in there. If I needed to add another one, I can hit the box up here, add another dependent, or I could have entered, save and enter another, but I don't have to enter another kid, so I'm not going to. So I'm gonna hit continue.
Is she over 18 on full time? I didn't get that.
So she was born in 2005 and it's 2024. So I'm gonna go with, she's not over. She's what, 19 then, right? What are we doing?
19,
or she is 18.
19.
She's 18, or she might be actually 18. 2024 minus, what is it, 2019. Yeah, she's 19. So I added her in there because she's 19. And the question is saying the person was over age 18 and a full-time student. She was.
Okay.
Go ahead, Lisa.
Because at first I had put the number of months this person lived in your home was 6 months, because I just thought, like, if she's a college student, is she
That's called, it's called a temporary absence. She lives in the house.
Oh, okay.
Yep. That's why on the intake sheet we got 12. Look at the intake sheet. The intake sheet says 12.
Okay. Thank you.
Yep. Yeah, that's called a temporary absence, so that doesn't count as being away from their house. They're treated as being home all year.
Okay.
For IRS purposes. Yep. So I got that in there. That's really all you got to do here. There's some other information. If somebody had that IPIN, this is where you would put in that PIN is like a 5-digit number, and you would put the IP PIN for whoever had it. And if they had an IP PIN, they would have checked off that they were issued an identification PIN here, but they didn't. But this is where it would go. Lisa, we said when you did it, it listed her as not a dependent.
Yeah, when I did the 6 months, it listed
Then,
her as not a dependent.
but why would you put 6 months? You put it.
I had talked to you about why I thought it was a little thing. If she's in college, she's not physically in the home.
So go back in and change it to 12 months. Yeah, change it to 12 months.
And they should update it. Okay.
Yeah, because she's considered living at home all year.
Okay, thank you.
All right, so now I need to put in income. So I have all these different incomes. So remember, I have a list of things that I would have had. So I'm going to go down here and start putting in income. So this is a W-2. So I'm going to click Form W-2 and start entering information. So whose W-2 is this? This is Vincent Hunter. So I need to tell the computer that it's the taxpayer, not the spouse, is the taxpayer. The employer EIN number is up here. 357, all zeros. That stands for Clear Creek School District. 244 Harvard Street. That matches that. And the city and state, I can make up whatever I want. So I'm okay with it being that. So then I jump down and I go to wages. Wages is here. How much wages I made? 37,353, 37,353. Tab. The federal taxes is 3,200, 3,200. Tab. Social Security wages is 38,353. 38,353. Tab. The Social Security tax is 2,377.89. That matches. The Medicare wages is 38,353. So this needs to say 38,353 because it just copied what I put in box 1, which is not right. And the Medicare tax is now 556.12, 556.12. So then I go down, I hit tab, box 7 is empty. There's 7 will kind of be here. There's nothing in 7, there's nothing in 8. 9 is blank. 10 is blank. 11 is blank. 12 has a code with the number in it. So over here, I'm at 12. The code is a D. And the amount was $1,000. So in here is where you will see like that code W would be in here. There's your code W right there. You'll see like a code DD would be in here. Like these were all the different codes are. So you just find your code that says what it on a W2, it says D. You just copy it over in the amount. Box 13, it asks you, did you have a retirement plan? Make sure you check the box if you did. They did, so I'm checking the box. And that's it. If I had multiple codes, I can do another one here and just keep doing it because it's like you can have one here, one here, one there. But I don't have that. I only had the one code. And then there's a box 14, which has like other information in it. And if I had box 14, I could do a drop down and select what I'm seeing in box 14. And if it's not listed here, I'll just say other, and then I would list the amount that I see. And that could happen sometimes as well. All right, so that's basically putting in all of the federal boxes. After you put in federal, now you got to put in state. So if I go down here, there's a state and local information. The state I'm going to put in is Pennsylvania. So I'm going to choose Pennsylvania. The employer ID number is given to me right here. 572, I'm just put all zeros. The state wages. Sure.
I have a question. Why aren't there any numbers on the right-hand side with the AGI? I don't see anything updating on that side.
I didn't save this yet. I'm just still putting it in. Yep.
All right.
My state wages is 37,353. My state tax is 500. My local wages, there will be numbers in your local wages and local tax and locality name. Practice is blank, but you will see numbers in here when you're live. But this is where you would put your local wages, your local tax, your locality name. All right, so I'm gonna hit continue.
Can I just ask a quick question here? So
sure.
Because this always messes me up when I'm live. So would I add, so being that we're doing this for Pennsylvania, but now let's say New Jersey, so would I use that add another state feature to capture the New Jersey details right here in the screen that we were in, right here on the screen? Where it says add?
No, so it depends. It depends. So let's say, I live in Pennsylvania, work in New Jersey. I should get a W-2 that has Pennsylvania taxes withheld if they did it right. If they did not do it right, then yes, I will have a New Jersey, I will have a New Jersey W-2 that I need to put in. So then I would add another state, or actually, I would only have the one W-2, correct? I would have a W-2.
What you see in the state areas tax.
That says New Jersey, right?
Tax detail, yes, for New Jersey, yes.
So what I would do is, instead of making it Pennsylvania, I would make it say whatever the W-2 says. I would make it New Jersey.
Okay.
And so what would happen is a Pennsylvania return will still need to be done. But what I'm doing, I'm telling the system that I also need to do a New Jersey return as well. I hope I'm answering your question.
I think you are. I don't know why. I always mess up when they work and live in two different locations.
Yeah, so say this person lived in Pennsylvania, but worked in New Jersey. And the New Jersey did not withhold Pennsylvania taxes. It withheld New Jersey taxes. So then I would come in here and call this New Jersey, because this, and then I'll put in all my New Jersey information. And at the end, when I do the state tax returns, I'm going to say, I got to still do a Pennsylvania return, but I'm going to get credit for taxes I paid in New Jersey. What would actually happen is I would actually get a refund from New Jersey. This is how it should happen. What I did, the credit to the other state actually is for like a Delaware or New York. Because Pennsylvania and New Jersey has a reciprocity agreement, New Jersey will actually refund the amount of money that I paid to New Jersey, and I would owe Pennsylvania, is how it would happen. Because New Jersey is supposed to withhold PA taxes. If they did not do that, then I need to get a refund back from New Jersey and pay that to Pennsylvania.
Okay.
If that makes sense. So if this was like you just now said, at the end of the day, I'm going to owe Pennsylvania X amount, and I'm going to get a refund from New Jersey for X amount. It should be close to the same amount.
So what is driving this field in 15? Do I put down New Jersey because that would be the state that I'm living in, or does it go by state you're working?
It goes by the state that's on the W-2. So if I go back over here, it goes by what it says here. So if right here says NJ, then I need to put NJ.
Okay, got it.
This is what's going to drive it, what you're going to put here, whatever that says.
Got it. Okay, thank you.
Yeah. YS is for practice, is just your state, but when you're live, you'll have NJ, PA, NY, whatever in there. That will tell you what to put here.
Okay, thank you.
So you, even though you are living in Pennsylvania, your federal tax will be filed under New Jersey because the W-2 is New Jersey. Is that correct?
Well, federal has nothing to do with this conversation. This is state.
Okay. I'm sorry. Yeah.
My PA, I still got to file a Pennsylvania tax return because I live in Pennsylvania, but I didn't pay nothing to Pennsylvania because I paid everything to New Jersey. So I'm going to owe Pennsylvania, but New Jersey is going to have to give me that money back so I can pay it to Pennsylvania.
Oh.
So I'll do 2 state returns, one for New Jersey, one for PA. OPA, get a refund from New Jersey. Whenever I get it, I need to pay PA.
Okay, I have a question. So will Jersey just dish out the part that they should have withheld for PA, or they're just going to dish out both of it and then you have to figure out paying Jersey and like we're not going to get separate tickets.
New Jersey should pay what you should have paid Pennsylvania. That's how it's supposed to work. If you filled the paperwork out, New Jersey would have never given you a W-2. They would have given you a Pennsylvania W-2 because they have the rights to do that. But if somebody messed up and didn't fill out the right paperwork, then New Jersey will give them a W-2 that says New Jersey and withhold whatever New Jersey would withhold on that money. And it's not always the same as what Pennsylvania would have withheld. I'm going a little bit deep here, but so New Jersey has its own tax rules and tax rates. So in Pennsylvania is a flat tax. So every money you make, you want to get taxed 3.07% on in Pennsylvania, flat all the way across. In New Jersey, they have just like in federal taxes, it's tiers depending on how much money you're making. So in New Jersey, let's say you made $10,000, and I'm just making up some numbers. Let's say for $10,000, New Jersey charges a 2% tax on that $10,000. So that's a $200 withholdings that it may have for that $10,000. But now you come over, you live in Pennsylvania, and you file your taxes, and you say, I made $10,000. Well, Pennsylvania is looking for $307 on that $10,000 because the Pennsylvania rate is a flat tax of 3.07%. So what would happen is I'm gonna go to New Jersey and say, hey, give me my $200 back and I'm gonna take it, but I owe Pennsylvania $307. So I'm gonna send them the $200, but I still gotta send them more money because New Jersey didn't withhold enough for me because New Jersey withheld what they would have withheld as if you live as a New Jersey resident.
Wow.
Does that make sense?
Yeah.
No.
What?
It does, but it doesn't, because if New Jersey already knows they have this agreement with PA,
So that's true. That's what I'm saying. If somebody, if New Jersey knows about it, because the employee told New Jersey that I live in Pennsylvania, then New Jersey is going to hold the right amount of taxes because they know where you live. What happens is some people don't say where they live and they mess it up. They may say, the employer may say, "Do you live in Jersey?" And they say, "Oh yeah, I stay with my mom sometime in Jersey." Or there's actually a certain form that the HR person in New Jersey needs to fill out to make sure that they withhold Pennsylvania. I've seen it where the HR person didn't fill it out, and all they did was withhold New Jersey with taxes by error. And the only way to fix it is when you do your taxes.
This is like your child living without paying you money. So you're working in New Jersey and you're not paying taxes in New Jersey, but New Jersey gave you the job, but you're giving Pennsylvania whatever tax you're paying for. Right?
If I live in PA, I owe PA taxes.
Oh
if I work in New Jersey and live in PA, New Jersey withhold the taxes and then I got to pay that to Pennsylvania. What should happen is no matter what, New Jersey has the right to withhold PA taxes for PA residents if you tell the HR person to fill out the right paperwork.
Okay.
Yeah, I don't be liking that sometimes, because that's why I be working where I live at, because I don't trust people for real, because HR.
Well, actually, it's on your you get a pay stub. So your first pay stub, if it's not right, you talk to your HR person and say, fix it. Philip is not common, but you'll see it every once in a while. It's not a common thing you see. Most people live in PA, work in PA. Live in Philly, work in Philly. You don't see it too much.
Yeah, it's messy. Even with like unemployment, it's real messy. Like those
it can be tricky.
It can be messy with HR.
All right, so that's my W-2. So this was the easy form. Continue. Put my W-2 in. If I need to add another one, I can add another one. If not, hit continue, and I'm back to my income list. What's my next income? I have a 1099-R. So I'm going to put in my 1099-R. I'm going to go down to where it says Form 1099-R, hit begin. Add or edit a 1099-R up top, hit begin. Whose 1099-R is this? This is Faith. Faith is the spouse. The payer ID number is here. 412, all zeros. I'm just putting all zeros to keep it simple. Liberty Enterprises, 225 Juanita Avenue, 225 Juanita Avenue. That's good. Gross distribution is 20,100. Put in 20,100. It automatically puts in a taxable amount, but here I don't have a taxable amount, so I need to get rid of that. Only if there was something in there, I would let it copy down, but it doesn't. It says taxable amount not determined. I need to check that box, taxable amount not determined. Then it says capital gains is blank. Federal income tax is 2010. Federal income tax is 2010. My distribution code is 7. So my distribution code here is going to be 7. And my total employee contribution is 15,000. So down here where it says total employee contribution is 15,000. Put that in there. All right. So here's a situation where there is no taxable amount in here. When I don't have any taxable amount, I have to figure out what the taxable amount is. And what I have to do is called a worksheet, called a simplified worksheet. So to ask you, are you a public safety officer or need to use the simplified worksheet to calculate your taxable amount? This amount here. I do. So I'm going to click here and use the simplified method worksheet to figure it out. So I can hit begin, I can hit continue here, and they need some data sets. So then I want to know, what's the plan cost at annuity start date? Meaning, how much did the employee contribute to this plan?
Wait, how you got there? Hold on. I don't see the click.
It's on the 1099-R.
Yeah, I'm on that. I put that as not taxable. I put all that information
Right
in.
underneath the not taxable checkbox, there's like a little link that says click here.
Oh, the little red link.
Yep.
Okay, thank you.
So just keep, and then simplified method worksheet, and you're going to hit continue, and you're going to get to this page. All right. So gross distribution amount was 20,100. That came from here. So let's start this over, clear the screen. That was my gross distribution. They want to know my plan cost at annuity start date. Right here, my total employee contribution. That's how much I put in here. So in here, I'm going to put 15,000. The starting date of the annuity. I got to go back to my interview, and it says Faith retired in 2021 and began receiving her pension on November 1st of that year. So the starting date is November 1st of 2021, because it said it here in her interview. I would just ask her, when did you start getting your retirement? 11/1/2021.
I have a silly question. So we always have to have a number in that field, right? We can't just leave it blank because it wasn't on the form.
This field, yeah, you should have a number you should have a cost. If not,
the prior form before we got here, like we always have to have, before we get to using the simplified method, we can't just leave that field blank, correct?
You can't just leave that field blank. If
right.
the most conservative thing you can do is put the same number that's in box 1.
Okay, and they have, and then if they don't have all their detail, they don't know, they're a little foggy about stuff.
Put the same number, put the 20,100 as a taxable. Just basically have tax on everything. If you don't know the information, help you save taxes. But if you don't know it, then you get taxed on all of it.
Okay.
So it began 11/1/2021. Then it says, check here if the annuity benefits is based on the life of the annuitant and a beneficiary. That means, was it a joint or a survivor annuity? They're saying that it was a joint or survivor annuity. And I'm going to highlight this again. So I need to check that box. When I check that box, it actually does that, combines the age of the annuitants at the start date. That's fine. Drop down to the number of months that were paid in 2024. Well, I started getting this in 2021, so I would have probably got it for 12 months in 2024. Amount previously recovered. They told me the amount is $1,259 is what they already recovered. Meaning they recovered $1,259 of the $15,000 that they've already put into this. They recovered $1,259 of it. And they would have did that. So it would have been a little bit every year. This is their 3rd year doing it. Remember, it started in 21. So 22, they did it. 23, they did it. And now this is 24, the 3rd year. If I hit continue, it tells me I want to tax you on $19,519, which is a little bit less than the $20,100. Remember, this is how much the distribution was. They're being taxed on $19,519. We good? So what happens is I hit continue, and now I have a taxable amount of $19,519.
Can you please go back to the
go back again?
Yep.
Yeah.
I'm gonna go here.
Yes.
So this is my simplified method. It was 20,100 for gross distribution. The amount of plan cost I put in was 15,000. I got that off of right here. Down here. Are we good there?
Yes.
The start date was November 1st, 2021. I got that from the interview. She told me 21st of November, first day of that year. Are we okay with that?
Yes.
There was no death benefit, so I did not put nothing there. It says, check here if the annuity benefits are based on the life of the annuitant and a beneficiary, meaning was there a joint annuity? It was. So I had to check this box.
Where do you see that? joint annuity, please?
I see it on the interview. Are you able to see my screen?
Yes, yes.
Right there, I have it highlighted.
Okay. Okay, got it. Mm-hmm. Okay.
All right. So I checked that box because it said a joint survivor annuity.
Mm-hmm.
And then I scrolled down to where it says number of months paid in 2024. It would have been for 12 months because they got it all year.
Mm-hmm.
And then it asked how much was previously recovered. In the interview, it says she has also already recovered $12.59 of the cost of the plan. So I put in $12.59 here. Hit continue, and it tells me what my taxable amount is. I hit continue again, and it drops it on the 1099-R. Seeing my taxable amount is $19,519.
Okay, I was missing the 0. That's why I didn't get that number.
There you go. No worries. All right, so we good. So now I can continue on, hit continue. And it asked me, did you make any early withdrawals from retirement account due to disqualified disaster? I did not. So I'm gonna say no. Hit continue. And I have my IRAs in. My IRA distribution is in. Hit continue. And I want to hit continue until I get back to my income list. And I go to my next form. My next form is a Social Security form, SSA 1099. So I'm going to go down to where it says SSA right here. That's in the same line with the 1099-R. Click it. And the third one down are my Social Security benefits. So I'm going to begin that. And who got Social Security? Faith. Faith is a spouse. So I need to go down to where it says spouse. Spouse Social Security benefits. Don't put it where it says taxpayer. Put it where it says spouse. So the benefit was $23,899. $23,899. The federal tax is $23.90. $23.90. And the Medicare premiums is this number out here, $2,096. Medicare premiums. And what this does is if this person were to itemize, it includes it in that itemized medical cost number, but they're not itemized. But that's why it's important to put it there just in case they were. Bottom 3, hit continue. Hit continue. And you get back to your.
Wait, you put something in there for spouses too? Is it the same information?
It's only when you say 2, it's only spouses, and I'm putting information in.
Okay.
The taxpayer didn't have Social Security, the spouse did.
Okay.
So make sure you're only using the bottom 3 boxes. Do not put nothing up there because the taxpayer didn't have Social Security. Only the spouse has Social Security. So when I hit continue, I'm going to go back to the income and I'm going to go down to my next document. This document is called a cancellation of debt. A cancellation of debt is what's considered other income. So I won't find that on this first page. I have to go down to the bottom. Is everybody doing this with me? Make sure you're paying attention. You have to go down to the bottom to where it says other income. If I click on other income and begin that one, in here is where I will see the 1099-C, cancellation of debt. It's other income. So I'm going to click and begin that, and I'm going to click the 1099-C, cancellation of debt, that first one up top. Hit begin. Who had it? Vincent, who is the taxpayer. The creditor name is Newbank. That's the creditor, Newbank. And the creditor's number is 317. All zeros. The amount canceled is $850. That's my 1099-C. And I know it's a taxpayer because the taxpayer name is on it. Any questions on the 1099-C? Okay, hit continue. There's my cancellation of debt, $850. Hit continue. Hit continue until I get back to hit continue again. And I'm back to my income list. I always want to get back to my income list. All right, next document. So, was there any other income that I needed to report?
Yeah, not income. I'm sorry.
Is there any other income that I needed to report?
Jury duty.
Jury duty. Yep. So I needed to report Faith received $280 in jury duty. Now I'm not going to get like a jury duty W-2 or whatever. That doesn't happen. So I received jury duty and I need to report it to the IRS. So again, jury duty is other income. So I will go all the way down to the bottom where it says other income. And I will go under the top one where it says other income not reported elsewhere. I will click on that and look for who had jury duty. Faith. Faith is the spouse. I gotta say the spouse had it. And what kind of other income? These are all these little different other things. Prizes and awards. So it's jury duty pay. Second one, jury duty pay. The amount of jury duty was $280 and it was not earned income. We good?
Yes.
Jury duty not being earned is crazy. Like I had myself up here, get my transportation to and from, sit through this just to not be selected. I mean, sometimes they are. For that price, it seems like she was selected to actually be.
I hear you. It's a legit argument, I would say, but it's not. Any other questions on this one? Any other question? All right, cool. Hey, continue. Continue. Hit continue one more time, and I'm back to my income list. Is there any other income that I need to put in that I may have missed? All right, so I don't see any other income. The next thing is tuition. This is an expense. So I don't have to put in any other income. So when that happens, on my left-hand side, when I'm done all my income, I can go down and click on deductions. And now I need to put in, if I have deductions, I need to put in deductions. So
Question.
deductions, yes.
I don't see your other income for jury duty on the left. Is there a reason why?
I don't know why it's not on there. I thought I put it in. Well, we'll revisit it. We'll see if it's not in there. I thought I put it in there, but maybe somehow I didn't. But we'll see.
It's not showing on mine either, but I put it in. So
it's not showing on yours either.
Right.
No.
And it sounds like is it showing on yours, Ann? Jury duty?
Yeah, it's on mine.
All right, so that's interesting. Let me just double check. Let me go back in here. It's there. I have it definitely see it there. Why it's not showing on that
So
side?
I checked earned income first because I thought when I was doing the exam, I Googled it or
Oh,
something.
it is.
and it said it was earned
It's there
income.
now. It's there
Oh,
now.
it's there now. Okay. So then
Other
I
income.
checked it, but it's still there.
No, that's weird. So it's there. I went out and I did it again, so that's weird. But it's there now. Other income. All right. So now that I'm done all of that, and what just now happened, that was probably a little glitch. And then you would say, wow, I don't see my jury duty. I could double check, clicked it, and now it's there. So you want to make sure everything goes in correctly. So that's a good catch. So hit deductions. If I have deductions, I'm going to start my deduction list. So in here is where I can put adjustments, educator expenses, student loan interest, IRA contributions, HSA, Standard deduction is given to us as a flat amount based off of our filing status, so we should never have to go into standard deduction. Itemized deductions would be if somebody is thinking about itemizing. Credits is for if somebody thinks they got tuition credits, dependent care, that's what goes in there. QBI will automatically calculate. That's based off of a business. And I guess compare deductions. I never really went in there, quite frankly. So the main ones would be adjustments, itemize, and credits. So this tuition statement would be something I would put in credit world. So I'm going to go underneath my credits and look for something for education. So let's look for an education credits right here. Click on education credit, and now I can put in my 1098-T. So the first thing they want to know was who's the student? It was Hope. Continue. Do I have a 1098-T form from 2024? I do, 2024. Yes. Does it say 2023? It does not. I'm gonna say no. It does say 2024, so I'm gonna say no for 2023 down here. You continue. Institution name is Clark Community College. Clark Community College. The address is 10 College Avenue. 10 College Ave. The zip code I can make up. I'm gonna just put in any zip code. The EIN number is here. 388 all zeros. You continue, and I got that in there. All right. So how much tuition was paid? $5,722. Put in 5,722. How much grants and scholarship? 3,202 down here in box 5. 3,202. Other qualified expenses. If I turn the page, I have a person that was in school and the campus bookstore charged the student for $1,500 for books. I cannot include the parking pass, but I can include $1,500 that I spent on books. So up here, underneath other qualified expenses, I'm going to put that $1,500 in books.
I have a question. Does jury duty count as earned income or unearned income?
Unearned.
Got it. Thank you.
Mm-hmm. All right, so are we good with the 1098-T? Tuition paid, the grants received, other qualified expenses are the books. That was on the next page.
Can I see how your page look like real quick?
Which one? This one?
Yeah, when once you click continue.
Oh, so I hit continue and it tells me that my qualified expenses are 4,020.
Okay, so because mine wasn't saying Hope's name, so I was like, wait a minute, but it's okay, it's good. Mine says that too.
Okay, cool. So I got my credit in there, and then I got some other questions. Has the American Opportunity Credit or the Hope Credit already been claimed for 4 prior tax returns? No, I'm only in my second year. Was the student enrolled at least half-time? Yes, they said they were going to school full-time. Did the student complete the first 4 years of higher education? No, they did not complete the first 4 years of higher education. Did the student have any felony drug conviction? They said no. This is all from the interview. Hit continue. And it's giving you your options. Lifetime would have given you $800. Lifetime American Opportunity would give you $2,500. They recommend that you give them the higher credit. And it's already picked for me, which is fine. And I'm gonna hit continue. Yes, Lisa.
I'm not having the same numbers as you are. Hold on. For federal nor the American Opportunity Tax Credit or the lifetime thing or state. So I need to find my mistake.
So for your education credit, did you put in did you answer all the questions right?
For the American Opportunity Credit, yeah. I did yes, I did no for
Hit
that.
continue. You put in all the college information with an EIN number.
Mm-hmm.
Hit continue. And the tuition amount says how much?
Does it have to be that exact, or I could just make up the EIN number after 800?
No, the EIN number is fine. If you don't, you can make up whatever you want. What about the next page? How much you got for tuition?
That exact same amount. That
Just
amount.
say it out loud. What you have for tuition paid?
5,722.
So what do you have for grants and scholarship?
3,202.
And what do you have for other qualified expenses?
1,500.
All right. And does this amount says 4,020?
Yes.
All right. Hit continue. And answer these questions. What did you say for the first answer?
No. Yes.
What do you say for the second answer?
No. Yeah.
The third one says no.
The third one, did she complete the first 4 years? No, because she only in her second year.
And did she get it? What about the last question?
Yes, no.
The last question.
No.
All right. So you got no, 1 yes, and 2 no's at the back end, correct?
Yes.
Okay. And so your numbers are what?
My numbers are 504 for the lifetime learning credit, 2,020 for the American Opportunity.
Okay, so you have something wrong somewhere else.
Income, something like that.
Yeah, so your AGI is probably not $78,000.
No, it's a little bit over that. It's an additional 16.
Yeah, so you have more money, which is probably limiting the amount of credits you can get.
Yeah, I'm
so you need to I don't know where you must have keyed in something wrong somewhere else.
Go back to each document, just make sure it's in there correctly.
So we're going to review this at the end. So you can do it when I review it. We'll do it together. All right. So what else I got to put in here? That was it. All right. So that's my deductions are in there. I don't have anything else to put in there. I am done putting in my federal section. My federal section, I had to put in income and deductions. Based off of this return, there's nothing else I need to put in. So I'm going to drop down to where it says health insurance.
Don't you have to put in education credits?
Oh, you know what? You're absolutely right.
Expenses.
You're absolutely right. So let's go back up to federal section. Thank you. Underneath deduction, what I missed is inside of the interview, she also said that he had $1,800 hours and spent $844 of classroom expenses. That qualifies him for educator expense. That would be an adjustment. So I'm going to my deductions. I'm going to click on my adjustments. And I'm going to go to where it says educator expenses for my classroom supplies. And this was to the taxpayer. Yep. And they put in, I'm limited to $300. Even though they paid $844, I'm limited to $300. Hit continue. Let's hit continue again. And I have in my adjustment for educator expenses here now. Thank you.
Can you please go through the steps again, God?
Yep. So I'm at deductions.
Right.
I go to adjustments because an educator expense is an adjustment. I'll go down to where it says educator expense, which is the second one. Click on it, and I put in the $300. And I'm getting this from my interview where they said they spent $844 of unreimbursed expenses. This guy. But the most you can put in is $300 because that's the IRS rule.
Okay, thank you.
All right, I'm hitting continue again. I'm back to deductions.
Okay, I was on my mistakes. It was the generated numbers. They was missing some numbers.
It's all good. You're finding your mistakes. That's part of the practice. All right, so we're good. Did you get your educator expenses in?
No.
Go to deductions. Go to adjustments. Go to educator expenses and put in your $300 for your taxpayer. Hit continue. Hit continue, and you're back to your list of deductions. All right, so from here, I'm done my federal section, and I'm gonna go down to my health insurance because I'm done everything in my federal section now. Hit health insurance, and it asks you, did you or your spouse or dependent have insurance under the Affordable Care Act? Meaning, did you have it like Obamacare, Affordable Care Act? Yes, $300 is how much you're gonna put. They did not have it under Affordable Care Act. All right. If they did, they would have got a 1095-A. So I'm just going to hit simply say no and be done with assurance. Now I'm at my state. So this is Pennsylvania. And the state is pretty straightforward for this one at least. And you just accept in the state as is. I will just share with you just a couple of things. If I were to, let me actually get out of here, because I think I went in there too fast. So when you're at your state, there's a little pencil here that you can edit your state, this little pencil here. If I click on this pencil, I get into my Pennsylvania return. I already put this in earlier. This is somebody that lives in Philadelphia. I'm gonna hit continue. And here's where you would make any adjustments you want for the state. So there's a couple of things that I would just point out. There is a credit, and it's a credit called Schedule SP, a tax forgiveness credit. In the past, we had to turn this thing on. And we would have to go here and say, yes, I want to get the tax forgiveness credit. And you would basically say what you are. So this person is, actually, that's all you had to do. You had to say yes, hit continue, and that's it. I need to just turn it on. So when I hit edit, it's on. Meaning let the computer do the calculation to determine if you get a special tax back forgiveness. It's based off of income and all this other factors. I can tell you this person is not going to get it, but I want you to get in the habit of when you go into your Pennsylvania return, you're going to hit edit underneath the credits, the special SP tax back forgiveness credit, hit edit, and the question is going to say no or yes. You click yes. Once you hit yes, you can hit continue and get out of here. It turns it on so it can do the calculation. For whatever reason, they don't always have it on.
Where is this located, the Pennsylvania return?
Underneath state section. We were in the states. Are you in the Pennsylvania return with me?
I was just fixing some stuff, but yeah, I see it now. Thank you.
Yep. It's underneath credits. Special tax back forgiveness. And that should say the answer would be, so if I were to delete this, I'll start all over. You're going to get a question that says no or yes. You're going to say yes, and that's it. And hit continue. And then it tells you that it's on. It's a glitch in the system. Did you have a question, Lisa, or was your hand just still up?
So I have your numbers now, everything, but now it's telling me something's wrong with my 1099-R. This is really annoying.
We'll get to it. This don't worry about until we haven't went over the return. We'll figure that part out.
Okay.
All right. Basic information. And the other thing that I would do, and just follow me with this one. You don't have to do anything. Just follow me. Adjustments to income. So this person put $844, and I'm doing this more for the video than for expecting you to do it right now. This person had $844 in their for classroom expenses. For federal purpose, the maximum amount that they can put is $300. But for the state, there is no limit. So what I could do is go underneath the state and give them adjustment for what's called unreimbursed employee expenses, which is those classroom supplies. So it's called a Pennsylvania Schedule UE. I can open up the Pennsylvania Schedule UE, and I can put in the expenses that they had. So this would be for Clear Creek School District, and it would be, I'm sorry, it's not the spouse. This is for the taxpayer work there. And then I can call it employee business expense deductions, and it would go underneath supplies. It was 844. And this would have been called classroom supplies. It's a little adjustment I can give on a state level. I only can do 300 on the federal level. I can do all of it on a state level. That's what I'm doing here. I'm putting those classroom supplies as an adjustment on my state return.
This only for PA, Desmond, or does New Jersey?
This is only for PA. New Jersey does not have this.
Okay, thank you.
What did you list under again? I'm sorry.
It's underneath your adjustments to income on your Pennsylvania return, underneath your Schedule UE. So that's that. Someone's asking a question about the credit card debt. That was something we put in as on the federal section under other income, the 1099-C. Solvent or insolvent is about saying I'm insolvent if my I had more liabilities than my asset. Most people that we're dealing with are going to probably be insolvent. I think they said in here that they were solvent. So solvent is insolvent and then solvent. Solvent is saying I have more assets than I have in liabilities. If I have more assets than liabilities, then I have to pay taxes on that canceled debt. If I was insolvent means I have more liabilities than my assets, and I don't have to report it. I may not have to report it. And if I have more, if somebody said they're insolvent, that's beyond the scope of VITA. They will have to go somewhere else to get their taxes done if they don't want to put that on their taxes. We only can do it if they're solvent, meaning they have more assets than liabilities. Answering the question for Cynthia. Yes, Lisa.
Can you go through what we supposed to for educator expenses now? I did the school district thing for that. Now is where there's asking you questions for the expenses. What answers did you put?
For educator expenses underneath Pennsylvania?
Yes, did your employer or law require that you obtain this education to retain?
I didn't put it underneath education. I put it underneath supplies.
Oh, you put underneath supplies. Okay, let me go back.
Because it's classroom supplies. It wasn't an education expense. It's called an educator expense, but it's an educator who has expenses. That's how you can look at it.
So miscellaneous expenses or what?
Supplies.
Okay, let me go back because
underneath Pennsylvania, let's look at my screen real quick. Underneath Pennsylvania, I went to adjustments. I hit edit. I went to Pennsylvania Schedule UE, edit. I choose the school. That was for the taxpayer. And I went under employee business expense deductions. I hit edit and I scroll down to where it says small tools and supplies.
Okay, that's what I'm confused about. Like, where did you go to
get tools? Yep. So just make sure you guys are following along with me. So I'm literally walking right through it. Just follow along with me. All right, so I'm out of here. I'm done with Pennsylvania. So once I'm done Pennsylvania, I can hit continue. And I'll get a copy of my 1040. So yeah, they're not filing state returns, which is fine. So I'm just gonna hit continue. The 1099-R, this does this whenever your 1099-R, your state, and I mean, when your taxable amount and your distribution amount is different, they're going to question it. And I'm okay with it because I did that purposefully. So I'm not worried about it. So now I have my 1040. So here, if everybody can get here, here's how we can check to make sure that we're all on the same page. Is everyone here? I would need everyone to get to this page, whether you have the right numbers or don't have the right numbers. This is where you can check your information.
Wait a minute, Desmond. I'm trying to get there. I had a question about the state, but I'll save it for later if I remember. All right, I'm there.
All right, we hear everybody here? Even if you don't have the same numbers as I do, just get here so we can do this together. All right, here's how it should look. And this is you checking your work. You should have Vincent Hunter. He's 60. Social Security number is in there. It doesn't have to be the exact number I have, but you got a number. Faith Hunter is 69. Have a Social Security number for Faith. 1234 Charity Ave, Philadelphia, PA 19122. Both of these boxes right here are checked for presidential election campaign. Does everybody have that?
Yes.
Filing status should be married, filing jointly. Does everybody have that? Anybody don't have that, say it now. Because what happens, you're going to say, I don't have something at the end. I'm trying to like go through it step by step so we can adjust it as we go through it. Does everyone have married, filing jointly?
Because I can't
All right.
out of these pages.
Say it again.
I said I don't have that because I can't even get out of this.
Where are you?
I put in what you told me to put in for the expenses, and now it's telling me PA schedule, UE pools information. Like, I don't care about all of this.
So did you hit continue?
Yeah, but it's saying Pennsylvania only allows the following adjustment for gross income.
So you must have put more information somewhere else that we wasn't supposed to put information.
Oh my gosh, that's just great.
So in here, you probably have information underneath this. You're only supposed to go into this edit. If you have edit listed anywhere else on your screen, you're in the wrong place. You should only go into your employee business expense, and the taxpayer should have a number up here. When I went in there, I put in a number, and that was it. Classroom supplies. I didn't put nothing nowhere else. Hit continue, and that was it. I think you were in the educator expenses, and you need to delete. You shouldn't have nothing in here. Or you might have been the schedule UE entry. I'm not sure if you went down here.
How do I delete it? Like, it's just still there.
I'm not sure how to delete it. I don't know, quite honestly. I would have to, this is something that works better when you're live, because I can come over to your computer and fix it. I'm not sure. I'm not sure. Try to hit the back and get out of it. That's the only thing I can think of. And then you can exit Pennsylvania return. But I gotta keep moving on for time purposes. So, but again, you can watch this video back. So here's your 2024, whoever, everybody else that has this, we can go back to the summary. We should have a dependent in there, Hope Hunter, Social Security number, daughter, and they got a checkbox about age 19. Your total income is $37,353. Your total wages, I should say, is $37,353. Your taxable amount of your retirement is $19,519. Your taxable amount of your Social Security is $20,314. Your additional income is $1,130. That would have been the cancellation of debt and your jury duty, giving you a total income of $78,316. Who, if someone has the screen up, do you have a different numbers than the 78,316 on line 9? This is where we can kind of fix any errors.
Yeah, I do, because my additional income is different.
Okay. How much is your additional income?
1050.
How much?
1050, 1050.
1,050.
Yeah.
So the addition. So if you go back over to your left-hand side, hit the federal section here.
Federal section, yes.
So where it says other income, click other income. Do you have something that says other income?
Right, yes.
Click on it. Does it say 280 for jury duty?
Where do you see 280? Oh, I have to go to jury duty, where other income again. Okay, got it.
No.
Oh, 200 I have. Okay, that's
Okay,
right.
because you keyed in the wrong number. So key in the right. Yep. Change that number to say 280.
Oof.
This is key in error. This is how we find it because we go through our tax return and do a review. All right. So once you do that, I think that $80 will bring you up to 1130 from 1050. You'll be fine.
Oh, thank you.
Yep. So go back to your summary sheet on your left hand side. If you went to summary print, you'll be back here. All right. So after that, we all should have a $300 adjustment on line 10. That was that educator expense. Does anyone not have the $300?
Well, for me on line 5B, I have, let me just check again. It's not the right number. It's like 19,406, something like that. But I'm trying to go back and see.
So just real quick, I'm going through each of these numbers. When you don't match, stop me so we can go and check it out. Because now I'm all the way down here when I thought we were good up here. So we're not good here. Just stop me and just say, hey, I don't have that number. So the 19,519, do this with me. Click on the 19,000, whatever you have.
Yep.
All right. So now you're back here. Click on your 1099-R where it says add edit. And what numbers do you have? Edit this number. Hit the little pencil. And underneath gross distribution, do you have 20,100?
Yep.
All right. And at the bottom, you have 15,009B, correct?
Yep.
All right. So click on where it says in the middle, it says click here to make changes, that little I.
Yep.
And you'll get a screen that looks like this.
Yep.
All right. Hit this little pencil.
Okay. Now it just adjusted everything for some reason. Like it just now popped up that I had the right amount now.
Okay, so now you have 19,519.
Yeah.
Okay, cool. So on your left-hand side, no, well, hit continue. Continue, you get out of here. And then on your left-hand side, go back to where it says summary and print, and you can get back to where we were.
Yep. Thank you.
All right, cool.
Appreciate
All right.
When you came to my question about the 200 and 280, you asked me to go to the left-hand side and click that other income. But also, just now you said you can just click on that number in the 1040 and it will take you to the portion, right? There are two ways to get into that particular screen.
Well,
right?
for some stuff, I can't click it for 1130. I couldn't do it for 1130. Yep. So yeah, so now our AGI should be 78,016. Anybody not have that AGI? All right. So now we got a standard deduction of 30,750. Everybody have that? And that's because we have older people, right? 69. So instead of them getting 29,200, it's 30,750. All right. So then my taxable income was 47,266. All right. Second page. We have a tax of 5,209. And I have a credit of $500 that's related to that child dependent care other credit because the kid is 17 and older. $1,500 is related to the American Opportunity Credit. So I got $2,000 of credits. I subtract that from my tax of 5,209, and now I owe the IRS 3,209. Does anybody have anything different? Okay, good. I owe the IRS 3,209. Now I want to know how much have I paid into the system. I paid in 3,200. I paid in 4,400 for on a 1099 that was related to Social Security as well as retirement. So I already paid in $7,600. In addition, I get $1,000 credit related to my American Opportunity Credit as a refundable portion. So in total payments, I paid them $8,600. They want $3,209 from me. They subtract out what I owe them and refund me the difference. So I got a refund of $5,391. Do we all have that? Anybody have anything different? Okay. All right. So from here, this is what Just Now did was like what's called a quality review. Whenever we're doing these taxes with these clients, there is a little due diligence that we should be looking at. And the due diligence is basically relying on a good faith effort, making sure the person isn't just lying to your face, right? People come in and they make up information, or sometimes people don't have backup and receipts. If they don't have backups and receipts, sometimes we can take the information from them and say, okay, I believe you. But if something just looks out of sort, and it looks unusual or questionable, you can tell your site manager and say, you know what, they're trying to claim a kid that's not their kid, or this doesn't make sense that they had certain amount of itemized deduction when their income was only but so high, right? If something just seems out of whack, how you have $10,000 of contributions when you only made $20,000, like if it just doesn't seem right, you should talk to the site director about it. Outside of that, we should be able to rely on good faith that people are giving us good information. In addition to that, we do a quality review. So there is a checklist that's in your book on page K15. And it tells you how to like walk through and verify the information, look at the intake sheet, look at all the forms that they gave us, check the name, address, and social security number. That's what I was doing here. I'm checking all of this information off of what I have in front of me. Make sure the filing status is correct. Make sure I determined the dependency right. Was all income on the 13614C indicated? I did that. That's what I checked my W-2s and my 1099-Rs and my Social Security. Remember that earlier, we did the shaded area. When you do a quality review, which all of you will be able to do, you want to have this checklist so you can check everything correctly. Check the adjustments. Someone, when I was going through it, they checked me and said, hey, you forgot an adjustment because I didn't put in the educator expense. You want to make sure you're checking the return in the interview to make sure nothing's being missed. And if I looked at the intake sheet, I would have seen that on the intake sheet, the person said that they had, where is it? They had educator expenses. So that's where I should have looked, right here, school supplies. And I would have noted that they did have that. So that would have been part of my quality review to make sure that I didn't miss nothing. So just making sure you use this as a guide, all credits that are correct, check the ACA, federal income tax withholding, direct deposit information, which is on the check. Make sure you're putting that information in right. Confirm the federal and state returns are correct. And if there's an SIDN number, which should be correct based off of your site, make sure that you're advising the taxpayer of their responsibility for if they owe money, if they get in a refund, they're responsible for this tax return that they're about to sign off on. So make sure you do the quality review every single time. Quality review is extremely important. All right, so after we do a quality review, I'll go through here and I need to e-file this tax return. Is this question for your state because there is no state ready yet. Same thing about 1099-R. But I wanted to show you how this works, and this is more for the video. The federal return is 5391. They said they want to do a direct deposit. Pennsylvania return, and look what they owe money. I'm just going to say a paper return for Pennsylvania. I'm going to hit continue, and I want to put in, I'm going to continue because there's no fees, the bank information. I really just want to show you guys how this works. Check-in account, and I have the information here. So I would come here and get the information of the check. The bank name is New Bank and Trust. So I'm going to put in New Bank and Trust. And the routing number is 1111. Actually, it's 3 1s, 3 zeros, 4 zeros, 2 5. 111 1 2 3 4 2 5, and a bank account number is 1 2 3 4 5 6 7 8 9. 1 2 3 4 5 6 7 8 9. 1 2 3 4 5 6 7 8 9. And what I can do here is pull the refund, and it pulls in how much this person was going to get as a refund, or I could have just typed it in. Make sure you're getting good numbers from them. This is extremely important. People don't want their refund going to the wrong account. Check the account number. Hopefully they give you a check. Sometimes they don't give you a check and they want to write it as additional comments on the intake sheet. Make sure they initial their names next to it, because if something goes to the wrong account, they're going to say you put the wrong number in. Make sure they initial next to what they wrote down. If not, they could give you another type of document that shows their routing number and account number, but we want to make sure that this is right. Let's not mess this up. Make sure if it's a checking, you say checking. If it's a savings, you say savings, because that can create issues as well. All right, hit continue. Here are some other ways of just verifying somebody. And you can say this person got a driver's license, and you can put in the driver's license information. I'm not going to do that for time purposes. I think because I clicked the button, I'm just gonna say not provided. I'm gonna hit continue. In certain states like New York, you are forced to put in a state driver's license. In Pennsylvania, you are not. So this is optional for some states. New York is not optional. You would have to put the driver's license information in. You have to accept the consent that your aggregate information may be used to say we serve X amount of people that had X amount of income that may have gotten X amount of refunds, but it's not your specific information being shared anywhere. It's just the totality of information, and you're agreeing to that consent. And you need to put in a PIN for that. So I'm just going to put in simple numbers and date it as of today. Hit continue. You're going to get a ton of questions. I'm not going to answer all of these, but you'll have a sheet in front of you with the corresponding answers to all of these questions. Put that in there. There is no custom credits when you're live. And then you come to the submission page. So when you get here, there will be instructions at your site that tells you how to print, where to print to. And in here have it'll tell you the name of the printer. Just follow the instruction of your site director. Whenever you are here, if this is your first go round, you've said, I'm finished the tax return and I am marking the tax return ready for review. That means somebody's going to come behind you and do a quality review, because as you know, everybody gets quality reviewed. And then the second time you come in here, you would, as a quality review person, after this quality review, then you would mark it as complete. And again, listen to your site instructor, because they'll tell you how they want you to do it, because you should not be e-filing as a volunteer. Only the site coordinator will send through the e-file unless they tell you different. So first time around, you mark it as review. The quality reviewer will come behind them, check it, and they will mark it as complete. And that's the full process of a tax return. Up here are tags for, let's say, I'm waiting for someone to sign. Usually there may be a tag, this is being ready for e-file, but there's could be whatever tags that they put in at the site. It could be incomplete or missing this or missing that, and you tag it until you're ready to actually submit it as a return. Okay. Any questions about just a tax return? We walked through a full tax return. Any questions about this? All right, hearing none, I'm going to save and exit this return. And you can do the same. And I want to do another one. I got kicked out, so I got to log back in. Some of you may have not got kicked out, but I did. And this is annoying, but it happens. I'm going to sign back in. Go back to my practice area. All right, and I'm going to do another return. Do you guys want to take a quick break? Hello?
I'm flexible.
All right.
For about 2 minutes. I gotta go back.
Let's do that. 5-minute break. No, I wasn't gonna do it alone. Let's take a quick 5-minute break. And we will get started at 3:10. Call it 6 minutes. We'll get started at 3:10. I'm gonna pause the recording. Just for your so you have this information, I want to make sure for the recording, this is the completed tax return. So you can compare that to what you have. That's page 1. And then page 2 would look like this. Or you're doing this more for the recording. And you can see schedule 1. Schedule 1 shows you what makes up those additional income. And the second part of schedule tells you what your adjustments might be. I think that's all you got there. This is 5, this is 6. There's really nothing else to really show. There is your $1,500 of education credit, but that's also showing up on 1040 page 2. All right, any questions on this problem? I think you should have enough information to answer your advanced scenario 7 test questions. Any questions? Any questions?
I'm sorry, I just stepped away for a moment. How do I get back to show my the work that I just did, the tax return?
Yep, no problem. So in your return, if you exit out,
yes,
underneath client search, hit select. Yep, and then you can put in Vincent, and you should be able to select it. And when you select it, it should take you back to that summary page, and it should look like this guy.
Okay, thank you.
Yep. If you have your 1040, you should be able to answer all of these questions based off of your 1040, plus a couple of tax knowledge things that we had in basic 1. All right, give you guys another minute and then we'll get started on the next scenario. Let's see which one we used. Okay. All right, let's get started on the next scenario. I'm gonna go through this one a little bit faster. It's 3:19. I have a little bit less than 2 hours with 2 more problems to go. So I want to make sure I can get through both of them. So I'm going to go just a little bit faster. We have Stephanie Winter. She's a paralegal. She's 26. She has some investments in broker statement. She also sounds like she's self-employed. So we're going to do a Schedule C with this one. Stephanie used the cash method of accounting. They're telling us information. So when we get to it, we can just key it in. So cash method accounting, business code 492,000. She also has some cash payments of 570, which means I'm not going to have a form for that. So I want to make a mental note to make sure I capture that 570 later, right? So there's 570 I want to add. Looks like she has records of her ordinary and necessary expenses, rental, some vehicle safety inspection, some fast eat fees, so she can write that off. She also has some other out-of-pocket expenses. She has $80 for tolls, $300 for speeding ticket, and $160 for lunches. You can never write off a ticket, anything illegal, and you can't write off lunches. You can't write off your own personal lunches. Now, if you went out to eat for entertainment purposes, you might can write off a portion of that meal, but you can't write off just your own personal lunch. So I'm crossing that out. And of the out-of-pocket expenses, she can include the $80 of tolls. Stephanie also recorded that she had 3,000 miles during and between deliveries, which is all deductible. So she can put $3,000, 3,000 miles of deductions. She also talks a little bit about her vehicle because they ask you what kind of vehicle you have, when did you place it in service. They want to know how many commuting miles and personal miles you have. That's what it's telling you there as well. And it's telling you the total miles as well. So we can put that in later. She is paying for a student loan. So she probably has some student loan interest. So we're going to put that in there as well. She's working towards her doctorate degree. So she sounds like she probably is still in school, but she's passed her 4 years. So she might be eligible for what's the lifetime credit. So we'll put some of that in there. And she also took an early distribution from her IRA. She used $2,400 of it as an education expense. So we want to make sure that she doesn't have to pay a penalty on a portion of the money she took out of her retirement. All right, so let's begin. I got a social security number. I have her intake sheet, just like to review it, make sure everything looks good. She wants to do a direct deposit. If she owes, she wants to mail it in. She wants to do the $3 thing, so I'm making note of that. They said she has a W-2, so let me look for that W-2. Yep, I see it. So I agree. She has one W-2. So I'm going to go in here and say I see one W-2. Cool. She has tip income. That tip income is not really from a W-2. This is from her business. So I would say to her, this is unrelated to your business. I might make her take that out and say, we're not going to do that. I'm going to just say business. That could have went somewhere else, but she didn't know no better. So she put it in there as tip income. I'm making a comment that this is related to her business. Retirement. She got a 1099-R for retirement. So I'm going to say, cool, I have one of those and I have one form. She has interest or dividends. Interest, this is the dividends and this is the interest right here. So I'm going to mark that off that I have that. So I'm going to say yes. And I have two forms. Check that off. Seller stocks and bonds, that's that 1099-B. That would be this stuff. So there's two here, one short term, one long term. So I will mark off that I have that as well. And I have two forms. And she says payment of contract from self-employment work. And I did see that. So she has the 1099 NEC. She also has a 1099K. And she also has cash. So what I would do is mark this off and say, I see this. Yes, you do. You got a 1099K. You got a 1099 NEC. And you got cash. And you got Schedule C expenses. I'm marking all that off. She says she has student loan interest at 1098E. 1098E is this document, 1098E. I'll go up there and mark that off. Mark that. Contribution to a retirement plan that was on our 40 or W-2. This is contribution to a retirement plan. I would mark that off as well. I'll say, where am I? IRA, cool, W-2. You or someone in your family took education expenses. It was her. She got a 1098T for that. I've seen that in here earlier. That's it right here, 1098T. I would mark that off that she had a 1098T. And what else? That's all she got. So I marked off all she had, confirmed that she had it. Make sure there's nothing else that I missed. There's nothing else. I checked off every box, every document. And I actually do that when I'm live. I like put like a little check mark at the top to confirm that I checked off what I seen they had. So you can see I got little checks on all of them. And this is for direct deposit. All right, so let's get this one started. I'm going to save and exit this guy. And I'm going to start a new return. And we're going to start Stephanie's. All right, Stephanie is 60500. So again, I'm going to go a little bit faster. I don't expect you to keep up with me, but this is being recorded. You can always watch it back, but I'm gonna put this in a little bit faster. All right, I'm just 6050001. Hit start return. All right, so what's this person filing status? They do not have any dependents. I don't think they were married, and they just said she's single. So she's single. I'm gonna click single, hit continue. And her name is Stephanie. And her last name is Winter. Her social security number came over. Her date of birth is 3/8/1998. 03/08/199/98. Her occupation is a paralegal. And taxpayer can be claimed as a defendant of someone else return. No. She's over 18 and a full-time student. She's not a full-time student, but she is over 18 and a student. I'm gonna check this box simply because I know if I do check it, when I go to my education amount credit, her name will show up. So I'm just gonna check it. I don't have to, but I'm gonna check it because I know she's a student. The $3 to the presidential election campaign fund. She said yes here. I'm gonna say yes there. And that's it. Put in our address, 160 University Drive. Make up a zip code. Make up some phone numbers. And that's it. Hit continue. I'm gonna say she lives in Philadelphia. Hit continue. There's no dependent, so I'm gonna skip past this. Say no. Hit continue. All right, now I'm at my income list. Let's start putting in income. So first thing they got is a 1099-R. I'm putting my 1099-R. And the 1099-R is, this is the TIN. 482 all zeros. New bank custodian. New bank custodian. The address is 300 Marin Street. Marin Street. The gross distribution is $5,000. The taxable amount is $5,000. The federal tax is $500. The code distribution is 1. The IRA SEP simple box is checked. And I'm gonna hit continue. So here it's asking me, someone took money out of their retirement. Did they take it out of their retirement plan, a qualified tuition plan, or a Roth distribution? 9 times out of 10, they took it out of retirement plan. So I'm gonna check this box. And then down here it says, if you have indicated that part of the distribution meet one of the exceptions to the penalty and you wish to exclude the qualifying part of your distribution from the penalty, be sure they enter the appropriate amount and reason on form 5329. So this is how you waive a penalty that you don't want the client to be taxed. It's on a form called a 5329. So I'm going to hit continue and get out of this. There wasn't no qualified disaster. Hit continue. And I'm going to look for the form called a 5329 and go to it. I'm going to this form because I want to make sure that they don't pay a penalty on a portion of the money that they took out of their retirement. That portion would be considered the $2,400 that she used to pay for educational expenses. So she took out $5,000, but used $2,400 of it for educational expenses. She does not have to pay a penalty on that amount. So in this 5329, I'm going to say early distributions that aren't subject to 10% is that $2,400. And the reason is going to be for higher education purposes. And what I just now did was waive the penalty on the $2,400. I will note about the domestic violence and the emergency expense. I use this more than one exception until they add it in here, which they have not yet still. I've been using the more than one exception for that type of situation. But for this person is higher education. Just wanted to point that out to you. All right, I will hit continue. I put that in there and I'm okay with it. And I go back to my income on my left-hand side and continue on what I was doing. But I needed to waive that penalty. So that's why I did that. The next thing is a W-2. So I'm gonna click on my W-2 and put in my EIN number, which is up here. My employer number, name, and address showed up. We won. That makes me happy. My wages is $40,700. My tax is $3,100. My Social Security is $41,700. So I got to change that. $41,700. My tax is $25,000. My Social Security tax is $25,854. $25,854. My Medicare is $41,700. My Medicare tax is $604.65. 604.65. These numbers match up. My 7, 8, 9, 10, 11 is blank. So I'm gonna drop down to my 12. Code D, number 1,000. Code D. The amount is 1,000. Box 14 is empty. Box 13, I have retirement plan check. So I did that. And I left box 14 empty. My state, I'm going to do Pennsylvania again. My state ID is 573 something. My state wage is 40,700. My state income tax is 800. Put in my W-2. My next form is a 1099 NEC. This is when I start my business. And I always start it from a 1099 NEC, not the 1099K, the 1099 NEC. So I will go to where it says 1099 NEC, hit begin, and now they want the information off the 1099 NEC. The payer's 10,634,000. The payer's name is Fast Eat. Put in Fast Eats. The address is 123 Lilac Ave. 123 Lilac Avenue. Make up a zip code. And the amount here is $1,000. Hit continue. And now they want to know, do you want to put this as a Schedule C business? How do you want to report this? Yes, I want to report this as a Schedule C business income. Once I hit that, it's now starting my business. So it says leave blank if you have no separate business name. She does not. Leave this field blank if you're using your Social Security number as your EIN number, which she is. So sometimes people may come in and they have a business, they got a business name, and they may have an EIN for their business name. If they have that, then this is done a little bit differently. You put in their business name and you put in the EIN. For Uber drivers, most of them are just doing it underneath their Social Security number, and you don't have to put anything in there. So you wouldn't have to put anything in there if there's a business. All right, so I'm going to leave these two blanks. The address is going to be the address of Stephanie. This is whose business this is. So I'm putting in Stephanie's address. And the zip code is whatever I want it to be. The business code they gave me is 492,000. Put in 492,000. Once I put in the business code, they tell me what kind of business this is. If they did not put in the business code, I have a whole list of stuff that I can choose from. And I can look for it. So I can say something like, I don't know, collection agency. And it tells me what the code is for a collection agency. I can say rental person, automotive equipment rental, leasing, general renting. So you just type in whatever you think it is. A taxi person, somebody does taxes, tax preparation services. You just key in what you want and it would drop it in there. I'm gonna hit this X to close it. But I know what it is, so I'm not worried about it. But if you don't, you can look for it. I hit continue, and now I'm filling out my Schedule C, where I can report all of my income and I can report all of my expenses. So the first thing I would do is report all of my income. So I'm clicking on income. My $1,000 is in there for my 1099 NEC. Here it says gross receipts or sales, including income earned or reported on a form 1099-K. All right, so here is where I'm going to put in my 1099-K. So here's my 1099-K. This is the amount, the gross amount. So what I would do is click on this little blue button. And my description is going to say 1099-K. And I could say 1099-K fast eats, just in case there's multiple 1099-Ks, but I'm just put fast eats. And the amount is $8,225. Hit continue. I don't think it likes the dash in there. Yep, took out the dash. Add another thing. I had tips. And how much was the tips? She received additional of $570, including tips. So she got $570 in tips. So what I put in was all of the income that she made. And I remind you, I didn't just type it in here. I didn't just type it in like I could have here. I linked it to this blue thing and itemized it out. But this is where I put, most of you are going to put your income on this line. After you put in your 1099 NEC, the other income, cash, 1099-K, tips, goes on that line. You do not really ever have to use other income, returns and allowances, or income reported as a statutory employee. Some of the stuff is out of scope. You want to be using this line. Any questions on that? This is where you put your income at. All right, I'm gonna hit continue. And all of my income is in there. The next thing I need to put in are my expenses. So I'm gonna start off with putting in my general expenses. Hit begin. And then they list all these different expenses you can have. So I'm going to go back to my my interview and put in the expenses that they said I had. So I have a $150 insulated box rental, $50 for vehicle safety inspection, $600 for fast eat fees. So I would probably call the fees $600, right? But again, I like to analyze it and like to itemize it, and I will call it fast eats fees, 600. What else do they have? $50 for a vehicle safety inspection. I might put that underneath licenses, maybe. So I might put that as vehicle safety inspection, $50. $150 for insulated box rental. I might put that as supplies. I can say Insulated box. And that was for how much? 150. So I'm just putting the stuff in, but I'm itemizing them out just in case I had more than one type of supply. I can refer back to what I was putting in. So then he had $80 for tolls while making delivery. So that's like an other expense. I could put that in as traveling if I wanted to. I could say underneath traveling, I can put tolls and put $80. Right? I could do that. Or, and I'm gonna take it out. I'm gonna delete the travel there. Or if I have everything else in here, I can hit continue and I can go down to other expenses and hit begin and say I had tolls of $80 if I wanted to do it this way as well. So I had other expenses and put my tolls there. Or if I had something else that I just like, man, there's really not a place that I see it, I can go underneath my other expenses and put it there. So most stuff hopefully you can put in your general expenses, but every once in a while you might find something you don't know where to put it. So I'm just going to put it as other expenses. So I put in my box rental, I put in my safety inspection, I put in my fast fees, I put in my $800. Some of these other ones are not expenses, so I'm not worried about it. So I'm crossing that out, crossing that out. And then I have a car, right? So let's deal with the car. So with the car, I can go underneath car and truck expenses. Begin that. And the type of car was an SUV. The date I paid it in service was March 15, 2020. So that'd be 3/15/2020. And the business miles was 3,000 miles. 3,000 miles. Commuting was 9,500. 9,500. And the other miles, I guess it's like 1,000 to get to the total of 12,500. So 9, 10, 11, 12. Actually, there is no other miles. That's your 12,500 right there. Check if you have another vehicle. I don't think they had another vehicle. Check if your vehicle is available for personal use during off-duty hours. It was. Got it. Support your deduction. If yes, was it in writing? Yes, because they had some type of log to tell me about the 3,000. So this is me putting in the card, telling them about the business miles, and I'll get basically 67 cents per business mile. So if you look over here, my federal, I owe 2,215. If I hit continue, that number should go down because I just increased the amount of expenses that I put in there. So now I should owe less. Let's see what that looks like. Of course, it's going to take a while now. There it is. So I owe a little bit less because now I increased the expenses. All right, so that's really all I got to do here with the Schedule C. I had to put in income, 1099K, cash income, tip income. My miscellaneous started all of this. Put in my general expenses, the stuff that I can identify, feel comfortable identifying. Other expenses will be stuff that I could not figure out where to go in general expenses, and then it's car and truck. Any questions on this for this client? Any questions?
Can you open up, go back to the Schedule C. Where did you put you put commission and fees at 600?
Yep, I put commission and fees at 600. Yep.
Office expense. Did you put anything in office expense?
I didn't. I put it underneath supplies. I put 150 as supplies. Is that where you put yours? It's fine. It doesn't hurt if you made it.
I know it is. I gotta put 150. I put the 80.
So the $80 I put as an other expense. Now the $80 you could have put it as travel. I just put it as other expenses. And then I did $50 for taxes.
Supplies was 150.
Yep.
And the taxes and stuff was 50.
Was $50. That was that inspection, they said. I get that also could have been other expenses.
Okay.
Any other question on this? We good?
Wait a minute.
We good? Any other questions on that or no? Just let me know. Yep. So fill up for income. I have the $1,000 was the 1099 NEC that I started. I remember I put in my 1099 NEC first. Once I put it in, it said, do you want to do a Schedule C or do you want to do a Schedule F for farm? I said Schedule C. Then the first thing I went to was income, and then I put the blue button and I put in 1099K money, and I put in the tip money. That was in the interview. And that would have been all for income. General expenses, I put those expenses in. I added the tolls to other expenses. And then the car was the last thing I did. The main thing is putting in 3,000 for business miles. If you didn't put the commute in, it doesn't hurt. And that's your Schedule C. That's how you do a Schedule C business. It's really not that hard, actually. If you start with the 1099 NEC, you're kind of home free after that. All right. So let's go down here. I put in my 1099K. So I got some other income. So let's go put some other stuff in here. I may continue. Continue. I'm going to get back to my income list. So now I also have 1099 dividend. Look for my 1099 interest and dividends right here. I'm going to click on that. Interest or dividends. And I got a dividend statement. Hit continue. And this is XYZ investment. The payer 10 is over here. 402 all zeros. The address is here. 456 Pima Street. Make up a zip code. And box 1 is 300. Put 300. Box 2 is 225. Put 225. Box 3 is 350. 350. And then I drop down to box 5 is section 199A, which is this guy at $32. Capital gains that are inside of a 1099 DIV are long-term capital gains, just so you know. When you see ordinary and qualified, this is not $525. This is saying that of the 300, tax 225 of it at a different amount, at a qualified amount, while the other $75 will be taxed at a higher amount. So this is saying of the 300, tax 225 at a qualified amount, at a discounted amount, basically, is at the capital gains rate, while the other 75 is going to be taxed at your ordinary income. This is long-term capital gains on your 1099 dividends. DIV. Yes, Joseph. People will definitely be at your site to help you out. You'll have experienced volunteer as well as your site director, for sure. I will tell you, this is actually not hard. It just looks hard because you just never done it. I would encourage you to maybe rewatch the video, because you can fast forward and just come right to this one and practice it. This is more about practice. It's actually not hard. It's just new, is what it is. You just haven't done this yet.
Desmond.
Yes.
Did you put in this line 5 the 199A dividends for $32?
Yep, I sure did. Yep, put that underneath in line 5, right down here. And be careful and make sure you don't put it in as federal or investment expenses.
Right.
What happens a lot.
Okay.
So that was that. I'm going to add another one because I want to put in interest. My next document is interest. This interest document, 1099 INT. I'm going to add interest, 1099 INT, hit continue. This is the same payer, XYZ investment. And same EIN number. Same address. And zip code, I'm just making it up. And interest is in this box, $150, and that's it. Make sure you're in the right box, and I'm done. This is the interest. We continue, and I have my interest in there of $50, and I have my dividends in there of $300. The last thing I need to put in is my proceeds from a broker statement, and that goes on a 1099-B. I'm going to continue and go back to my income list and look for the 1099-B, which would be, is actually a Schedule D for gains and losses. So you wouldn't actually find something that says 1099-B, but anytime you get something that's about capital gains and losses, which is what the 1099-B reports, is like broker exchange, and it talks about stocks and bonds, that goes on a Schedule D Form 8949.
Desmond, if we did the form finder search for Schedule B, would it bring us to this location?
Let's try it. I don't think so. I just put in 1099-B. It did not bring you here. Oh, wait a minute. What was that down there? Let me see. 1099. I don't see nothing for 1099-B. Well, look, wait, there is a proceeds. Let me see what this does. Okay. There is a 10. Yeah, let's see. Let's see. It brings me here. I'm okay with it. I begin here, and I can start putting it in. I'm okay with that. Yep.
Good. I didn't know if that's just one more thing I needed to remember.
No, that's actually perfect. I thank you for bringing it up. I can put in 1099. I think that's what I just put, 1099-B.
Uh-huh.
There you go. Broker statement. I love it.
Thank you.
There you go. Thank you. Thank you for asking. All right. Description of this property is going to be the asset. That's Nebraska. I'm just going to do Nebraska for time purposes. The date that I acquired date, 01/01/2024. The date that I sold it would be the date that I sold it. 02/29/2024. The sale price I sold it. I'm sorry. Oops. Let me just clear this up so it's not as confusing. The sale price proceeds is $2,000. Cost basis, 1099-B cost basis reported to the IRS. Sure, it says cost, which basis is reported to the IRS. Reported to the IRS. That's where I got that from. This one is reported. This one down here is not reported. So it is reported to the IRS. So I say reported to the IRS. And the cost is this guy. My cost is $1,750. 1750. So it's really not hard. You just got to know where to put the information. Just follow the steps. Description, the name of the stock. When did I acquire? The date I acquired, it's on here. The date acquired. The date sold. The sale price, that's the proceeds. The cost, $1,750. Was it reported or not? It all depends on what it will tell you whether it was reported or not. So this one is in there. I got to do another one because I got to do this one down here. And I'll hit save and enter another. This one is called Iowa. Iowa. Acquired 10/12/2008. Sold 10/31/2024. Sell price 3,100. Cost basis is not reported. Cost basis is not reported. Not reported. And then our cost is 4,000. Took a little loss on this one. Okay, continue. And this is another screen where you can double check your numbers. Acquire date, sold date, sell amount. Acquire date, sold date. Acquire date, sold date, sell amount. 10, 31, and then 1/1/2/29/2000. 1/1. So I keyed this in wrong. So this is 120. Double check your work. 120/2/29 in 2000 and 1750. 3,100, 4,000, 3,100, 4,000, 1031. Hey, looks good. Always check your work. All right, next page, I have student loan interest, which means I am done putting in income. So I can go to my next section underneath deductions. Student loan interest, as we talked about before, is an adjustment. And I go down to my student loan interest, which is towards the bottom. And they said I have $3,750 as student loan interest, but the most that I can do is $2,500. I will put in $3,750 for kicks, but let's see if the computer stops it at $2,500. I'm going to go back to my deduction page. And now I got to put in my tuition. I have a credit related to my education credits. And it's Stephanie. She got one for 2024, not for 2023. The institution name is Mercury College. 10 College Avenue. And employer EIN number is this number. Tuition paid is $2,400. There were no other expenses. So with that, they look at this and say, has the American Opportunity Credit or former Hope Credit already been claimed? I'm going to say yes, because this person is a lawyer. Was a student enrolled at least half-time for at least one academic period? It's really not relevant at this point because I already said yes to the first one. So it really doesn't matter how I answer the rest of them. Did the student complete the first 4 year of higher education before 2024? They did. Did the student have any felony drug conviction? They said no. So based off of this, you can't get American Opportunity Credit because the answer was yes to already having it. So they do give them a lifetime learning credit for 480. That makes sense to me. All right. And I have been all my deductions. And I'm done this tax return. So I'm going to hit continue. And I want to go to my health insurance. This person also did not have Affordable Care Act, so I'm going to say no there. And then it hits me to my state tax return. This is Pennsylvania. Just to show you again, I edit. I'll go to credits. Let's see, credits. Special tax back forgiveness credit. And I turn it on and say yes. And then I'm done. Hit continue, hit back, back. exit Pennsylvania Reserve. I just want to turn that on because for whatever reason, it's not on. I did not give any adjustments on the state this time because they didn't pay any educator expenses, so I didn't have to do that. Hit continue, and now I'm in the tax return. There's no state return valid errors. All right. So if you haven't been paying attention, this is a good time to pay attention. This is the 1040 Stephanie Winter, who's a single individual, and she has no dependents. She does have $40,000 of wages. She has $50 of taxable interest, $300 of ordinary dividends, of which $225 qualifies to be taxed at a lower rate. She had $5,000 of IRA distribution, and she had a $300 loss related to her capital gains, which means she has also $6,000 in additional income. That additional income is related to her business. She has $6,000 she made from her business. And inside of the software, if you wanted to get a look at what somebody made for their Schedule C, there's a shortcut right here. If somebody wanted to kind of break that down, I can go back to where it says income. I can go down to the Schedule C, and what I can do is print the Schedule C by itself. And now I can see the Schedule C and go through it with the client if I needed to. I don't have to print the whole tax return. But this is that money they made, which was the K1, the 1099 NEC, the tips. This is from the car and truck. I put in, it was 67 cents times 3,000. This is the commission and fees. This is the supplies, the taxes, and at $80 that they paid for tolls is there. The expenses total $28.90, and what was left over was $69.05. You can see that here's the car expenses, and that's the toll underneath other expenses. So that's how you can, if you want to look at your somebody's Schedule C, a quick way. Going back to my 1040, that $69.05 was the business. So my total income was $52,665. From there, I'll show you in a second, Joseph. From there, I got the Schedule 1, which is the adjustments. So I'm gonna go to my adjustments, and my adjustments is 488, which is whenever somebody is self-employed, they got to pay self-employed taxes. Half of that is a deduction, so that's what you see here is half of that, plus $2,500 of student loan interest. Remember, I put in $3,750. The computer was smart enough to limit it to $2,500, which is really good. Going back to line 1, after I take out all my adjustments, I have an adjusted gross income of $49,667. Subtract out my standard deduction of being single. Subtract out my qualified business income deduction that I get because I have a business. I have $15,889 of total deductions, which leaves me with $33,778 of taxable income. Remember, I made $52,000. By the time I got rid of my adjustments and my deductions, I am left with $33,000. The tax on $33,778 is $3,797. So from here, I'm going to say, well, I want to see if I can reduce this $3,797. Well, remember, I did get a little lifetime credit of $480. So that reduces the $3,797 by $480, and I'm left with $33,017. Then I got hit with another tax, which is related to self-employment tax. I also had to pay a penalty on the IRA distribution that I took out that was not for education. So remember, I took out $5,000. Well, $2,400 of it, I don't have to pay a penalty on it, but $2,600 of it I do, which means I'm gonna have to pay a penalty of $260 plus a penalty plus the self-employment tax. So if I were to look on page 5, is it? Yeah, page 5, this here, 976 is my self-employment tax. And then 260 is the 10% on the $2,600 I said is going to be left over on the retirement. They took out 5,000, 2,400 of it was waived because it was for tuition. The other 2,600, I have to pay a 10% tax. That's what the 260 for. So 260 plus 976 equals what that number was showing. And I'm gonna go back to my 1040 page 2. All right, so that's what made up that 1236. So if I add the 1236 to what I owe the IRS, I now owe them a total of $4,553. From there, I'm trying to subtract out what I paid. I paid $3,100 on my W-2, $500 on my retirement. So I paid into the system $3,600. With that, if I paid in the system $3,600, I did not pay enough. I paid in $3,600. The IRS wants $4,553 from me. I underpaid, which means now I owe money. And I owe them $953. That's what that is showing. So a couple folks had some questions. They wanted to know where Schedule D is. So Schedule D is part of your federal section. I don't think you can look at your Schedule D. Let's see here. Let's see if they let you see your Schedule D. Here it is. Schedule D, I could actually hit print. And this shows you my Schedule D. This is my Schedule D. It's showing that I had $2,000 proceed, cost $1,750. My gain was $250. What you're looking at is the information from here. That was the 2,000. That was a 750. My gain was 250. This is all related to a short-term gain. If I scroll down, now I'm looking at long-term gain and losses. So $3,100. This is this one here, $3,100 and 4,000. I had a loss of 900 plus the gain that I told you earlier on my dividends is always considered a long-term gain. So here I show it as a long-term gain. So while I lost $900 long-term, I had a capital gain of $350, which makes my total long-term negative $550. Because I had to increase it with the qualified dividends gains that I reported. This is from my 1099-B, plus what was on my 1099 dividends. This is what's left over as a capital gain loss. I'm sorry, it's a capital long-term loss on my taxes. A capital long-term loss. While up here, I had a capital short-term gain. Any questions on that? All right. So then going back to my summary and print. So I kind of did what all I needed to do. I owe them money. And then this is a conversation like, hey, you owe $953. There's a couple of things I would suggest. They have a business. They might want to make estimated payments and make payments throughout the year. So up here, they could have made $953 of estimated payments. They could go to their employer and have an extra, I don't know, $75 come out of each one of their checks. That would make up the $953 that they owed here. They took out money out their retirement, and it was about $260 a fee in here. So if they don't do that next year, they can at least save $260 that they had to pay in a waiver penalty So there's a couple of things they can do: change their W-4, make estimated payments. Just make sure you file your taxes on time and pay as soon as you can. So from here, I would hit continue. Continue. And finish this tax return. For time purposes, I'm not going to go all the way through, but they want to probably, what did they say? If they owed money, which they do, they said if they owe money, they want to mail the payment to the IRS. So in here, I would say e-file, they're going to mail it. That actually makes this easy. Hit can continue. If Pennsylvania, they probably want to send in a paper as well. Actually, yeah, they're sending the paper return. They're going to probably, yeah, that's probably what they're going to wind up doing. Because they're not going to write them a check. All right, and that's it. So you didn't go to the end, consent everything. Make this today's date. These questions will be asked from a piece of paper. Come in here, you're done, and you want to say ready for review. Save and exit, and somebody will come behind you and review it. All right, I'm going to go back into that one and just go over the review questions. All right, who was this? Stephanie? All right, so let's think about this Stephanie one. What is not a business expense? We did this together. We talked about that earlier, what were not business expenses, and we crossed it out. If you're doing something illegal, that's not a business expense. And you can never deduct your meal, but you just bought for yourself. All right. How to calculate the standard mileage deduction. The simplest way is know how much the standard mileage deduction is for that year. For 2024 is 67 cents. So if you know the mileage deduction is 67 cents, you take the 67 cents and you multiply it by the amount of deductible miles that she had. You multiply it by the amount of deductible miles that she had. And that will get you how much the standard mileage would give them. What is net long-term capital gains? We talked about that earlier. Net long-term, if I'm looking at my Schedule D, I can show you this again. We did that a little bit earlier. Long-term is down here. This is my long-term is on this section. So I have something related to my loss of Stellar stock, something related to my dividends. Up here is short-term, and I only had that amount in short-term. So just pay attention to that piece. What is the net short-term? I just talked about that. What credits are they eligible for? So they do not have any dependents. So they had to make, I think when we're looking at that, they had to make less than $18,000. They made $50,000. So they definitely won't be getting no EIC. Lifetime learning credit, that will be for someone who is taking like a one-off job to improve their job skills. If you think about what this person was doing, they went to school. And what did it say? She was working towards her doctorate degree to start a new career as a lawyer. So she's basically starting all over, and she wants to take a whole new class. She's not in her first 4 years of college, but she's starting another thing at a qualified institution. So that's fine. What kind of credit would she get for that? It's not her first 4 years. She's trying to get her Juris Doctor degree. This is way beyond the first 4 years. And what else? And basically, can she get American Opportunity Credit or can she get lifetime? What is the additional 10% tax on early withdrawal penalty? Remember, she took money out of her retirement, $5,000. We waived the penalty on 2,400 of it. So she's still going to have to pay 10% tax on the remaining 2,600. And like I talked about earlier, how do you tax plan for owing people? I can make estimated payments. I can change my W-4. There's ways you can just strategically not owe the IRS. There's a calculator on the IRS website to change my withholding. So there's lots of different ways to do that. All right, with that review, you should be able to answer these questions. I will give you 5 minutes to answer these questions. My guess is that you were going along with me, so you should be able to put some of these in there. You should be able to answer these questions based off of the review we just had. All right. Any questions about any of this? Any questions about any of this?
Desmond.
Yes.
On the mileage.
Mm-hmm.
On the not actually question 26, but just the mileage. I got the calculation, but why is it only, it's not subtracting down here where it says she had 9,500 miles were personal. Do you,
right,
you don't subtract that off of this 12,500?
So you could. So what they're basically saying is this person drove 12,500. 9,500 was personal, 3,000 was business. That's your 12,500.
But she can only get this 3,000.
Because that was actual business miles.
Okay.
So this is when she was going in between for deliveries. This is she just was driving around for personal stuff. Yeah. Can't deduct none of that.
Oh no. Okay.
Yeah.
Thank you.
Mm-hmm. Any other questions?
I have a kind of silly question pertaining to this. So when the Uber, Lyft, and they come with this, like, for their expenses, is it our job to tally up all of, or do they need to come with that already outlined?
I personally say you better go in your back office and pull that out, because they do it for you. I don't do no math for no Uber driver, right? Like, okay, yeah, in your back office there should be that list that tells you what your fees were and how much miles you drove. It's to their benefit to bring that in, because I'm not guessing and trying to figure it out for you. I'll say look in your back office in your Uber app and pull out that summary sheet. I forget what it's called, but yeah, there's like a summary sheet. Yeah. And some people say, "Oh, I can't find it." I'm like, "Well, you might want to find it because it's going to help you out."
Yeah, I had them come with like sandwich bags filled with the receipts, and I'm like, "Oh my God!"
No, let's not do that. And I mean, I would say, so they bring the sandwich bag because they probably are tracking their gas, right? Mm-hmm. They say, "Oh, I spent this much money buying gas," but you can't do gas and do mileage, and we don't do gas at Vita. we only do mileage. So give me the sheet that tells me how many miles you drove, and I'll give you 67 cents per mile. I'm not going to be able to write off those actual expenses anyway, because we don't do that at VITA. You can't get both. And more than likely, the mileage is better because the gas, we got to first determine, okay, here's all your gas receipts. Well, how much of that gas you got did you use for personal? And that just becomes a whole other thing. And I'm still going to know your mileage to determine how much it was personal and how much of it was business.
Okay, thank you.
Mm-hmm.
Will the clients be sitting in front of you when you're preparing the taxes?
It depends. I'll allow some of the veterans here if they want to answer that question, but I would say usually they're sitting with you, but I know there's times where people may grab their folder, get it started, and then tell them to come back. So if anybody wanted to give more insight, please.
Yeah, they can drop off. We have the drop system where they drop off. They have to have everything that's needed to prepare the taxes. So they don't have to sit there and wait all day to be waited on. Or they can stay and sit. You know, we want them to sit with us so they can see everything we're doing. They have questions, we can answer the questions right there instead of having to call them on the phone, ask a question, they forgot something. So it's two options to either stay or you can drop off.
Yeah, as a new volunteer, like I don't want to get them to get an impression that doesn't know anything what she's doing, you know. I don't want
No, I think for new folks, they purposefully give you guys folders and tell you to get started, and then they bring folks back. So it depends on what site you're at, but I think they strategically try not to make it as stressful, and so you can come in and do it at your own pace.
Yes, thank you.
And you should start off with like some easy ones, and you're gonna like give me some harder ones after a while because you're gonna be tired of just the W-2s one. So you'll start off slow and you know ramp up a little bit.
And then they'll sit there with a mentor. I know our site does that. We have a person to sit there with you to guide you through a couple of them until you feel comfortable.
Right.
Desmond, we didn't touch on amended returns. Last tax season, I got a lot of those. I really wasn't
sure. So I will say that is not part of my training at all. I will make note of that. I'm pretty sure the site director should get some amendment training. If not, are you a site director?
Last year I didn't do advanced because I did the class like at the very last moment. So I missed advanced. So I was giving it to her, but she was saying that and it was just me and her at the site. She was saying, well, if I was advanced, I would be responsible for doing those. But there were a lot of amendments that came in.
That's interesting. So, I mean, I can just show you on the screen. I don't know. Do I have access to do an amendment? Never mind. I don't even have access to do an amendment. Are you a site director?
No.
No. Definitely lean on your site director to help you out with doing an amendment or showing you how to do an amendment. It's not been something part of my. I'm making notes of things that happen in this class. I'm gonna see if adding an amendment process would be helpful. I do a special topics class for site directors, and I'm gonna talk about it, but you're not gonna be there because you're not a site director. So no, I will make sure I point out to say this is something that volunteers are not aware of. Make sure when it's around that time for amendment, you're talking to your volunteers and showing them how to do it. So I will reinforce that message.
Great, thank you.
Yeah, thanks for asking. I appreciate that. Any other questions? We got one more to do. This one is super easy. The biggest thing is the health insurance stuff, but everybody good with the information here? I was able to put in your answers. All right, last one. I'll just throw this one in here real quick. Actually, I'm just gonna pull this one up for time purposes. This is not hard. And I'll just walk through it. If I put it in. I thought I put it in. Oh, Joe. Here it is. So I'm gonna select Joe here. And I'm going to start. I'm going to show the whole thing, but I'm not going to just key it all in. So you'll have it for your recording. So the filing status for Joe was qualified surviving spouse. His spouse died in 2023, so be mindful of that. Right, his spouse died in 2023, and he still has a dependent. So I put in, his basic information, where he lived. He wanted to do the $3 thing. I put in his address, email, yada yada. He did have a kid, so the kid information was in there. This is that Schedule A thing. That's because I did this already. Let me just say no real quick. This is Philadelphia. Hit continue. There was a dependent on this one. Just grab the dependent from the bottom of the intake sheet. You see the dependent, Josie Lopez. So I grabbed that, their date of birth, U.S. citizen, daughter, 12. Really wasn't nothing like magical about this. I just put it in the dependent. All right. Hit continue. Got the dependent in there. And then when it came to income, there wasn't a lot going on. He really just had wages. So if I go to my wages, I put in the wages. Clearly, just like I see it on the form, I did have a little bit difference, right? Because I had that. So this is a little bit different than the 42,000. So make sure you pay attention and put in the right amounts. Make sure you put in that D with the $1,500 of the amount of retirement. The retirement plan over here was checked, so I checked it. And Pennsylvania, state wages 600. So just put the information in exactly how I seen it. Same thing, they had interest, so I came out, I did this, put this in there. And I went to the interest, which is 1099 INT. Added the interest. I went into this one is New Bank Trust. Put that in here. EIN number is given to you here. The other thing I did was put in this $28 of early withdrawal penalty. That's probably the most important part of this one. Don't put that in as taxes. A lot of people mistakenly put that in as a tax. It's an early withdrawal penalty. So the interest income was 140, early withdrawal penalty of 28. Pay attention where you're putting it in. Some people drop down and put it down here. It doesn't go there.
I have a question.
Sure.
If the spouse died and you can file as a married joint filing jointly, then it's it won't ask for a death date, right? So it is as if you submit the spouse's W-2, whatever he had, as if he's filing along with you, right? Though he's dead.
Yeah, so this was the year that they died. So if it was the year that they died, I would just call it married filing jointly and put both of their information on here. And the other person may have had a W-2 before they died, or they may have not.
Okay.
Because they could have died 12/31/2024, right? They could have died at the end of the year, but they worked all year, right? And you still could have a W-2 for that person. Or they could have died January 2nd and didn't work at all that year and don't have a W-2 that year.
You still do.
You still do married filing jointly that first year. The second and third year, you do qualified surviving spouse. It's for 2 years after the client, the spouse died. All right, so after I put in my wages and I put in my interest, the biggest thing on this return is the health insurance. So this is the first time underneath health insurance, instead of saying no, I'm saying yes. I got a form called a 1095A. This is what's funky about this one. I got a 1095A And this is what a 1095A looks like. When I got a 1095A, I have to say, yes, I got insurance through the marketplace. So I'm going to say yes, hit continue. This is the people that are in my household. And this defaults to none of the above. Are you required to repay it? This defaults to no. And do all forms of 1095A include coverage from January through December? Meaning, is there numbers between January and December, which there is, January through December, January through December, January through December. The question is, on all forms 1095A include coverage from January through December with no changes in the monthly amounts. They're all the same number. They're all the same number. There's no changes in the monthly amounts. If that's the case, you can use the annual totals. So what I did was saying yes, and I used the annual totals. The annual totals. Now, if I would have said no, I'll get a spreadsheet and I need to fill in every month. I need to do it month by month, because something didn't match up or it wasn't all year. So if I had this and let's say January was missing, then I would have to come in here and put February all the way down to December. If January by itself was missing, only way to do this is if all of them were filled in and have the exact same amounts to say yes to that question. And then I can do these bottom numbers. So I'm going to put those numbers back in here.
So if January to March is missing, then
you key in everything you see, April, May. So you would say the answer to this question would be no. And then I will key in everything I see from April on down. 300, 250, whatever the numbers I see. And I would keep doing that going down. You know what I mean?
Yeah. So will somebody be questioned why there's no insurance from January to March?
Nope, that's not relevant. It's more or less, if it is like that, we need to fill it out properly. Because they could have had a job the first 3 years of the year and they were getting it from their employer.
Exactly. That's what I was thinking. Yeah.
Yep. So I'm going to say yes, and I'm going to go 5352. I'm going to go 7224, and I'm going to go 4656. Hit continue. And then they ask about the AGI for your dependents. The kid didn't have any AGI, and I'm just going to hit continue. We're putting this information if we select yes for a question on health insurance. No, so yes, the 1095A, if I see I got a 1095A, I'm saying yes to that I got insurance. Let me just back up. The health insurance asks a question, did you or your spouse or dependent have health insurance under the Affordable Care Act? When I see 1095A, that answer, I'm going to say yes. This is unrelated to the yes I was just now talking about. Once I get into the problem, there's another question that says, do all forms on the 1095A include coverage from January through December with no change in monthly amounts? That's two separate questions. Now they're asking about the coverage. Are all these numbers the same for each month? If it is, I can say yes and put in the totals down here. If one of these lines were blank, I would have to say no and key in everything else that I see. Does that help? Cool. All right. No problem. So I'm done my health insurance. There's a state thing, but before I do the state, there's another thing on here I want to make sure you understand is daycare. this person had a kid and they paid some daycare costs. So for daycare, I just want to make sure you know how it works. Underneath deductions, I will go to credits, underneath deductions, underneath the federal section, deductions, I will go to credits. Underneath credits would be child care. So here's the child and dependent care credit. I can add that. And in here, they're going to ask me a question about the child and dependent care. So I would have to put in the EIN number of the business or the social security number if it's a person, put in the EIN number. The provider name is Southside Daycare. The address is 303 Twiggs Trail. That's a tongue twister. Twiggs Trail. Make up a zip code. And that's really it. I don't have to put in a provider number, but I could, but only people that live in certain states have to. So it isn't going to hurt to put it in there. Hit continue. And then it will say, well, who did you pay it for? It was for Josie. And how much did I pay Josie? I paid $7,200 for Josie. And I'm going to put in the $7,200. And that's it. All right. They're going to ask question around, did you receive any benefits on your W-2? I'll show you what they're talking about on your W-2. Every once in a while, people get their dependent care benefits through their employer, meaning that they can't take it on their taxes. So let's say that this amount totaled $7,200. They already got the benefit through their employer. So I would come in here and say, did you receive any dependent care benefits from your employer? I would say yes, and I would put in the amount that was paid. Well, I would just say yes, because you do not include the amount from the W-2. The system is smart enough to know, okay, you put in that you got some dependent care benefits, and I'm just quantifying, saying if there was something that was not reported on a W-2, this is when I would use it. So more than likely, in real world, you should not have to check this because it's very rare that you will have, I think it's very rare that you will get benefits from your employer that they did not report here. It should all be here. I think this is for if for whatever reason, this is blank and they made a mistake and you call the employer and say, hey, my box 10 isn't filled in, then you would do this. But I think this is going to be extremely, extremely rare. So I'm just going to ignore it. Go down here, hit continue. I'm sorry, I'm just going to say no. So disabled or full-time student, I'm going to say nobody was disabled or full-time student. If you were a full-time student, you may be able to still get it. Delayed care payments. This is out of scope, but this happens if you have FSA and maybe you didn't use all the money in the same year and it kind of moved over to the next year. That's what this is about, and this is rare as well. So this should be no, no, no. Should be the answer here. And that's the expense that was paid. And if you wanted to look at the form, this is the 2441. It says $7,200 was paid to Southside Daycare. Josie was the one who received it, the benefit. Of the $7,200, I only can get a benefit up to $3,000 per qualifying child, maximum $6,000. So if I had 2 kids, I can go up to $6,000, but I only have 1, so I only can get the maximum of $3,000. And then they say of that $3,000, depending on your income, is what percent of that $3,000 you can get as a credit. So this person made about $42,000. So they would fall in here. So 21% of 3,000 is 630. That's the credit that they would get. You don't have to do this math. You need to be able to put in the $7,200 and say what child care was paid and who was it paid for. The system will do the rest of the math. But I'm trying to help you understand the why. The credit is what it is, because it's 21% of the $3,000 that's allowed per child. Even though he paid $7,200, the maximum amount allowed would have been is $3,000. So somebody could say, man, I paid all this money. And you say, you know what? After you went over 3,000, it didn't matter to the IRS. So they can get a better understanding of paying more doesn't get you a larger child care. And if you make over 43,000, the least amount is 20%. So some people that are paying child care and they make a small amount of money, they're getting a higher percent of that child care back as a credit too. All right. So that's that. So let me explain something else to you. So this is real quick. Joe Lopez, 200 Skyway, Philadelphia, Pennsylvania, has a dependent. He made $42,000. We knew that. That was from the wages, $140 of interest. Total $42,140. Subtract out my adjustment. What's that adjustment for? Remember, they had that $28 related to the early withdrawal. Remember the early withdrawal? That would be here. The penalty on the early withdrawal savings is that $28. That's an adjustment. I can reduce my income by it. So I reduce my income by 28, and I'm left with $42,112. I got a standard deduction of $29,200 because I'm head of household. I'm sorry, because I'm a qualified surviving spouse, which is the same as a married filing joint person. So I get a higher standard deduction. Now I'm left with $12,912. The tax on $12,912 is $1,293. From there, I can subtract out any credits that I have. Well, I got a credit of $663 related to a child tax credit, and I got a credit of $630 related to dependent care. So just to make sure you understand, whenever you get a credit, they usually take the non-refundables first, then they do the refundable. So what they did here is, because I have a child under 17, I would have got a $2,000 credit, right? So what they do is saying, it looks like you got some other credits. I got a $630 credit related to my dependent care. $1,293 minus $630 leaves me with $663 left. So what it's going to do is say, I'm going to give you $663 of your child tax credit, and I'm going to give you the rest of it as a refund down here. That's the other part of that $2,000. $1,337 plus $663 equals $2,000. When I gave him the $663 up here, I wiped away all of my tax liability. So I gave the rest of it as a kickback, as a refund. That's called your additional child tax credit. This number can never be more than $1,700.
Now for the child tax credit on line 19, it is $1,293. Oh no, what is it?
That's not the child tax credit, that's the tax.
Yeah, that's the tax. Okay. He's only getting $663. Okay.
She's only getting $663 a child tax credit, and then getting a kickback of the other part of the $2,000 as an additional child tax credit, because you couldn't use it up here. It was used up. There is nothing else of credits I can use up here because I'm at zero. I had $1,293 in credits. So they said, you know what? We'll just give it to you as a refund then. Because credits reduce your tax liability. I didn't use it up. I ain't got no more. Well, we'll give it to you as a credit. Does that make sense to everybody? The maximum amount, though, is $1,700. I cannot ever exceed $1,700. That's the most that I can get in additional child tax credit is $1,700. In addition, they got some EIC. So they got $1,112 of EIC based off of their income and having a dependent. They also paid in $1,700 of taxes. So they're going to get that back as well. And here's something I want you to pay attention to. They get another credit for $696. Why do they get a credit for $696? I'm going to tell you why. Because their health insurance, and it's on here, it is 630. That's education. No, that's not here. Here it is, 696. Their health insurance, this is called amount of net premium tax credit. The 696 should be on line 9. I was trying to get it to get on there. I don't think I can. Yeah, I'm messing it up. Yeah, I can't. So the 696 should be on line 9. It's called a net premium tax credit. I want to explain to you why they got this credit. Because of the health insurance, they receive $46.56 in credits for health insurance. That $46.56 in credits pays for this $5,352 of premiums. This is your premiums. This is the credit to help pay for those premiums. Now, these credits are determined by your income. If I went to go do if I went to go get insurance, I probably went in there and said, at the end of the year, I'm going to probably make $50,000. I'm going to make 50K is what I told the health insurance marketplace person when I filled out my health insurance. I'm going to make $50,000. They said, okay, if you're going to make $50,000 and you have a kid, you need to get a credit of $4,656 to help pay for your health insurance. You're like, cool, thank you. Well, at the end of the year, I didn't make $50,000. I made $42,000. Because I made less than what I said I was going to make, the marketplace insurance is saying, oh, wow. Well, if you told me you were going to make less, I would have gave you more credits. Well, since the year is up and I can't give it to you on your premiums to reduce your premiums, I'll give it to you as a credit on your taxes. Here's the extra money that I did not give you throughout the year to help pay for your premiums because I didn't know that your income was not going to equal what you told me it was going to be when you filled out the form. Here's that credit. So this is what a net premium tax credit is. It's getting you caught up for if you were to misspoke or miscalculate what your income's going to be and it becomes in lower than what you thought. Now, it can go the other way where let's say you said you're going to make $50,000 and you come in and you make, let's say you make $70,000. And it was like, oh, you made a lot more money than what you said you were going to do. So that is called an excess advance premium tax repayment. That means you got too much money and I need you to repay me the amount of money that you got too much of. That's the other side of the coin, which is not pretty. So if you ever see someone to get an excess advance premium tax credit, that usually shows up on your 1040. I'll show you just in case you ever see it. It usually shows up on line 17 as an extra tax. And that's for someone who has health insurance and they understated their income. And it's usually dramatically. They're going to have to pay that tax, pay it back. This person did good. They overstated their income when they went to get insurance and had less when they actually did their taxes. So this is good for them, and it all worked out. Any questions on that? I just want you to understand what a net premium tax credit is. So they're getting a nice little refund, 48, 45. I would hit continue.
Now, in the part 3 of the health insurance, there are 3 columns with 3 different numbers, 446, 602, and 388. So what was paid by the client?
The client would have paid the difference of these two numbers. So 446 minus 388. Every month they would have paid that amount. So what would have happened is they would have, a bill would have gotten produced for $446, 446. The government would have paid the insurance company directly $388, and then the client is owed $58. So they'll pay $58 a month. That's the difference between 446 and 388.
What is a 602 then?
So this is called I think it's called the silver level. It's basically just saying this is another average plan that some people get. And they're just giving you a sense of what the pricing could be based off of your demographic. But I gave you a better premium. This is the best that I can give you. This is kind of like average. It's just showing that I gave you a better pricing is what the health insurance is showing the user. I give you a better pricing than what a silver, whatever, I think it's called silver. I'm sorry, I can't remember. It's like silver level. I'm sorry, second lowest cost silver plan is what SLCSP stands for. It's this part, it helps you understand what your premium tax credit will get. It really has no relevance on the math. It's something that helps determine how much credit you should be getting.
So the $4,656 is what the government paid. Hmm?
The 388 is what the government pays. The 446.
No,
the 446. The 446 is what the health insurance company receives.
No, what I'm saying is the total of 4,656 is what the government paid, right?
Yep. But this is how much it was owed. 4,646 is what the government paid. And mind you, this is done monthly. So each month, this client is paying $58 towards their health insurance premiums.
And I'm wondering how that 696 came about. That's what I'm trying to.
Oh, so the 690, it's a math thing. I would have to go take a deeper dive. So what would happen was these numbers would probably all go up like, I don't know, whatever the math is, $30, something like that. So take 696 divided by 12. It's 58. No, is that right? What was it? How much was the premium tax credit?
696, it said, right?
Yeah, 696 divided by 12. It's like almost $58. So basically they're saying that they would have not had to pay anything. They would have covered all of this. Because that's the difference, $58. So they're saying we would have given you enough money to pay for all of this throughout the year.
Got it.
That's what they're saying.
Okay.
All right, so that's it. So I mean, I would, finish this out. They get a refund. Again, e-file direct deposit, and the state, they probably wouldn't even owe, but I'm just gonna do, I'm sorry, e-file direct deposit, the state, I'm gonna just call it a paper return. And then we hit continue, come in here. You go, I think they did what did they say they wanted to do? They wanted to mail a check. There you go. So I ain't even got to do that. So let's go back to the details, and they want to actually have a check, which is rare, but that's what they said. And that's pretty easy. Consent. Accept. Put in the 5-digit number. Today's date. Bam. Continue. They're going to answer. You're going to answer all those questions. Come to the submission page and say mark tax return ready for review, and you're good to go. All right, so let's go back and talk about. Let's review this, and we can wrap up today's class. Ooh. Ooh. All right, so let's talk about this and we can wrap this up. The review questions. What is this person filing status? Anybody?
Qualifying surviving spouse.
Good. How much is that deduction for the qualified surviving spouse?
Yeah, that right in front of my face.
Anybody?
20, if it's under 65, 29,200.
That's correct. What credit are they eligible for? Do they get the EIC?
Yes.
Yes. Do they get a child tax credit?
Yes.
Yes. Do they get a other dependent credit?
No.
No. Do they get a dependent care credit?
Yes.
Yes. Do they get a net premium tax credit?
Yes.
Yeah.
Yes. Do they get a retirement savings credit?
I don't know.
No. I don't
That's a
think
good answer to just say, I don't know.
I
Let's
don't
see.
think they get it.
But
Retirement
there
savings credit, if they
Oh.
got it, would be on line 4.
Right. So no.
So
Yeah.
retirement savings credit is a credit that some people can get, but it's based off the income, and the income is pretty low. What adjustments are they eligible for? They got an adjustment.
Whatever
Which
that
adjustments did they get?
Is it $28?
Yep. What was that for?
Oh Lord, I forgot that quick.
It's okay.
Interest? Wait.
No, you're close.
Early withdrawal penalty.
Early withdrawal penalty. Thank you. All right. So what is their AG? What is their AGI? One second. What is their AGI?
42, 112.
112.
Oh,
Cloud
so
nine
what was the
112.
question?
And on his W-2, he has the retirement plan checked out, and he has the D1,500. Does that count for anything or no?
Nope. They don't get the retirement savings credit only because it's based off of income. But if they did, you would definitely need to put that information in for it to calculate. But they don't get it because they didn't make enough money. I think I don't remember the threshold. I would have to look it up, but they didn't make enough money. So if I went to my 4012, I could probably tell you what it would be. What is called a savers credit. I think it's retirement. Let me just do it this way. What is that credit called? It is a non-refundable credit, and it is, here it is. They would have to make less than $38,000. He made what?
40 something.
40 something. Actually, he's head of household, so his threshold would have been actually 57,000 if head of household.
No, he's QS. He's
QSS, so he would get, interesting. I think he stuck with 38,000 because he's QSS, which seems wrong. But that's what's happening. You would think they would give him he's better off being head of household in that aspect, right? But I think he's stuck with 38,250 at QSS. I think that's a glitch in the IRS system. They should probably make him get the 76.5, but it is what it is. I think they're treating him with the 38,250 because he's not filing specifically as head of household or married filing jointly.
But in the deductions, it does say married filing jointly and qualifying surviving spouse, doesn't it?
Not on this one. It says if married filing jointly.
Oh, okay.
Now, where will I see on in the 1040 or any schedule the retirement saving contribution credit mentioned Is it in
So it's on your 4012 page G17, but it's also thank you, Joseph. That's fine. It's also on your Schedule 3.
Schedule 3, okay.
Schedule 3, question 4. Actually, question 4, which would be this one here. And that's all I got. It's 5 o'clock. We just made it. You should be able to answer all of these questions. I kind of went through all of them during our review. I think you should be good with answering all these questions. That's all I got for you. Make sure you enter your answers in the link and learn and get certified. Please, 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 quality review. Be a quality reviewer. We need more of them so we can stop the bottleneck. Here's a survey for me. I can put the link inside. You can use your phone and take a picture of it, but I can also put the link inside of the chat to make it easier for those who don't want to use your phone. Give me a second, I'll grab it.
Desmond, you're always a good trainer.
Thank you.
I'm a trainer.
I try. This is, I will tell you, virtual is tough. It's hard, especially, it's hard to like, let me pause, but it's hard to kind of like, be like